All right. Good morning. I'll be with you in a sec. All right. So we got a little bounce there on these numbers this morning. CPI showing inflation's not increasing at the moment. Actual was 2.4%, forecast was 2.5%. Last time was 2.7%. Many people are saying that the inflation rate is actually lower than what government numbers are saying. I'm just repeating what I've seen and heard. Anyway, like I said, this weekend I went to buy a couple of dozen eggs, and I noticed that some of the organic eggs were $13.99. So they're back up to the highs. I'm not sure if that was because of the cold or what, but I'll check again because I need to buy eggs again this weekend. I mean, just one example. Milk has been hovering around organic milk around 6.99, 6.50 a gallon. So yeah, inflation, housing costs. I do know that rents, maybe yours hasn't gone down, but rents have been cooling a bit, maybe going down in some areas. Buying a house still makes sense to me, but I have a 3% mortgage. So anyway, we got 5 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 13th. Okay. Um, so I'm in a risk off stance below 6,900. As you know, yesterday we talked about 6,900. The thing that concerns me, well, several things that concern me. We have, congratulations, Steven. That's good to know, man. Good to know. Good news in a sea of bad news. Okay, so let's look at junk bonds. All right. So you know that I follow junk bonds. Now, this could be nothing, it could be something. You have to pay attention. Over here in September, we started to crack. We dropped below the 21 day, and then we cascaded down to the 50 day, lost the 50 day, and then dropped off some more. The 200 day is rolling upward. We also have the US dollar, Japanese yen. We have the US dollar, Japanese yen fading again. So US dollar dipped a bit. There's a lot of different ideas behind the US dollar right now. What this means. Uh, Continuing along, though, the Dow Industrials pull back from the high. It was just Monday, Tuesday that this looks really good. Would continue to make new highs. Russell, this was the first thing that cracked. Russell shorted the IDU, the diamonds, I believe on Monday or Tuesday. I think it was Monday. So that was a concern. Industrials, we want to pay attention. It's only 30 stocks, but still want to pay attention. The industrials, we want to look at the components. Apple was off quite a bit. That bounced this morning. Apple. Okay, the components. Apple obviously lower. We got 2 minutes to go. Amazon lower. American Express lower. Boeing inside day. Caterpillar at the highs. Looks like that could pull back in. What's Caterpillar doing at the moment? So the industrials. Caterpillar still at the highs. So the industrials showing cracks as well, right? Okay. One minute to go. Okay. We got about 30 seconds to go. 30 seconds. First 15 minutes, all I'm doing is taking profits off the table, reassessing the markets after 9:45. We're looking for. We really need to see the S&P perform a bit better. Okay. Watching at the moment. Okay, we're open. Okay. So keep an eye on hedge flows here. I am taking less risk at the moment. We are risk off below 6,900. You can see 6,900 is at the top of the screen. I will watch for 0-day to start to fill in. Okay, we'll watch for 0-day positions to fill in. Right now, I'm not doing anything. Is there anything I want to take off? Microsoft is moving a bit higher. I did add some Microsoft yesterday. I also added some Tesla. That was up briefly. Okay. HSAI coming off the low. HSAI. Okay, maybe that does something today. Robotics. Okay. S&P 500. Okay, this is the line in the sand last night. Yesterday evening, we need to get it back above. that low. Okay, NASDAQ 100. We got a few more stocks green at the moment. Maybe we'll get something going today. Again, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 13th, as Frano reminded me this morning. Morning to all of you. Up-down volume is 1 to 1. Currently, SPY is 1 to 1 down. The Qs are 2.5 down, 2.6 down, 2.7 down. All right, we're getting a little bit more selling. A little erratic the first 15, 20 minutes. Taking care of imbalances in the morning, pre-market action. IWM 2 to 1 up volume. New York Stock Exchange 1.3. New York Stock Exchange showed us a caution signal yesterday. So you want to pay attention to the New York Stock Exchange. Okay. So we're bouncing. We're bouncing at the moment. S&P 500 dropped below the 50-day. We did indicate that there's a possibility that we're in a stay in this range. Okay, the range that we've been banging out for the last few days, really the last few weeks. We're in the lower half of this range with the potential to break down. That would bring us back 7% if we head for the 200-day moving average. Right now, I'm not doing a whole lot. I want to see some performance here. I want to see the bulls step up and bid. Yesterday was pretty ugly in a lot of respects. If you were cautious, if you've been taking profits over the last couple of weeks, as we suggested, as I was doing, you have less risk on, so you can sleep a little bit better at night. Okay, Robinhood. Let's see what Robinhood's doing. There's a couple of you that are still in this credit spread. Robinhood. Okay. I would put in a bid like $1.20 on those Robinhood credit spreads. You'll basically be a wash. Maybe you get filled sometime today if we get a bounce in Robinhood. If Robinhood starts to take off to the upside, you can always roll your bid lower. Bid $1.20, $1.20, $1.15. That way you make a few dollars. Coffee's good, so that's a good sign. All right, again, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 13th. Next week, we have a holiday shortened week. We are off on Monday. Okay, watching Hood, S&P. Okay, this first 15 minutes, all I'm doing is watching what's going on here, taking some profits off if warranted. Sitting on my hands because it does look like we could drift lower. That lower channel line right there, the bottom of this range, is not too far away. And the New York FANG, all the New York FANG stocks are showing weakness at the moment. Okay, so we got a doji down here at the low. RSI is below 50. We've had 6 distribution days above average volume. Actually 7, but if you count Wednesday. Wednesday was a little bit above. Then Thursday, yesterday was pretty pronounced. Okay, S&P, New York FANG components. New York FANG. Okay, this needs to rectify itself. We need to bounce. This is another risk-off signal. That's impacting the S&P equal weight index, of course, S&P equal weight. S&P equal weight was making new highs. Okay, so we're trying to hold on to new highs. Thursday, we popped up, made a new high, came back 30 minutes later, 60 minutes later, after 10:30. 10:30, we came back and we're already starting to deteriorate. So we're above the 921.50 and 200-day. They are all stacked up and to the right. So it could be nothing. Markets could just be signaling, a little bit of risk off. but puts are bid down below, which means that we have some issues that we need to resolve. Okay, if you read the update this morning, gamma's negative both above and below current SPY price, S&P prices of 68.15. That strike is not big enough to hold up the market. Should S&P break below 6,800, we probably headed towards 6,600. So 6,600. If we lose 6,800, that's down here. Okay, we noted that yesterday. That's a line in the sand that we don't want to lose, 6,800. That's the bottom of this range right here on the right. Bottom of this range, 6,800. Looks like we're going to move a bit lower. I did buy some 650, 640 put spreads yesterday that expire out in December. I'll just hold on to those. Those are mainly for midterm elections. I realized they were way at the end of the year, but they were cheaper. They were cheap, I should say. They weren't cheaper. Give the markets a little bit of time to tell us if it's going to continue trending. It's already losing the lows here. Okay. Okay, hedge flows. Hedge flows are flat to slightly lower at the moment. Okay, if we get a bounce, it's clear sailing to 6,900. That violent mean reversion path is one of the market has taken so many times in the recent weeks. 6 times. Yesterday made the 6th time we hit the 50-day, moved below it, and then reversed back up markedly. This might be different, so I'm assuming it's different this time. There is a potential to run right back up, so we got to keep an eye on the markets and see how they behave. We're off on Monday, so would hate to see the markets close on the low, especially below 6,800. So prepare your psyche, okay? If you're one of those people who couldn't sleep last night, it's usually because you have too much risk on. So cut your risk. That's a simple way to relieve. You don't need to start putting good money after bad. Right now, you need to be patient. Let's keep an eye on the market. Let's see. The New York Fangs look terrible right now. So the components look terrible. Apple's down again. Microsoft's down. Nvidia's down. Tesla pulled back. Amazon, Google, Meta. Only Snowflake rising a bit right now. So people are most likely panicking. We do have the fear indicator is, I'm not even sure where it is right now. It's in extreme fear, though. I know that. I don't know what the level is. Let me see if it's here. Fear gauge. I don't see it, but the last time I looked at it, we were in the fear range, most likely in extreme fear range right now. S&P continues to move lower. Okay, the time to buy hedges is when VIX is at lows. VIX is starting to move higher. Okay, so VIX yesterday was 17. It's already up to 2150. If you bought the 20, 30 call verticals for March, or you have the 20 March, I'd hold on to them for a little bit longer. Okay, VIX looks pretty good. So if you're buying puts, maybe consider put flies, long put flies. Okay, those would be less expensive, ensure some downside. Maybe you want to take SPXU for a ride. SPXU. Okay. SPXU. Maybe you want to take this for a ride, or maybe SPXS. This is only if you're looking for hedges. Okay. You can short a lot of these names like NVIDIA using what is it? Is it NVD? I think NVD is short, right? NVD. NVD short. Yeah, this is short, 2 times short NVIDIA. I mean, those are the types of things you can do, right? It's only $7. All right, NVIDIA is dropping pretty hard, so they're selling this pretty hard. That's not good. That's not good. Okay, NVIDIA. All right, so NVIDIA is most likely going to come back and revisit the 200-day. That's what I would assume. Okay, so taking NVD as a short, I wouldn't do it at the low of the day, but look for a bounce. If it can't get back above the 50-day by the close, maybe you take some NVD if you have NVIDIA positions. Okay, there are also alternatives. Kimberly-Clark. Okay, that continues to trend. These defensive sector names like Kimberly-Clark, everybody needs toilet paper. Colgate, Palmolive, everybody needs toothpaste, right? You don't want stinky breath. You want good breath. Speaking of breath, let's see what that looks like. Okay, so survey says neutral to bearish at the moment, okay? Short term, neutral to bearish intraday. We could very well bounce, okay? I'm not doing anything at the moment. I don't want to throw good money after bad. We've been taking profits off the table for the last couple of weeks into strength, despite the fact that junk bonds were holding up fairly well. Okay, junk bonds were holding up fairly well above the 50-day. This is good. This is a good start. Okay, I learned this trick a long time ago, about 30 years ago, maybe 35 years ago, actually. A friend of mine worked in the city. He's a bond trader. He was a associate or an intern at the time, right out of college. So he was learning bonds, the bond market. He told me a long time ago, keep an eye on junk bonds. A lot of times this will tell you risk on, risk off. We already know that we're risk off. We're below 6,900, so that was a risk off level for S&P. Bonds, if this starts to move higher today, all right, we're already starting to bounce S&P. Already starting to show a hammer. All right, starting to show a hammer right now. Okay, so back to bonds. All right, so junk bonds, if this starts to move higher, I don't anticipate it, given we had a Monday off. But if we start to see any kind of price action like over on the left, where we dropped in September into October, you know, if we plunge lower and we close below the 50-day today, yesterday it started out pretty much the same way. We had a decent look to the markets. Watch, the S&P is bouncing. S&P is bouncing here. Okay. You can try some lottos, 6,900 lottos, perhaps. Yeah, 6,900 lottos, maybe. Let's see. Trade. Let me just fill in my active trader windows. Puts and calls. S&P. Yeah, what if we get a big bounce here, Benny? Yeah, what if? What if we get a big bounce? We've seen this before. This is the 6th time we've dropped below or tested the 50-day since what, October last year, September, October. So if we get any kind of bounce, wow, Thinkorswim is really slow today. I don't want March. I want 0-day. 0-day. S&P. All right, we're starting to bounce. So these are all catching a bid now. 6,900 is resistance. HYMC, BEG, ASTX, JZXN, MSTX, CGTL halted down. CIFU. Okay. CRWG, IRE, CNBS, IREX, MSTP, MTBA, HIMC. All right, we're starting to bounce now. Let's keep an eye on the S&P. Okay, S&P. We tapped 6,800 and reversed. Okay, hedge flows need to start cruising higher. Hedge flows, that purple line needs to start rising and trending. This is 0-day, non-0 day. Not a whole lot going on here. Net OI. Okay, GEX. This is non-zero day right here. Okay, we want to see this continue. I really don't like the way this market is working. You get a big sell-off, people freak out, they sell everything, or they sell a lot. The markets turn around the next day, it rips right back to the upside. It tortures people, especially if you have too much risk on. This is an opportunity. Any bounces back towards 6,900 is an opportunity to reduce your risk. Good morning. Good morning. All right, so we got a nice reversal here. 6,900 lottos are only $4. 6,900 lottos are only $4. If we get a big reversal here, very possible we get a big reversal, just so you know. Now, we've seen this before. This is like the 6th time we dropped below. The 50-day, the blue line overhead on the right. Okay, that's the 50-day, 21-day, 50 days about to cross. If we get any kind of similar price action like this over here a week ago, we ran right back up. That was what, Monday? No, that was a Friday, right? Yeah, that was a Friday. Do we do it again? MLEC may res in 10 seconds. WULX. IMUX. Okay, so this range for now looks like it's being tested again, that range low. We came down to 6,800, tapped that level, turn right back up. Right now we're stalling at this level here from yesterday. That was yesterday's low. Okay, yesterday's low right there. And then we went right down through it after the last hour or so into the close. Okay, so we're testing that right now. Shorts covering. Assume that's just shorts covering off the low right now. Okay, let's while we're waiting on the S&P 500, let's look at a few stocks that are populating the NASDAQ 100. Applied Materials gapping up. Okay, so not everything is dire. I do note that this is being sold, though. They sold the high. So, you know, earnings, yeah, what you would expect. Profit taking. People are nervous. Dexcom, number 2. Big reversal. Bullish engulfing candle on Dexcom. DXCM. That's number 2 on the NASDAQ 100. BNB, Airbnb, big bounce. MSTR, still diddling with the lows here. Let me just pull up Bitcoin, my Bitcoin chart. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 13th, about 21 minutes into the trading day. Looking for some relief from the drop yesterday. Okay, Bitcoin is up a bit. So I like something cheap like BITX. BITX, if this does start to get moving, it's two times Bitcoin strategy, BITX. Again, to be clear, I'm not taking on a lot of risk right now. I would like to see a big reversal in the S&P. I'd like to see us get back above 6,900, or at least test it. At least test the S&P 6,900 that we lost yesterday. Below 6,900, we're staying risk off, okay? So that means I'm taking less risk. Okay. Chevron. What's Chevron doing? Oil and gas names. Okay, Chevron's at yesterday's low. Trading at yesterday's low, Chevron. Airbnb, VRTX, another VRTX, another from the NASDAQ 100, pushing a bit higher. Keurig, Dr. Pepper, these consumer staple stocks, that one's above the 200-day. Walmart, looking for a follow-through, and Walmart inside day. Costco, looking for that to break out. Costco is breaking out. Okay, Costco showing signs of a breakout. Costco showing signs. Okay, Costco showing signs of a breakout. Good morning. MSTR, you're asking me about MSTR. Okay, it has an average true range of $11. MSTR, ATR. Plus or minus 11 points there. Okay. All right, Apple's still in the doghouse. Apple. Continuing on the list, Palo Alto Networks. That's number 6 on the NASDAQ 100. That's coming off the low. Palo Alto. Worth a look. Palo Alto Networks. It is in a downtrend. The most I would expect is maybe the 21-day, 50-day in the short term. CrowdStrike. All right, so this is good to see 2 of them up. CrowdStrike as well. CrowdStrike, same thing. Lam Research, LRCX. The chips got beat up yesterday, starting to bounce. That would be helpful to see the chips rising. Continuing on the list, NASDAQ 100, Lulu. More controversy with see-through leggings. You know, I find it really interesting because if you've ever watched any of these YouTube videos, ladies, you know who I'm talking about. They wear these skin-tight, skin-colored pants as well, and they just like other, older women that maybe not in as good a shape. They're like turning around, making faces, and of course, I hate to say it, guys like it, but it's kind of lewd, and to say that because there's some see-through potential and some of the darker colors, I guess. Uh, yeah, it's kind of yeah, I'm not gonna say anything else. Anyway, Lulu's off the low. It's basing. Lulu, SNPS. Nobody cares what I think about Lulu. Synopsis trying to break higher. Okay, ODFL, Old Dominion Freight bouncing. We had some of the shippers also doing well. Scorpio Tankers, TNK, both of these are on the watch list this week. They continue higher. Okay, for the week, Okay, these are up almost 4% for the week. STNG up almost 4% on the week. So these two are from the watch list. STNG. Let's go take a look at the watch list actually. And we'll come back to the NASDAQ 100. Okay, looks like the bulls and the bears are fighting with price action right now. Okay, watch list, watch list. Okay, Apple, AAOI, both of these got whacked. Apple still looks like it's going to go lower. Apple. Boeing, looking a little better. We sold put credits on Boeing. If you go to the website, you can see the current state there. Okay, just go to positions right here and click over here. All right, so that's the current credit spreads. Okay, Robinhood, Boeing. Okay, so we're looking for that to move a bit higher. Boeing. Boeing, we need to stay above 225. That seems very doable. 225 is below the 50-day. It all depends on the markets. The markets start to melt down, I'll reduce my risk a bit. Robinhood, you know, one thing I will say about Robinhood, okay, let's take a look at a couple of things. Number one, maybe not number one for you, but number one, you know, what are the earnings? What did Robinhood report? Are they making money? Are they making money or not? Okay, so Robinhood reported in line. Last time they were at like, I think this was like 60% earnings growth. Now it's 22%. So not growing as fast. However, they have added some potential revenue streams with prediction markets. Okay, so the revenue wasn't really surprising, and earnings came in at the estimate, right? But they're making money. Reported revenue of 1.28 billion. Estimate was 1.32. Reported earnings of 66 cents. The earnings estimate was 63 to 66. So not bad, not bad. So Robinhood was trading at $150, $150. Okay, that was back in October, right? Where is it right now? I mean, yeah, I mean, this is like a pretty decent haircut, more than 50%. That said, the reason I took these put credits on Robinhood is I felt this would hold, but I don't like the way the markets are acting right now. So this needs to hold. If this starts to hold and move in the other direction, I'll put those back on. As I told you yesterday, I took those put credits off. I didn't like the way the market started to move into Wednesday's candle, and then we started to accelerate. I was able to get out with just a small loss. All right. So that's Robinhood. Hopefully, Robinhood can hold this level. Back to the watch list. We left off with, what was it, Caterpillar? Caterpillar at the highs. Campbell's Soup, looking for a follow through. Consumer staple stocks are holding a bid. Energy, we got Chevron from the watch list. Dycom pulling back a little bit. Diamondback Energy holding up. FedEx still flagging. JP Morgan, okay, back down to this multiple low. Okay, so JP Morgan, I would think, probably holds in this area. Okay, that's the low. Recent low. And several different pivot lows in this area. Okay, so that's JP Morgan. Lockheed Martin trying to break out. LMT is trying to break out. LMT.
MGRT may resume in less than a minute.
Z-scaler, Z-scaler. Okay, turning off the low. You know institutions are shopping down here. However, we got to see the volume. Got to see the volume. I'm not taking a whole lot of risk. I'm sitting on my hands, as some other people have said this morning. Same thing. Okay, Zscaler. Let's see. We left off with J.P. Morgan, Lockheed Martin. Okay, aerospace and defense, Lockheed, Mondelez, consumer staples, Monster Beverages, consumer staples, Northrop Grumman, aerospace, Pitney Bowes, Schwab dividend ETF. That one's consolidating at the highs. All right, we talked about bulk carriers, shippers, maritime, Scorpio tankers, holding the 9/21/50 day. Okay, it's up 3% on the week, almost 4%. Same thing with TK. Taiwan Semiconductor consolidating the recent breakout. I would never chase these. Walmart inside day, pulling back in a bit. I saw this morning that I think it was Russell that posted that Walmart was trading at 45 times. Was that what you posted, Russell? Walmart. Where did you go here? Walmart. Russell posted earlier. Let me see what he. Yeah. So Walmart's trading at 45 times forward, while Amazon's trading at 21. Okay. Here's Walmart. I do have a position. I took a little bit off into strength yesterday, looking for exactly what's happening today. Amazon's at the low. They trade at 21 times. So I guess people feel more content or safe with a Walmart versus a Amazon at this point. I don't know. Choice is yours. All right, Walmart. Amazon's 21. Okay, continuing on. So we left off with Scorpio and TK, Taiwan Semiconductor. Bottom line is, I don't feel super confident that this market can hold this level. Okay, if we zip back up, there's a potential. Wells Fargo at the low here. Okay, the banks got whacked. And then Walmart. Okay, so let's look at the sectors. XLB, catching a bid. Still trending, 921.50, 200-day up and to the right. That's good. It's all about earnings. Companies have to continue reporting good earnings and guidance. Okay, ARM Holdings. ARM Holdings, for example, gave us good earnings. Okay, now it's starting to bounce. This is probably going to continue higher. So ARM Holdings, I did take some profits, right? ARM, I believe I did. Let me just check here. Yeah, I did take some profits on ARM. Okay, I showed you this chart here. ARM. I showed you this chart. Let me get it. ARM Holdings. Okay, I showed you this chart. We're inside the Kirby. So while we don't expect prices to go up every single day, the volume right here just a week ago into this week suggested institutions were buying the low. Let's take a look at ARM Holdings. So make a calculated decision. If you're going to do anything, make a calculated decision, check the earnings. Okay, ARM, it's okay. But let's see. So ARM Holdings, you've got earnings of 41 cents. Next time around, current consensus estimate is 56 cents. All right, so that's 15 cents. If they can beat that by 15 cents, buying down here makes a whole lot of sense, right? and we're bouncing at the 9 EMA. Now, generally, I like to see 2 days of bullish action after a dip, and I want to see volume pick up. So I'm not in a hurry to do anything with ARM, but I do like this one. Netflix bouncing. The New York FANG looks absolutely terrible right now. So this is one of the indicators that tells me just sit on your hands, Vinny. Don't do anything. Don't do anything. Okay, New York FANG. Okay, let's look at the New York FANG components. Okay, let's look at the New York FANG components, see what we can glean from this information. Apple, it's below the 50-day. RSI is below 50. Not interested at the moment. I would like to buy some more AAPU shares. I took those off. What was it on Wednesday? Into strength. Apple, Amazon, we just talked about, trading at a 21 forward PE versus Walmart trading at a 45 forward PE. Go figure. Google showed some signs of life yesterday, but it's still fading today. Google. Meta, bounce. This is like 2 or 3 days before I'd be even interested in this one on a long. It's bouncing, but it's below the 50-day. 9 and 21-day are crossing over. They are all below the 200-day. So this is short, intermediate, and long-term bearish until Meta can get back above. MACD's crossed down, RSI is lower. Stochastics drifting lower. Okay, that's Meta. Microsoft showing some signs that it might be basing. This is still too early to tell. Okay, the market's flush. I mean, people that have profits in Microsoft will probably take off Microsoft. They'll probably take off Robinhood. So stocks like Microsoft, Robinhood, these needs to hold. Robinhood's looking good. Okay, so Robinhood's looking pretty good. So far, so good. Let me just make a DM note here to a trader in so far, so good.
ATOM, OKLL, NVIL, IRE, NEBX, CONL, SMU,
OLB.
CGTL may resume in less than a minute. IRE, NVIG,
NC.
NEBX, WSHP halted.
MLDC.
All right, so Robinhood, yeah, that looks okay. S&P is starting to rise a bit more. Okay, so we need to get through this area. Next level overhead, 6860. Man, if we got above 6,900, that'd be awesome. The 6,900 lottos are still pretty cheap. They were cheaper on that little dip there, so this is looking good.
ASTI, CENX,
NC. MLDC.
IREX, IRE, NEBX, NVIL may res in 10 seconds.
NCI.
All right, Netflix bouncing. All right, Snowflake. We really need these New York Fangs to start to get some giddy up. If we can get the Fangs to reverse, catch a bid, that'd be awesome. Look at hedging flows. Okay, hedging flows. That purple line. For those of you listening, I did send the link out for those of you in the trading room. I did send the link out onto the internet, social media, just so people could join us if they wanted to, just to tune in, maybe want to join the site. And hello to all of you who's joining us on the stream. I'm live, but I don't pay attention to the chat room on the YouTube stream. So I sent that link out to StockTwits to see if there's people that are interested in not losing in the markets and hopefully making money. Right now is a period where we're in the not losing mode, right? So one of my responsibilities is telling you where the money is flowing and trying to help you understand that sometimes markets are more risky than others. Right now, we know that if we don't hold 6,800, we could go to hell in a handbasket very quickly. So what happens when the markets get like this? We're in the lower half of this range, the red zone. This needs to get back above the 50-day. That also means that we're below the 10 EMA weekly, okay? So when we drop below the 10 EMA weekly, that's a caution signal right there. So I immediately start doing things different. You can't trade this market right now the same way you have been for the last, several months. The last few weeks, unfortunately, we've been chopping people up. I've been talking about this a lot too. The majority of days, tight range, about 30 or 40 handles, maybe 50. You buy at the wrong time, you get stopped out. You sell at the wrong time, you get, it's just unfortunate. You get chopped up. Every so often, one or two, maybe 6 of these candles were big ranges, chop people up. Maybe you bought puts at the low of the day 2 weeks ago, and it right back up into the green zone. Maybe you were buying calls yesterday early, and you got torn up. Maybe you bought puts at the low of the day, and you did okay. Right now, we're trying to bounce. So this is not a market that suggests putting on a lot of risk. Short term, I'm talking about in the next few weeks. If you got options expiring out in the middle of the year, maybe you're okay. Most of those should be okay. But short-term stuff, if you got options that expire today or next week, I would suggest if you have profits, maybe take some profits off, reassess your positions. What's going on. We left off with Meta and Microsoft, right? Meta and Microsoft. Meta's getting a bid, but it's below the 50-day. Microsoft, I would not do much with Microsoft right now. I'm sorry, with Meta. Microsoft is starting to look better. Maybe it's building a base. Too early to tell. It needs to take out 423. We need to see some volume come in. So that's Microsoft. NVIDIA, of course, is in the toilet. NVIDIA. Why is this important, Vinny? I'll show you why in just a second. Netflix is at the low. Okay, Tesla. Tesla trying its best to stay. If you look at the 60-minute on Tesla, you know how I like to use the 60-minute. We're below the 20 EMA. 20 EMA is pointing lower. So what does that say? Risk off. Don't take the trade. You might want to try to move it to scalp this for 3 or 4 points. That's fine. That's not what I'm thinking right now. What I'm thinking is I want to see this get back above the 20 EMA. 20 EMA turns back up. Okay, I want to see the 20 EMA turn up like this. And I want price to get back above it. If it can do that and clear the 20 EMA, that dotted red line is a 20 EMA for reference, an approximation of where the 20 EMA is on the daily. If it can clear both of these levels, then I'll be thinking long again. I have TSLL shares, and I'm currently okay with it. I like to see it much higher. All right, so that's what I'm looking for on Tesla. Tesla could do better. And you have Snowflake. Snowflake. All right, this is a good example. Snowflake has been down. Snowflake is actually a good trade. Okay, this actually looks pretty good. Snowflake looks good. Okay, let's look at the daily Snowflake. Higher low. This is exactly what I'm looking for. Okay, Snowflake is exactly what I want to see in Microsoft to go long. I already have MSFU shares. Okay. Okay, so Snowflake looks really good. This is exactly what I want to see. This is exactly it. Cool. What's the volume look like? Volume is all right. Volume is looking better. Okay, let me just note this. I'll put this in the trading room. Snowflake. Okay, so I put a stop underneath the low of the day. Stop underneath the low of the day. Okay, let me go back to the 60-minute Snowflake. All right, this looks really good, actually. Snow 60-minute chart.
OLV.
Okay, so there's some diamonds out there in the rough, some lumps of coal that might turn into a diamond.
HSPTU halted.
Okay, this is good. Snowflake looks good. All right, so it's good to see something that's working, right? Mhm.
SUNE.
MLEC.
Okay, so Snowflake looks excellent. I don't want to beef it up too much, talk it up too much because we could still fail. Closing down here wouldn't be good either. Okay, in a doji, if we don't move much today, hedge flows. All right, we're already starting to see that familiar back and forth, up and down, sine wave, left to right, sine wave, up and down, up and down, up and down. That's forecasting already a doji day. What else would tell us? What else would tell us to look for a doji day? Up down volume. What's up down volume look like right now? Last time I checked, SPY was 1-to-1. SPY, sure enough, is 1-to-1. Okay, 1-to-1 up down volume. That's telling you look for a doji. We need at least 2, 3-to-1 on the upside. If we start to bounce, we need 2-to-3, 2-to-3-to-1 up volume just to get us out of this hole that we're in. We're in the range. You know what I'm thinking. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 13th. We're what? Not quite 50 minutes. Yeah, we're 50 minutes into the trading day. This morning we had CPI. CPI was tame, so maybe we'll get a rally off of that. I suspect that we won't get much. Until proven otherwise, I suspect that we're not going to get much out of the markets today. So what does that mean? It means that I want to continue to take risk off, reduce exposure where I can, look for a bounce. If we can manage a bounce here, watching 6,900 lottos, 69, 68.90, 68.75 from 68.75 all the way up. Looks like we could get there. Maybe. You can see the clear line of resistance. This was yesterday's low before we lost it into the close. That's yesterday's low, that horizontal. So we need to get above that for starters. Where is my, okay. Okay, that was New York Stock Exchange. Let's see. Okay, what was the London session low here? London session. All right, London session low. What time was that? That was London's. Actually, we're back above the London session low, right? Right before the open, we had the London session low. Right around futures, right around 68.20. That was the London session low. London session high would bring us back up to around 68.70, 68.60. So there's potential. We just need to get a bid. Nothing yet. Okay, we left off with Snowflake, and we need to look at Broadcom. Broadcom has been a dog. It got rejected at the 50-day. That was your opportunity to exit. If we can produce a higher low like we're seeing with Microsoft and Snowflake, if we can get these higher lows to print, we might be able to come out of this with just a few bruises. Okay, so we're back above the London session low. Okay. Like I was saying yesterday, it's a lot more fun talking you through potential trades when the markets are bullish. When the markets get bearish, it's not as fun because people DM me, they're worried. It's always the same story. I got too much risk on. I didn't take my stop like I should. I'm down 10%. I should have taken the stop off at 5% loss. When a trade does something that you're not expecting, get out of it. All right, let's take a look at Robinhood. I took Robinhood off early yesterday, and I'm still interested in Robinhood. I want to sell some put credits. I showed you what that was earlier. Robinhood, this put credit right here. Okay, I don't need to go out that far actually. Maybe bring it back in. But if you're still in this one, 55.50, I think that looks okay. Let me just check real quick what your trade is. You got plenty of time. The only problem I have right now is that the way the markets acted yesterday, very unusual. Robinhood, let's see, July. Robinhood, 55.50. Let me see. You could get out for $1.05. They're bidding at $1.05. Okay. So right now, Robinhood, that looks pretty good actually. Robinhood's coming off the low. Robinhood. So I took this off yesterday because it started acting really weird. You can see that first bearish candle when we dropped off yesterday at the open, and we took out the earnings low over there on the left. Okay, we started to move lower. Before it even got there, I took the trade off for a small loss. But now we're back above where I sold it. You can get out for $1.06, or you can sell it for $1.06. Bid. Ask is $1.20. All right, so we're already back to already looking better. What's Boeing doing? Boeing's another credit spread. That's moving higher. Boeing's looking good again. Boeing. All right, let me take a look at Boeing. BA. Okay. 225.
MLDC. FMFC.
IRE. MSTX. OKLL. SMU. BMNU.
Okay, Boeing.
CRWG. CIFU. FMFC. IREX. BKKT. APLX. ONDL.
FMFC.
JTCG. IRE. SMU. CIFU. BMNU. CRCA. FMFC.
Okay, S&P is starting to climb again. We need to break out and get the shorts to cover.
APLX.
Okay, so you know about Snowflake, you know about CrowdStrike, Palo Alto. Let's continue the list here. Snowflake looks pretty good here. Snowflake. Defensive names, Kimberly-Clark, KMB. Okay, trending. It's inside yesterday's price action. Walmart pulled back. Starting to catch a bid. Walmart's 45 times forward PE. We left off with Lulu. That's dropping down the list a bit. Cadence Design, CDNS. That's climbing the list. Cadence Design coming off the low. What it appears to me, looks like institutions are picking up certain names that have been that have already pulled back a lot, like Robinhood, for example. These look better. Okay, Robinhood's looking much better.
CRWG. BKKT. BEX. CONL. WULF. QPTX.
Okay, S&P is on the move now. Tesla's on the move. All right, the New York Fangs, all of a sudden, it looked like they flipped a switch. They flipped the switch just now.
High tick alert plus 800.
High tech. High tech alert. High tech alert. Okay, watch this. S&P. I was looking at Oklo yesterday, Frano. That chart is so ugly. I have a position, but they're probably picking up shares down here, I would think. Okay, so Oklo looks okay. S&P trying to break out. The 6,900s, watching the 6,900 lottos potentially for trade. If you're already taken it, 6,900 lottos. Yes, sir.
CRWG. CIFU.
FMFC.
FMFC. CRCA. OKLL. SMU. MSTX. WULX. IRE. IREX. CGTL may resume 10 seconds. FGL may resume in less than a minute.
Okay, got a nice little rally here so far. Let's take a look at those S&P. 0-day 6,900s. Those lottos I mentioned. Anything. 6,900, 6,890, something like that. 0-day. Those look good. Let's take a look at hedge flows. Okay, this is what we want to see. We need to see the hedge flows. That purple line needs to keep rising. Okay. There's not a whole lot of positive gamma. There's not a whole lot of gamma at all trading up here. Let's look at 0-day. Okay, 0-day, you can see that they sold a bunch down here at the low. So let me see when they did this actually. Okay, watch the timeline here. I'm going to go back to 9:30. Was that there before? Actually, that was before. That was there before the open. That was 0-day. So somebody sold $35 million worth or somebodies, plural, sold about 35 million in gamma down there. We came down and we reversed back up. That hasn't changed since this morning. A little bit. It was about 50, about 40 at the open, turning back up. Okay, it was 42 about an hour ago. Okay, so at the open, it was about 40, 42. We got 28 now, so they're taking these shorts off. Dealer is long. Markets, somebody probably sold some there too. Sold some puts. Okay, this is the kind of action we'd like to see. Continue to catch a bid. Shorts cover. MACD's crossed. Check your MACD cross here. Okay. Okay, where's my MACD's crossed? Okay, got a nice ripper here now. Okay, good. Finally, we get a good ripper. This could be a big day. This could be a big day on the call side.
FMFC.
CRWG.
Okay, here we go. Hedge flows rising. Hedge flows rising. Rapido. Rapido. That's bullish. Okay, hedge flows rising. That's bullish. It tells you what the dealer is doing. Buying the dip. There we go. There we go. Nice. Boom. Nice, nice, nice. Okay.
NBIL. CRWG. CWVX. CGTL may resume in less than a minute. CRWU. IMUX. NBIL.
MLDC.
Life is more legal than you think. Just ask these parents and business owners. From setting up a will
CRWG.
to registering a business.
SCI.
Okay. So far, so good. Looking good here.
CTL may res in 10 seconds.
All right, so we can get some more shorts to cover.
CW.
Looking good. 6,900 is up here. Up at the highs. Okay.
MLDC.
CRWU. NBIG.
6,900 is right there.
OKLL. CRWG. MLEC vaulted to the upside. ASTX.
$6,900. We got a band of resistance right here. Resistance,
MLDC.
supply.
NGI may res in 10 seconds.
Supply and resistance is right there. Let's see where we go with this.
CRWG.
Let's see where we go. Which way do we go? MACD still rising. Okay, volume. We need more volume.
CRWV,
Need a bit more volume.
CWVX, IRE,
MLEC.
NEBX,
MACD. MACD still rising. Okay, so far so good. Don't look now, but Bitcoin is ripping.
CRWG, APLX,
MLEC.
Don't look now. Bitcoin's going. All right. All right. Bitty is going. Bitcoin is going.
ASTX,
Boeing is gone. Boeing ripping here. Boeing's ripping here. Just shy of resistance right now. Hedge flows. Okay. Boeing still going here. Boeing ABCD pattern early on Boeing. Watch MACD here. See if this dip gets bought, S&P or not.
JDCG,
JPCG.
CGTL may resume in less than a minute.
All right, we're getting rejected S&P. Got excited for nothing. I was most likely just shorts covering on that high tick. Tick cumulative is red on the 60 minute, so that means they're selling more than they're buying at the moment. We know that breadth was trying to improve. A lot of moving parts, that need to get in sync. Junk bonds looking a lot better. Yesterday we had a good looking start, and then we closed underneath the 50-day. So RSI is rising. MACD's trying to continue higher as a function of price. So yeah, that's junk bonds. Let's see. S&P pulling back now.
Less than 10 seconds.
All the New York banks just got saw some profit taking into that little tiny pop. Snowflake still looking good.
MLEC may res in 10 seconds.
CPTG.
Okay, let's look at some of the ETFs. Okay, Boeing looking better. Boeing is above the 60-minute 20 EMA. Snowflake above the 60-minute 20 EMA. We need to see Tesla do the same thing. Tesla needs to get above the 60-minute 20 EMA. Not there yet. Okay, here's the Tesla. Here's Snowflake. And here is Boeing. Okay. What's Taiwan Semiconductor doing? Taiwan Semi TSM. Okay, trying to get back above the 20 EMA, doing chin-ups right now. What else? Apple's starting to turn off the low. Apple. Okay, when it's below the 20 EMA, I'm not really interested in a long. 20 EMA is going to accelerate down towards this price action shortly. Apple got whacked yesterday. That wasn't comforting. Even though the institutions were picking up some shares over here a week ago, the way this is traded this week, I'm not crazy about. Needs to get back above the 50-day at a minimum if you're trading Apple. Amazon trading at a forward PE of 21. Walmart, on the other hand, trading at a forward PE of 45. And they're still bidding up Walmart. Makes sense of this, right? Walmart. Okay, let's take a look at Walmart. Walmart on the 60-minute time frame, we're above the 20 EMA. What happens? Every time this pulls back, keep an eye on the 20 EMA. If it bounces, looks good.
GL may rise in 10 seconds.
Okay, Walmart. Walmart. Okay, Walmart. All right, trying to move a bit higher, Walmart. Okay.
ATOM.
Walmart looking for some more upside. Walmart looking good. Okay, 134 and change was the high yesterday. I had the 130, 135, so I had to take some of those off yesterday into strength. I was talking about that just before the 3 o'clock hour, taking some of the Walmart 180, excuse me, 130, 135 call verticals off because your maximum profit is that upper strike that you sell. Okay. I believe I showed you that on Microsoft as an example. Was it Microsoft? No, it wasn't Microsoft. What did I show you that on yesterday? Was it Walmart? Yeah, it was Walmart. Okay, so here's Walmart. So yesterday I showed you that the way to trade in this kind of environment, we just pulled back a little bit. In this kind of environment, I don't want to buy calls for $10. So what I do is I sell $5 higher. I get a credit of $7, so it makes my trade $3 instead of $10.
GTL may resume.
Okay, max profit is when you hit 135. Okay, and we're trying to get up there right now, as you can see. This is an example. I don't know if these were exactly the prices, but just giving you an example how a spread works. S&P pulling back. We got to see a legit rip to the upside, and hedge flows need to continue. You can see hedge flows turn back down now, looking for a higher low. The risk is that we could turn this into a sine wave, that hedge flow line just starts going back and forth. Okay, up and down to the sideways in a sideways direction, indicating that we could see more chop. The other thing that you can look at is up-down volume, which is currently 1-to-1 down on SPY. It's 1-to-1 up now, just flip back to 1-to-1 up. The Qs were 3-to-1 down. Now they're 1.5 down. So this is improving on the Qs. New York Stock Exchange, almost 1.6-to-1, 1.6 up volume. NASDAQ Composite, 2,700 stocks, give or take. NASDAQ Composite, 2-to-1 up volume. 2-to-1 up volume tells you maybe you want to check out the comp. Let's see. Doji, still a Doji. New York Stock Exchange, NYSE, we've got 1.6. So this is looking a little better. New York Stock Exchange. Yesterday, I didn't like the way this traded. It's got this big drop. So it's almost like we're seeing some distribution at the highs together with what we're seeing on the S&P. Okay, so again, I'm not doing a whole lot today, right? We're at this range bound pattern. Worst case scenario, we close at the lows of today's session. Best case scenario is we close at the highs of today's session. Right now, we're pulling back again. Okay, so all the New York FANGs just saw sell programs come in, it looks like. Microsoft just dropped back down. This is not the kind of market where you put on a lot of risk,
CGTL may resume in less than
unfortunately. We're in the middle of the Bollinger Bands, futures in the middle of the Bollinger Bands. 15, 30, and 60-minute time frames are on buy signals, but the 5 minutes on a sell signal. Futures for now. Let's see if this pullback gets bought. Watch hedge flows. If hedge flows start to turn up again, that'd be good. Okay. All right, looks like 68.50 resistance for now, 68.50, 68.60. You can see that right there, 68.50, 60, and right above that, 68.75. So
CGTL may rise in 10
for now, that looks like the area where we can expect resistance 68.75, 68.70, which is right along with this area where they were selling before. Okay, so that area is delineated in several different ways. All right, this level right in here is resistance. Also shows up on hedge flows right here. Okay, this area right in here. So we need that hedge flow line to turn up. That'll tell you what dealers are doing.
AMW up.
Okay, watch S&P. You see MACD's crossed bearish now. So that's telling you if you haven't already taken it off, or if you're looking for a trade, you got to get this to turn back up first. The volume, selling volume into that. Tricky. We get a high tick alert, shorts cover into that short covering, people taking profits off, runs right back down. I don't like this market. Don't like it. What's Robinhood doing? Robinhood, was that a short-lived bounce on Robinhood? Looks okay. Robinhood looks okay. Just me. I would take it off. You can get out for better price than you sold it. You can make a small profit like I did yesterday. I'm actually lost a little bit. SPHD, SCHD, these are moving higher. SPHD, SCHD.
CGTL may resume in less than a minute.
Okay, continue higher on the weekly. 60-minute, back above the 20 EMA. DIV, another dividend ETF. That one's holding up better. $19.
CPS.
Okay, so this dip, let's see if this dip gets bought or not. Okay, watch your MACD. Watch MACD. Whoops. Watch your MACD. Right here, looking for a bounce.
CGTL may rise in 10 seconds.
Okay, daily, you can see a doji clearly. Up, down volume, doji. Market is definitely more risky at this point.
BNAI.
We know what the S&P daily looks like. We're in a range, doji. I know I'm beating this to death, but if you're thinking about taking risk, if you can't control yourself, leave. Push away from your computer. Go take a walk. The markets are not super conducive to, a good trade unless you're bearish, in which case you probably want to sit and see if we take out the low. If we take out 6,800, you really don't need to sit here and wait and watch for it. If we take out 6,800, that's going to be bearish. I already took 650, 640 SPY puts out in December. You may be saying, why so far out, Benny? Because I'll show you why. You probably already know what I'm going to show you. S&P. I took December put credit, so it's a little bit less expensive. I took it yesterday before VIX ripped. VIX ripped to the highs here. S&P, where are you? Okay, S&P midterms. We have midterms this year. So I bought December for this reason. Okay, November is the midterm. A lot of people are talking about a potential pullback. Does it happen now? And then again after the election, November election? I don't know. I just know that it's kind of risky. So I took some 650, 640 put verticals just for a hedge. Okay, we're starting to bounce because I don't like the way the markets are acting right now. Okay, these dividend ETFs, these look pretty good too. If you're interested, I'll show you what's in these. Okay, these are probably stocks you already have. So rather than having earnings exposure, maybe you want to look at these for the stocks that are in them. Okay, some real estate, some Pfizer. These are what do you call it? Storage Cube, right? That's storage. That one's at highs. SPHD, a lot of dividend paying stocks in the energy space. Okay, in healthcare, in food staples. Okay, these are staples. Pharmaceuticals. We got pharmaceuticals. We got some tech. 3M, some industrials. Okay, so it's a nice mix. Currently, that one's trading at the highs. We took this, took some profits off January the 8th, rolled it into SCHD, and that's still holding at the highs too. So on January 8th, we had this breakout, that big bullish candle right there. We rolled some into SCHD. All right, this is SCHD. Okay, so right now what I'm watching is the 60-minute. Okay, we're back above the 60-minute 20 MA. So this becomes bullish again, stop underneath 31. We've been long in this one since that January 8th break higher right there. See that January 8th high right there? That's when we got long at 28. 28. May not seem like a lot, but for a dividend ETF, this is good. Okay. Man, this is a lot of mental capital. One of the reasons why I suggest people take a break if you've reduced your risk, or even if you haven't reduced your risk, reserve your mental capital. If you're staring at the screen and you're getting emotional on every up and down in the markets, you really need to reduce your risk. If that happens to you, if you're down $200, if that's a lot, I can't speak for everyone, but sometimes $200 is a lot. So you take a trade and you're down $200 the next day. It didn't do what you thought it was going to do. So take it off. Push back from your screen. Take a walk. Go around the block. Take a rock. Go play golf. Do whatever. We can still play golf here. Okay, the fear of greed index is in the extreme 9. Got a 9 on that. Okay, 9. Oh, that's crypto. That's crypto.
FRMI. ATOM. CLIK halted down.
Okay, note crypto is extreme fear on crypto, so we'll probably see that rally a little bit. If you're just joining us today, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday the 13th. We're off on Monday, holiday.
CTL halted.
Scott, how's the family? How you doing there? IWM. Okay, IWM looking good.
NUAI.
IWM, new high of the day. Okay, turning back up. The possibility of getting back to the top of the range is pretty decent. Small caps have been outperforming. Okay, let's go here.
ATOM. BBPR.
Get better savings on better styles at Haverty's President's Day sale. Haverty's, we furnish happiness.
Okay, fear greed index on the, I just posted in the trading room. Fear greed index is pegged at 9 for crypto. So it makes sense that we would get a bounce soon. Maybe not today. Maybe it doesn't follow through. We've been disappointed quite a bit over the last couple of weeks. We think that we get a rally, then, it doesn't work too great. IWM looks good. IWM. Okay, so we got to see a lot of things mend themselves, like banks need to mend themselves. Let's see what JP Morgan is doing. JP Morgan. Okay, JP Morgan. If you look at JP Morgan, it's probably one of the worst for. I looked at this morning, actually. Let's go see what this looks like. JP Morgan. JP Morgan. No? I don't know where I put it. Anyway, JP Morgan. We got this multiple bottom along this level. There's several dips here that could get bought. Right now, we're at this dip at 297, 296. This level is finding support. The 200-day is right there. JP Morgan looking better, 200-day bounce.
CLIK may resume in less than a minute.
HCT up.
ATOM.
Okay, so we got multiple levels here that we're bouncing. We're above the 200-day. JP Morgan's probably one of bank traders' favorite stocks. JP Morgan,
May res in 10 seconds.
Jamie Dimon. Synonymous with winning.
FSLY.
Mhm.
NUAI. FGL may resume in less than a minute. CLIK may res in 10 seconds. CGTL halted to the upside.
Mhm.
FRM.
All right. Hope everyone's having a good day.
FGL may res in 10 seconds. HCTI.
HCT up.
PHIO.
Okay, IWM breaking higher. IWM is going. Last Friday, I got assigned 500 shares. I try to I try to keep people from making a mistake that I make from time to time. It's like the third time in the last couple of years, not paying attention. Um,
FGL halted down.
got assigned 500 shares of IWM at 265. It closed at 265.02, 2 pennies in the money. Got assigned 500 shares. Monday morning, had to take it off, and then we rip higher. Go figure, right? We're back down to 264 and change. But earlier in the week, Monday, Tuesday, this looked pretty good, and then it dipped. So I took it off. Anyway, long story short. So I'm watching IWM at the moment. Okay, Bitcoin trying to do something. Extreme fear, and Bitcoin showing up pegged at 9 out of 10. Bitcoin, JP Morgan bouncing.
FSLY.
Okay, hedge flows trying to make a higher low, higher high. Hedge flows. Watching the hedge flows here. What time is it? It's 11 o'clock. 11 o'clock. I got to take a 2-minute break. I'll be right back.
FSLY. BBPR.
SER. MLEC.
POAS may resume in less than a minute. PHIL.
High tick alert plus 800.
Is that a high tech alert?
FSLs may rise in 10 seconds. CGTL may resume in less than a minute. LABX. PHIO. EKSO. SNXX. FSLY.
PHIO.
LABX. BBPR. CGTL may rise in 10 seconds. SNXX. FGL may resume in less than a minute. SCI. LABX. IONX. FIMI. BBPR. FGL may res in 10 seconds.
I think this is a short-term blip, and the fact that we're seeing pretty significant market breadth outside of these one-off names, as you said, really gives me
FSLY.
confidence that the rally is sustainable, even though it's going to be
FRMI.
year. I think it's going to be a good year for stocks.
And then, Jane, we have to take this conversation to what's going on in currency markets, where also things have been interesting, and and I guess there too, the question is, are we seeing any
PHIO.
change with regards
SNXX.
to, real debasement concerns about the U.S. dollar that mean, and also a policy maybe here in the U.S. that wants the dollar to be lower? So does that mean that the downtrend there is going to continue?
I don't think debasement is really happening, but I do think that there is a theme of diversification going on in the markets. And I also think that many people, even if they're not diversifying away from US assets, they want to hedge their dollar positions. And I think this is fairly obvious in FX markets, but it's also, I think, obvious in some of the equities if you look overseas. So, for instance, from the global financial crisis all the way up to 2024, there was very much a focus on buy America.
FSLY.
Absorbing a lot of those portfolio inflows coming from Asia, from Europe, etc. That were really growing in that period. And if you look at, say, stock markets were based at the start of last year, you see how these are performing, and in particular,
And see how-
in South Korea, but also the decline. This is evidence that investors are looking elsewhere. They're thinking, look at the buy America trade as this fault. Should we be diversifying? And you can see it very much in foreign exchange too, where there is much more interest in currencies with really strong fiscal positions. So we're talking about the Swiss franc, we're talking about the Swedish krona, and a lot less interest in currencies with
IONX.
debt, like the dollar or the Japanese yen. So I think this is a
SNXX.
really good period for other
And
countries
see how-
to sort of lay out their wares, if you like, attract those investors into them. And I think Japan has been doing that pretty well in terms of
POAS may resume in less than a minute.
in its stock market, and if it can turn around confidence in its fiscal position, I think also we can see the end of the growth here too.
And just to go back to the beginning of what you said, Jane, just to get a little bit of precision here, how do you tell the difference between a debasement trade, a true debasement trade, and this sort of like hedging diversification?
And see how-
Well, really, I think if debasement was happening, the market with foreign investors would be really dumping US treasuries, and there is no evidence of that. So we had a story at the start of the week that the Chinese authorities were telling Chinese funds to sell or not to hold so many US treasuries. But if we look at the data provided by the US Treasury, what we see, and we have it until November, what we see is that
POAS may res in 10 seconds.
of US treasuries, and actually, whilst Chinese investors
And see how-
seen a decline,
CGTL may resume in less than a minute.
invested in Canada, but Japan, particularly, where that's the largest non-domestic holding of treasuries. Japan, also the UK, Belgium, other countries, we're seeing their holdings go up. If there was real debasement, you see a real move out of sovereign assets. Sovereign assets being government debt, but also
MLDC.
currencies. Yes, you've seen gold go up, and some speculators or investors might be saying, yeah, that's evidence of debasement. I don't think it is. I think that's just the market following what a lot of central banks have been doing, which has been buying gold.
And you mentioned Japan, you mentioned the outside U.S. trade. Amanda, I know you've been watching what's been going on in Japan very carefully, right? We saw landslide victory for the prime minister there.
CGTL may res in 10 seconds.
Different voices about different moves as well. What do you think about that as an alternative place to put your money right now?
FGL may resume in less than a minute.
We were worried about what was going to happen. We didn't have elections, and so we spent some time kind of talking with our clients and investors about what's going on.
Okay. Okay. All right. Let's see. Bitcoin's still pushing a bit higher.
Awfully strange, and it does tend to snap the market. We did see a decent amount of short-term volatility around it, and it settled down
ATOM.
since then. So I do think, with the elections behind us and very aggressive fiscal stimulus package being put forth here, that it does, make Japan really sort of interesting on a relative, valuation basis.
FGL may res in 10 seconds. IONX.
Ultimately make a difference or not in terms of the trajectory of growth. But we do think that the equities there are certainly, relatively valued or attractively valued. And so I think we'll see how it plays out. It's a little bit early innings here, but it could be an area of opportunity relative to U.S. equities. It's just going to take some time.
Jane, what's your view on Japanese assets?
I think it's perhaps one of the most interesting G10 countries right now. So you've seen looking at the stock market reform, you have a huge pile of
NUAI.
domestic savings in cash, which has been built up in the deflationary years. Because obviously deflation, you don't want to invest in assets because you think the price will drop. So the government is making efforts to try and push this into assets, and that, of course, can push equities up, which makes it more interesting, I think, for foreign investors. But the reforms in the stock market really aimed at investor returns. That in itself is interesting too. Japanese government in 2024 has experienced really push
Okay. Hedge flows coming back down a little bit. All right. So IWM is at the high. It's very slow. You can sense that traders are less active today. Friday, my son's home from school. So they have Friday and Monday off. Monday for the President's Day, whatever it is.
IONX. ATOM.
Washington's birthday. Okay, let's see. Chevron trying to turn up. Energy's okay. Let's go take a look at some other things. Let's see what is actually moving in the markets at the moment. Okay. Caterpillar back up 3%. Caterpillar's not slowing down. Okay, they last report, they just one of the things that they commented about 700 of the natural gas generator sets, the big ones they're like a bus, the size of a bus, for a Utah data center. Okay. So until they get the whole nuclear thing worked out, natural gas is probably the cheapest thing to do. And using a generators to power those data centers, that's what they're doing for now. So they're selling those. They're probably the better ones. Cummins also sells. They're a competitor, Cummins International. That hasn't broken out. Dollar Tree was one I looked at last night. I was thinking about buying Dollar Tree. Okay, that didn't follow through. I was watching the 60-minute on Dollar Tree. Okay, it dipped below it this morning. Looking forward to get back above. Same thing we're looking for on Tesla. All right, Tesla's looking a little bit more bullish. Got to get above that 20 EMA. I marked this up this morning. I showed you what I thought we'd need to see in Tesla to get long. You could try off the low here, but the 10-year is, the 20 EMA needs to turn back up. The red dotted line is the 20 EMA on the daily for reference, approximation of where the 20 EMA is. So if price can get above 419, say 419.50, and start to head back up towards the highs of the week that we put in, 436.35, this has a shot, okay? If you want to take a shot at it, the stop would be down below, okay? Stop would be down here.
CGTL may res in 10 seconds.
That's Tesla. Okay, what else is working here? Caterpillar, Nike. Nike's basing. CRM. Merck's at the highs. I do have some Merck calls. 121, 25. Let me go check those out and see how they're doing. What is this? BITX. BITX. I bought some BITX last night after hours. That's up $160 for every 100 shares. Okay, so I'm up $1,600 on that. BITX. BITX, not BOTX. BITX looks good.
IONX APUS halted.
Disney coming off the low. Disney. Where do you think institutions are going to buy? You think they're going to buy up here at the high? Think institutions will buy the highs, or they're going to buy this double bottom? Got a new CEO coming in, right? Disney. Double bottom. Very clearly risk here. You put a stop under 100. Okay, it's $5. If you can't handle $5 stop on a $105 stock, trade some lesser expensive stocks. This one can move though. It's got an ATR of $3, so it's not likely to take you out if you put a stop underneath here. Okay, we're at the high of the day. Stochastics is rising. No, it's not. Turn back down. Needs to turn back up. Stochastics rising will tell you to look for close in the upper half of the daily range. That'll probably happen as a function of price. Disney looking good. Okay, what else? Amgen, bounce, higher lows. Amgen keeps producing these higher lows. Higher low, higher low, higher low. Looking for a higher high. Okay, looks good. Chevron, CVX, I added to this one again. I went up 185, 190 though. I had 185, I had 180, 185. As you reach that upper strike, okay, we talked about that. As you reach the upper strike, that's your maximum profit. Okay, so this is an example with Walmart. Walmart pushing a bit higher now. Currently, Walmart, I have 135, 140, I think. I rolled some up. Had 130, 135. 135 is your maximum profit zone. The upper strike that you sell defines your maximum profit. Yesterday I was talking about, well, Vinny, why don't you just take straight calls? Well, because I don't want to spend $10 per call. I don't want to buy, I don't want to buy $1,000 worth of calls right now, or $10,000 worth of calls. So can do 10 of these for $3 each. All right, so that works. And you still profit on the move higher. So Walmart still bid. That looks good. Walmart. Cisco, big drop in Cisco.
FGL may res in 10 seconds. CGTL may res in 10 seconds.
All right, S&P is still pulling back. Honeywell trending. United Health coming off the lows. I mean, we've seen this story before. Cisco, Amgen, Boeing. Hey, girls, stop fighting. I got girl cats because I thought they would fight less than boy cats. Right? You guys always fighting? Why are you doing that? She's looking at me like, why are you talking about me? They're sisters too, on top of it.
US may resume in less than a minute.
Nike, Caterpillar, like I said, Caterpillar looks good. Still trending. So anytime this pulls back, until it changes character. Okay, so think about this for a second. Okay, we broke out above 625, 626 right here. Okay, 625, 626. Ever since we did that, every time we pull back to either 20 or the 9 EMA, they buy. So the key is, if you're shorting at the highs like Russell did last week, that's one thing. But if you're long, watch for the dips to get bought. And you can see the dip getting bought here on Caterpillar. Okay, you can also see the 60-minute 20 EMA. So this would keep us long. The rule with 60-minute 20 EMA is you want to be long above it. Watch for any dips. Okay, we had a brief dip below the 20 EMA, not to panic. It needs to close below. It needs to close below the 20 EMA. Once it moves back above, that relieves you of your stop. You start to move higher, you can move your stop up underneath these last couple of candles. Looks like Caterpillar is going to keep going. Looks pretty strong. Okay, so that's the Dow Jones. Let's look at the S&P 500. Coin coming off the low. It's up 22 bucks off the low. 15%. Applied Materials, Moderna, Dexcom, outside day on Dexcom. Okay, Dexcom, outside day, bullish engulfing. That's a pretty strong candle. Need the volume to accompany. Okay, 60-minute 20 EMA. Okay, we're above it. So I wouldn't jump on it right this second. Let's see if this holds above it. You could start this on Tuesday. S&P is still pulling back. S&P is still pulling back. But Bitcoin looking really good. Bitcoin is the star of the day so far. I have some BITX. Looking to add to that. Okay, we're just starting to turn the corner. This could be a double. You're gonna have to have some patience. Bitcoin, you got extreme fear indicator pegged at 9. So that usually precedes a bounce. Whenever you get extreme fear, look for whatever asset you're trading to turn back up. In the case of Bitcoin, we hit 9 out of 10. 9 out of 10. Okay. Yesterday was extreme fear. Last week was extreme fear. Last month was neutral at 48, and then we lost it. Looked like we were going to bounce. What was that? That was Friday. It looks like we're going to bounce on Friday, and then Saturday, Sunday, we didn't do much of anything. Okay, Bitcoin looking better. Okay, I have some Bitcoin, BITX 2 times. I have some Coinbase, as you know. Coinbase, turning back up. I have CONL. IBIT, I sold that. I think I sold it. Let me just double check. Maybe I didn't. IBIT. Tesla. SPHD at the highs. All right, so that's looking good. SPHD. BITX looks good. Where did my... All right, the silver is flat. Silver, Z, the silver short. Still trying to figure out what it's going to do next. Silver short. Okay. ZSL, silver short. It's an inexpensive way to play silver if you want to short it. So we're sitting on that. Let's see. IBIT. No, I got no IBIT. So I decided to go BITX instead. Go directly on a hedged Bitcoin position, BITX. Okay, so if this gets going, like Bitcoin, obviously Bitcoin is going to drive it. Okay, high or low? All I can say about Bitcoin is it's got a lot of work to do. So I wouldn't be throwing 1,000 shares at this or 1,000 shares at BITX. If you're, if you're risk averse, maybe do 200 shares. If this starts to move higher, BITX, then you can add to it. Okay, but it's got to at least get through this 17 level. Make another higher high, and the volume needs to start picking up. So that looks pretty good. S&P 500 fading. Now it's starting to bounce. Very choppy price action. Up down volume is 1-to-1, so that's telling you exactly what is going on right now. All right, so NASDAQ Composites almost 3-to-1 now. So they are definitely buying tech. They're buying tech. Let's go look at tech. Tech. Let's take a look at XLK. Did it bounce? Are we off the low of the day? Yes, we are. 60-minute 20 MA, still not a bullish signal. Needs to get above, and that trend line needs to move higher. Semiconductors, trying to get above. Software, IGV. Okay, software is trying to turn the corner. Stocks like Microsoft, trying to get above the 20 EMA. Let's see, Palantir, software as a service. I think this would have less of an effect on Palantir. The concern they have software as far as AI, because Palantir specializes in exactly that. Software as a service, AI-driven ontologies. Its last report, I think they said it was 135 was their rule of 40 score. 40 is a good number for a SaaS company, SaaS, software as a service company. 40 is a good number. They have something like 130, I think it was, Palantir. Okay, so that's at the lows. That'll probably turn at some point. The key here, it appears, is that you don't need to be in a hurry to do anything. Okay, you don't have to feel like you got to jump into something today because you have to trade today. Try to get away from that mindset. You don't have to trade. I was going to buy some 6900s. I pulled myself back from it just a couple of minutes ago. I said, you know what? Just let's chill. Let's see if they can get some sort of follow through. You can see right now, we've seen this dance before. You see that hedge line, the hedge flow line? It's starting to create a sine wave moving on to the right. Okay, previous days, let me see if I can find one here. Previous days, let's see, I think maybe Tuesday. Yeah, you can see here towards the close. See how we just a sine wave? We go nowhere. Prices go nowhere. Early in the morning, pretty much a sine wave, which is telling you there's no trend, versus something like yesterday where we clearly had a trend, except it wasn't bullish friendly, right? It was down in the morning, then it gradually grew, and then back down again. That's a little better. But right from the open, we were down. Right from the open. Last week, I think, what was it, Tuesday? We had a nice trend after 12 o'clock. Tuesday. Tuesday was a trend down in the morning, and then in the evening, this took off after 2 o'clock. Remember that 2 o'clock rally? I know Mondo remembers. We had that 2 o'clock rally, and the options went from something like 50 cents, 60 cents to like $11 in less than an hour. These are the trends you're looking for. You're not looking for chop. But right now, what we have is chop. So this is why I'm not doing anything. You see this sine wave? This is not going anywhere. Maybe check out IWM. That's making higher highs and higher lows for now. Okay, I got to take a 2-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 13th, 11:30 on the East Coast, the best coast with the most. I'll be right back. Just give me 2 minutes. I just got to go check something in the house.
session for stocks. It was sell first, ask questions later. And Wall Street and
PHIO.
markets are beginning to take notice. I suggest you take notice too. Two people I know have taken notice. Tim Rivera, Innovator Capital Management Chief Investment Strategist, and now Finance CEO Reporter, Ms. Beret. Tim, coming to you here. Are you worried that this contagion, which I would argue began yesterday in markets, that this software contagion starts to spill over, and this is just the early innings?
Well, Brian, I do still think there's a very supportive backdrop for stocks out there. As you know, we have the S&P 500 pegged at 7,600 by the end of the year. That has not changed. But one of the risks that we highlighted in our 2026 outlook was when we turned the dark side of AI. Everybody wants to talk about just the benefits and how it's going to be a change for good, and that we absolutely buy into that. But you have to look at the other side, and we really see that dark side playing out in two ways. One, what is the impact going to look like on the labor market? How big of a spike in unemployment are we actually going to see with layoffs that are triggered by AI? Right now, those have been contained mass layoffs that we've seen recently. Only about 15% of those have been related to AI. The other piece of this is what other industries are they going to disrupt margins and even the entire industry altogether. I think that's what you're seeing in the software stock space right now when we have that just not too long ago, Brian, these stocks were trading at about 35x multiple. Now they're down below 20. You're down 20% plus this year. That's a significant sell-off. That's the dark side of AI. And we need to pay attention to that because I do think there's going to be other industries that are disrupted, and this is certainly a threat. And even if it isn't a threat that plays out this year, it's something investors need to prepare for and watch out for volatility in their portfolios because it's going to scare investors. It's going to scare investors, so we need to be prepared for that. It's not just going to go out and to the right, like some people hope.
Tim, are we in a dark period yet for software stocks?
POAS may resume in less than a minute.
Or is that just I enter a room and the lights have been dimmed a little bit and we're about ready to get full on dark?
I would agree with you, Brian. I don't necessarily think the bottom is in here. I do think we could fall further, and that's just you look at where margins are. I mean, margins are through the roof in this category of stocks. Those haven't come down yet, and valuations still are pretty elevated. So they've come down. I think it's a better entry point, but I would be in your point that I wouldn't call the bottom in this category quite yet.
Nez, weigh in.
All right, IWM at the high. We got a nice little bounce there, S&P. This is IWM. Okay, IWM. Back above the midline. All right, up, down volume, 3-1 on the NASDAQ. So this is increasingly better. Here's the NASDAQ. NQ, do we have NQ? That's the 100 futures. NDX. The comp, COMPQ. Where's the NASDAQ composite? What's the NASDAQ composite for TradingView? NASDAQ composite. No? NASDAQ. All right, let me go here. Let me go to the comp. COMPQ comp. Starting to bounce. All right, they're buying the dip. So where do you think institutions will buy? Up here at the high or down here at the low? So we're looking for evidence. Volume needs to pick up. Up, down volume looking pretty good. NASDAQ composite is 3-1. New York Stock Exchange, NYSE, is currently bouncing at the 9 EMA. Bounced at the 9 EMA. So this looks really good. Yesterday, I didn't like the way this looked. Today, it's okay. Respecting the 9 EMAs, what we want to see. Dow Industrials, respecting the 21-day. Only 30 stocks, but it looks pretty good. Okay, let's see. On the NASDAQ, is there any stocks from the NASDAQ? The Dow on the top 10? No. Zscaler looks okay. Airbnb, Old Dominion Freight. Constellation Energy, we took some Constellation Energy. Okay, CEG, that was a good call out there, Tony. Nice call on CEG. Okay, nice call on CEG, Tony.
goes down 0 to -15, you have the ability to make 0 to +15. So you have that inverse.
It was 60 cents to $22, right? Yeah, that was it. That was it. So what Mondo's talking about right now, I just mentioned last week, looking for hedge flows, okay? Hedge flows, if it's not giving you a signal, it's not worth it. It's not worth going, not spending your money, okay? Not putting your hard-earned cash to work. Let's look at, look at, what was it, Tuesday? Yeah, Tuesday, right there. Okay, this is what Mondo's talking about. We had calls that were going for 60 cents. We saw VWAP overhead. We were very extended. We already took out the expected move for the day. Once that started to turn, we saw the hedge flows turning up. You can see that white candle right there. Okay, that was the reversal. 60-cent calls went for 22 at the highs. We sold a little bit too soon, but that was the ultimate high. I think 22. That was a good one. That was a good one.
FGL may res in 10 seconds.
All these other sectors as well that, as they have outperformed tech, but certainly yesterday was a big drawdown.
IONX.
Yeah, Tony, I took it the day you mentioned it. Okay. Let's see.
GTL may res in 10 seconds.
It had to be, I'm looking back, the previous commentary. It was after the 28 because Jeff was talking about it going down. February 11th. Yeah, it was on the 11th. You mentioned it on the 11th. Okay.
This year, and I think we talked about this a lot, but the K-shaped economy that we've seen, where the AI cycle really disrupted the typical economic and market cycle,
CONO.
we think that's coming to a close. We're heading into an environment where you have
RGTX.
175 basis points of Fed cuts that are starting to make their way into the system. We have fiscal policy that is supportive. We have tax cuts coming that they were last year. We have PMIs above 50. So the growth backdrop is very strong, and when you have a growth backdrop like that is strong, you have other pockets of the market where expectations
OAS may res in 10 seconds.
and we see that outside of the big tech names where the expectations are still pretty high. There's still a lot of excitement around AI. And also, Brian, where you start to see those CapEx spending concerns coming in, which is another source of volatility that we think is going to be playing out all year. So there is still a lot to like about this market. I think the economic backdrop as well, and really continues to support that broadening out trade. We think it's just getting started.
And as far as your K-shaped economy chart.
Yeah, look, BofA came out with credit card spending and debit card spending, and it went up in January, the largest increase since February of last year. But what they're saying is that they are seeing this K-shape that is changing slightly, whereas before you had the middle and higher income that were spending, they are starting to see some softening in the middle income. So they're saying that the tax rebates could be, the tax refunds could be good for a little bit, but you have to keep an eye out because after tax season, if this middle income continues to soften, this could be troubling for the economy. Because that middle and higher then have been keeping things afloat.
Let's end it here,
RGTX.
guys. My word of the week here, just thinking of all the action, the sell-off we've seen in Bitcoin and software. My word of the week here, friends, is contagion. Tim, what's yours?
I would say consistency. You need to watch out for that. We think that a lot of the volatility that you're seeing with AI disruption and also just concerns about the amount of CapEx and hyperscalers, it's something that's going to be triggering investors' nerves really for the better part of this year. So you have to prepare for it. Consistency.
Inez, final word to you.
Disruption.
I like it.
100%.
RGTX.
I'm the host of this freaking show. I gotta have the best word, but I think you got the best word, Inez. I mean, come
Yours
on.
is pretty good too.
I
Yours is
mean,
pretty good.
all right, have a great weekend, y'all. Watch out for that volatility next week. Take it away. All right, I'm going to calm down software stocks for a little and fire up another topic I'm vibing about right now. Remember, the Trump administration.
IONX.
City, the garage is full, they go to the ancillary. He said, if the garage is full, they go to the overflow. I heard him, I was right here. Let's just stay in quiet.
FGL may resume in less than a minute.
Driven some great cars, huh?
Progressive can protect you from becoming
Idle and
embarrassed,
X.
but we can protect your home and auto when you bundle with
I
us.
think they might have brought the wrong car. We had the red convertible.
As a director of finance, I'm managing 15 to 20 contracts a month. With Acrobat AI
CONL.
Assistant, I can summarize long
RGTX.
contracts and identify key terms.
ASTI.
AI
CGTL may resume in less than a minute.
Compare two different versions of the same document for key changes. It makes me feel very confident that nothing's missing and everything's accurate. With AI Assistant, we're able to focus on what really matters. Growing our business and finding new ways to reach soccer fans.
Thanks, Jim. Everything.
Idle and X.
Everything.
FGL may resume 10 seconds. CONL. ASTI. SNXX. CGTL may res in 10 seconds. RGTX. IONX. ASTI. POAS may resume in less than a minute. CONL. COIA. ASST. CONL.
CGTL.
POAS may res in 10 seconds. FSLY. CONL. SNXX. FSLY. SNXX. ASTI.
The Bitcoin are much more useful volatility than traditional market investors. I think it's what I see people kind of just say, look, we know where we are.
CONL.
We know what's happening. Actually, if I like it at $126,000, I'm more likely to buy it at $68,000.
On the regulatory side, I think all we're looking for is clarity. And clarity on bringing anything else to the regulators. We just want to get to go on a regulated environment for customers. Bitcoin remains the best performing asset class. We've been through cycles like this.
SNXX.
And that includes growth, regulatory clarity, compliance, and close to that.
Some first I talked to Steph Bassett, Bitcoin, especially cloud
FSLY.
What is the status?
So the status right now, the House passed the Clarity Act, their version of it last year,
PUMP.
passed in July, I believe, and the Senate has taken it up and made its own changes to it and is fashioning their own version. We were able to pass half of the bill out of the Act Committee that handles the CFTC portions, and now we're just stuck with the Banking Committee for the SEC portions, the securities portions of that bill. So there was a markup that was scheduled on, I believe, January 18th, and unfortunately got pulled down.
CONL.
Postponed, but we're working hard to address the issues that were raised
EOSU.
that led to the postponement of that markup. And hopefully get that back on the books soon. And once we pass that out of the Banking Committee, the two pieces of the legislation will be reconciled before final vote on the floor. So more work to be done, but we're a step closer with the passage of the ag portion of this.
Patrick, what has been the policy that to get this initial?
MLDC.
Not to be cliche, it's a little bit of both. And we've encouraged both parties. We've had conversations individually. We've hosted a number of meetings here at the White House. We might host another one again next week on this issue of stablecoin, of course. It's unfortunate that this is.
All right, Fuse is coming back down now.
This is not the stablecoin bill. That was the Genius Act. But we've heard from senators on both sides of the aisle concerns about
Very choppy. Anticipating that that's going to be the case for today with up-down volume. Unless it starts to improve. We're getting a little bit above these levels here. Next level overhead, we hit earlier or got close to and got rejected. Just overhead, 6,900. I'd love to see it get back to 6,900. Okay, Constellation Energy. Chevron, not Chevron, Century Aluminum. That looks pretty good. Thank you for sharing there, Sundog. Excuse me, CFG, Constellation, Citizens Financial, CFG being mentioned, CFG at the 21 day. All right, so we'll see what happens there. S&P trying to push a little bit more, got supply right overhead. 6,900 is the level we'd like to see. Bitcoin looking a little better. Bitcoin.
There's been a number of studies that have pointed in either direction. I think ultimately our bottom line is consumers win with this choice. But we've heard from a number of senators, and again, it's bipartisan on this issue that they want to make sure that the concerns of community banks are addressed, that we're not doing anything that would cause deposit platforms. They are important pillars of the various communities around the country. And so I think we can do that. I think we're fashioning a compromise. Last week's meeting between the banks and crypto companies, I think broke some new ground, established some new common ground, some areas of agreement, and we'll build upon that. But whether or not we agree with that view, again, I think I've seen studies that point in that direction. Ultimately, this is going to be, there's going to be convergence between crypto and the banks. Right now, there's a new product that's somewhat threatening to the community banks, and not just the community banks, but also the GSIB.
S&P trying to push through this level. MACD is grinding a bit higher, but you know, not really doing that much. MACD. Resistance. Man, it is slow. It is a slow day. People are not doing much. I think a lot of people are off today with their holiday on Monday. A lot of people took Friday off. Watch this level right here. Watch this level.
To engage in crypto activities. If you just go to LinkedIn, there's plenty of job postings at JP Morgan hiring people into the digital asset space. So I think
CGTL may resume in
they're
less than a
indicating
minute.
that they intend to get into this space in a big way. They were present at last week's meeting, very constructive.
CONL.
And I think, yeah, on the stablecoin part of this, there's the consumer banking side, but then there's also the institutional bank side. And as more and more liquidity gets added to treasury markets, with stablecoin being backed by T-bills, there's a lot of activity and commercial activity that the banks, larger banks that have rates trading operations can get into. So
ASST.
I think for those larger banks that have those kinds of business lines and large practices there, they recognize what an opportunity this is.
Brian Armstrong over Credit. He sounded a little more optimistic, Patrick, last night on his earnings call about Clarity getting passed, at least compared to what we heard from him.
CONL. CGTL may resume in 10
Do you think
seconds.
this ultimately gets passed in the first quarter, or is this more
FGL.
We're definitely on the clock. There's a window here.
MLDC.
The window is still open, but it is rapidly closing, and so that's why we are taking it so seriously. Why we're encouraging folks to cut the deals that they can, to stay at the table. Let's not let any moss grow here. We got to get this done because, as I mentioned,
EOAS may resume in less than a minute.
Process. If we can get this
ANET.
out of the banking committee, it still needs to be reconciled with the ag portion. And
SNXX.
ultimately, there's going to be a cloture vote and the passage on the floor. That all takes time. And the most precious real estate in Washington, D.C. is
MLDC.
So we're in regular touch with Leader Thune about that. But he knows that this is a priority for the president, priority for my boss, David Sachs. And I do believe we're going to get this done. I won't necessarily put a date on it, but before the midterms really start to take all the oxygen out of the room, we have people engaged at the table that have invested countless hours on this bill, and
SNXX.
we're going to get it done.
Lastly, Patrick, you're in the trenches on the Bitcoin reserve that is being done.
MLDC.
Where does that stand?
EOAS may rise in 10 seconds.
So with the passage of the executive order, what we wanted to do with that is get an accounting of what the government held and then also stop the bleeding. So stop these agencies from willy-nilly
ASST.
liquidating digital assets that they had, sometimes at higher sale prices.
ANEL.
I think by some estimates, based on the sales and the way that they were conducted under the previous administration, we, the government, may have lost out on tens of billions of dollars that could have been held on our balance sheet. So right now we
MLDC.
stopped bleeding. We're in regular touch with the agencies, monitoring the current status of the digital assets that they hold, making sure that the accounting is complete, not just Bitcoin, but obviously many of the wallets.
All right, pushing a bit higher now.
ASST.
All right, if we can catch a short covering rally off of this, we could push through this level. 6,900 is about as far as I think we're going to make it if we continue here. Let's see what is up there. Okay, hedge flow wise. All right, 0 day 68.75 is in the way. 68.75. We're right at 68.70 right now. So that lines up with what we're saying, 68.75 right there. This line right here, 68.75. We're trying to take it out. It is absolutely gorgeous outside. Myrtle Beach, South Carolina. We moved down here from Jersey during COVID. Everything worked out perfect. Got a lot of money for the house that we'd been sitting on since 2006 when the markets dropped. Speaking of that, let's take a look at new housing starts. This delineates where we bought. Okay, we bought our house right here at the absolute top of the market. Right there. We bought the previous home in New Jersey. It took all of this time, moved back up to 2020, finally broke even and made a few bucks. I think it was 60,000 over asking what the house was worth. We got out in 2020. So Yeah, we're just watching housing starts. That needs to turn back up. The red area, that's the mean, basically. Let's see what, so we know industrial production is looking better. Okay, S&P is still pushing. AAII Bull Bear talked about this yesterday. We recently pivoted. That was May, June of last year after the April 7th, April 10th reversal. After the Trump tariffs, this turns up. So we're still rising. So there's still a lot more bears than there are bulls. Disbelief in this rally. Short term, I'm also reluctant to do too much. The way we had this one very bearish day yesterday. It's only one day out of the week, but still, that's enough to wake you up. Pay attention. The Dow Industrials, diamonds, also dipped back to the 21-day. We're finding a bid there. Okay, we need to be above the 60-minute 20 EMA. Not quite there. The green line, need to get above 498. The Qs caught a bid this morning. The Qs, that still needs to get above the 20 EMA. Same thing with Microsoft, needs to get above the 20 EMA. Trying to get above the 20 EMA. IWM, above the 20 EMA, moving back up. Basically a range. Moving higher, higher lows, higher highs. Apple's below the 20 EMA. That needs to turn back up. Maybe some mean reversion. Amazon, same thing. Walmart trending above the 20 EMA. Okay, when I'm looking for longs, I'm always looking for the 20 EMA to be rising, like Chevron, which has been good for us since January 7th, 8th. We want to move back above the 20 EMA, and it's been a long ever since. Okay, we just keep rolling this up. Started off with 155, 160. I keep rolling up $5 each time. Last time was 180, 185. Took those off. Now I have 185, 190s. We're below the 20 EMA, so we need to see this turn back up. SPHD dipped below the 20 EMA, bouncing. SPHD, that's a dividend-paying ETF. Renders a dividend at the end of the month. Last week of the month, SPHD. SCHD, quarterly dividends, but it's back above the 20 EMA. That looks good. So if you look at the daily, you can see the trend since January 8th when we jumped into this right here on that big bullish candle. This looks good. It's up over 12, 13%. Got in at 28. It's at 31, 32. Get to 32 would be good. What else is doing? Applied Materials, gapping up and fading. Watch the 60-minute 20 EMA. Could fade right back down to it. Walmart. Okay, Walmart trying to push higher. I have the 135, 140s now. Prior to yesterday, I had the 130, 135s. Took those off because we got very close to 135. That's my max profit, so I took that off. Now I have the, what is it, April? Let me just check real quick. Walmart, I have April 17th, 135, 140 calls. So we're looking for this to get up to 140. And I'll just keep doing this until it does what it did right here a few days back where we dropped below the 20 EMA. That stops you out. A close below. Re-enter once it gets back above the 20 EMA. And we continue to be bullish here. Okay, stocks that are on the list this morning. Dexcom, back above the 20 EMA 60-minute. Dexcom. Strategy. Okay, this is starting to look good. Coinbase, all of the Bitcoin-related names. IBIT, this is the 60-minute again. BITX, I prefer BITX presently. 2 times Bitcoin, so Bitcoin can keep going over the weekend. That would be good. High of the day so far, 16.18. IBIT. S&P still not able to follow through here. S&P 68.75 is a line in the sand. It also shows up on the hedge flows. Hedge flows right there, 68.75. You can see the gray bands. That's telling you where there were trades there before that have closed. That's 0 day. Here's non-0 day. Positive gamma north of 68.70. That's just above where we are. 68.70, 68.75. We're currently trading 68.69. So no surprise that we're running into a little resistance here.
FGL may resume in less than a minute.
TSL out. Tesla's starting to move. Tesla. Okay, Tesla sometimes will move on a Friday. Tesla sometimes will move on Fridays. Okay, let's look at Tesla. Tesla on the 60-minute time frame. Tesla. Here goes Tesla. Tesla coming off the low pretty quickly here. Has a reputation for moving on Fridays sometimes.
FGL may rise in 10 seconds.
Tesla turning up. Watch Tesla. Has a reputation for turning and doing things on Fridays. Not always. Not always.
POAS may resume in less than a minute.
CRML. I have a position there. CRML is trying to do something, but CRML. Buyers at the low of the day.
Different guests have different needs. So a guest that only wants that hot price point, there are things for that. So no matter where you shop the menu, you're going to get great value. And they're still spending in this tough economy. So we're leading to those consumers with brand innovation, menu innovation, and really give them
POAS may rise in 10 seconds.
We talked about the fact that we made, I think, significant progress on our value and affordability platforms and how those are resonating with consumers.
A new report on the state of consumer spending in 2026 reiterates the point that consumers are firmly focused on value. 62% of shoppers now prioritizing price over brand when making purchase decisions. Joining me now is Brian Leach, founder and CEO of Ibotta, which is a site that helps with people shopping, helps them get cash back.
Yeah, CRML needs to get above the 20 MA for a long.
QQQ may resume in less than a minute.
Hammer, Microsoft. Okay, that would be good if Microsoft can continue this. Okay, Tesla's looking really good though. Tesla. TSLA. Tesla. Okay, it's above, trying to get back above the 20 EMA. Okay. I added yesterday on the lows of this candle, this pullback candle that dropped below 20 EMA. I added a little bit. Thinking that we were going to turn back up. Didn't happen. So I didn't take a stop. I just started to build a position looking for a higher low. Luckily today, this is one of the things that I didn't have to take off because this is turning back up. It's above where I added to it yesterday now. Tesla looking better. 5 minutes showing some strength here. Probably some shorts covering. Tesla looking good. Tesla. Tesla looks good. Tesla's on the move. Has a reputation for moving on a Friday. Microsoft turning off the low, looking good. Okay, need some more upside. Tesla looks good.
you have about 26% of the basket that's up for grabs, but price is the primary determinant of switching behavior. For a long time, these prices have been going up. Consumers have been fleeing into private label, and now these brand companies, you just interviewed the CEO of PepsiCo, for example, are trying to recapture market share through intelligent use of promotions.
Okay, so tell me what those promotions look like. You know, how they're reacting, how the consumer brands are reacting, and then how individual shoppers are reacting.
HSPT
Yeah, so
halted.
one thing that's interesting from our survey, so we survey 5,000 shoppers every year in this detailed survey we call the State of Spend Report. And one of the things that jumped out to me was that you had a 7% decrease in list making in terms of determining what you're going to buy before you walk in the store. And actually now 32%
CWK.
of surveyed shoppers say they make spontaneous decisions about what to put in the basket based on price and whatever else they
RZLT.
encounter in the aisle. Right? And so brands
What?
realize that they need
People go to the grocery store with no idea what they want to buy. Who is this guy? I only go to the store when I know exactly what I'm going to buy for dinner in the evening. I always buy fresh stuff. You can see even in the store, you can question whether or not it's the freshest, but I like to go to Publix and get, fresh meat or fresh fish or whatever for dinner that I'm going to cook that night. I don't like the things to be sitting in the refrigerator. Anyway, whatever. Speaking of, let's see what Walmart's doing. Walmart, WMT, Walmart. Okay, hanging out at the highs. Walmart, Costco, Dollar Tree. I was looking for a possible trade on Dollar Tree. I'd like to see it above the 50-day on the right. Dollar Tree, Dollar General. Testing that upper Bollinger Band, Dollar General. Okay. Dexcom, nice follow to Applied Materials, Moderna, Coinbase, Robinhood. Robinhood looking better. Robinhood looking better.
COAS may rest in 10 seconds.
In order to influence their decision. And about 26% of the basket that someone buys is different. It's open for grabs. So they have the things that they know they like. That's kind of 3/4 of their basket. And that you might put on the list. But the other 26% is up for grabs.
FGL may resume.
Bitcoin off the high of the day. Just feels lethargic. Like there's not a lot going on today except for shorts covering maybe.
The other thing that characterizes consumer spend right now is that it looks very different for upper income Americans and lower income Americans. And I wonder if you saw those kinds of differences in your survey, or if you're mostly trying to capture the sort of, bottom 50% or even bottom 75%.
Okay. It's beautiful outside. Should really take a walk outside. It's sunny here. Well, I'm not north of the Mason-Dixon. I'm down south of here, but it is so nice out. Just stuck my head outside for a few minutes to go check the mail, put something in the box.
FGL may rest in 10 seconds.
Looking for a bid. Looking for the markets to rise quickly here.
CUU may resume in less than a minute.
When you're talking about things that you're providing for your family every week, every other week, is looking at music as part of their job as sort of the person stewarding those resources for the family to get the best possible value. And so they're going to shop in places where they perceive they get that, and they're going to buy brands that get it and realize that multiple years of compounding price increases have lost them the loyalty of their consumers, and they need to intelligently regain that.
Interesting. Brian, thank you so much. Really interesting stuff. Appreciate it.
Thanks, Julie.
Coming up with electricity prices and
HSPT may resume in less than a minute.
to the U.S. power grid,
BVPR.
how capacity can be more resilient.
CUU may rest in 10 seconds.
Chevron pushing a bit higher. Chevron. Dollar General. Tesla. Let's keep an eye on Tesla. Tesla still driving higher. Okay, Tesla driving higher. I'd really like to swing Tesla for a few days if we can manage a move towards a 50-day Tesla. Tesla, let's see.
HSBT may rest in 10 seconds.
Oh, it's Royal Kingdom. It's this public game. It's free.
Oh God, I hate these stupid commercials where they tell you to play games on your freaking iPhone. God, that aggravates me. I don't know why. You got nothing better to do to play games on your iPhone? Ugh. Older you get, the more cranky you get. Things that bother you. You know, I would sleep to 8 o'clock. My dad used to kick my butt. He'd literally come in the bedroom. Get out of bed, boy. Come help me with the yard work or whatever, you know. Anyway, neither here nor there. I'm just sitting there waiting for the markets to do something. All right, futures are trying to push a bit higher right here. Futures, Tesla looks pretty good for the time being. Tesla's looking good. Let's go look at hedge flows. Hedge flows still rising. So we need a higher high, and this needs to trend the rest of the day if we're lucky. There's a level up here at 69.45. There's some levels at 68.75. And a little bit above that up to 6,900. If we can get to 6,900, that would be great. That would be great. Yeah. Rivian. Oh, it's 12:15 already. Wow. Where did the time go? All right, so futures are breaking higher. Futures breaking higher.
We spent a lot of time talking about the ripple effect of what Anthropic is doing and what they're building, and Claude for work and the impact on office. Okay, it's undeniably had an impact in this stock. Amazon says they're going to spend, $200 billion. Freaks the market out. The stock hasn't been the same since. Despite the fact that a week ago today we sat with Jensen Huang out in California ahead of the Super Bowl, and he said this is undoubtedly justified. It's going to lead to bigger cash flows down the line. The market's got this part wrong. Apple's coming off its worst day since April, so there's a lot to chew on over here.
Yeah. So, Amazon and Microsoft, I do own. Microsoft's a larger position in Amazon.
Tesla.
And candidly, I'm looking for the exit.
Hedge flows are still rising here. Tesla's right at resistance right now. Tesla's right at resistance. Here's the S&P. S&P, this is the make or break point right here. Make or break right here, right now. Okay. Watch MACD. Watch MACD. S&P at resistance.
So I have issues with it. I don't think I'm selling down here now. You can look at it and say, well, forecast is 24 times earnings. When has that ever been that cheap? But I don't know what the E is going to be anymore, and I don't know what the cap spending is going to be anymore. Seems to go on. For Amazon, so I'm not selling it here, but I am looking for an exit. I may turn around and sell it here in a week because it underperformed all last year.
It was down 17%.
All right, we need to get above 68.80. We're at resistance right now.
On that disruption,
Rivian. Rivian. RIVN. It's at the high right now. Rivian. 6 MA, 20 MA.
So the challenge here is this re-rating in what were, potentially some vulnerable valuations, and now there's actually evidence that we are going to have to re-rate these stocks based on kind of continued expectations of pressure on that free cash flow, which again, in both the equity and credit markets, made these, so strong over the last couple of years.
Yeah, and I see Amazon as, again, their cloud business possibly being beneficiary, but the spending you have to keep going through to get there sort of puts the ROI out further into the future.
Right, and AWS was up 24%, which is a great number.
But they still have such great belief that it's going to pay off. It's Matt Gartman, who runs AWS, was on the network in the last couple of days with John Ford.
Yeah.
Justifying what they're spending and how great the payoff is going to be.
Right.
It's the obvious corporate speak that you're going to get, but nonetheless, you have to take these folks, I think.
All right, S&P no follow through.
Until they're proven otherwise.
I think you do, but I don't like buying companies when they're in a major CapEx cycle. I like buying them when they're coming out of it, and I don't see where the light at the end of the tunnel is there.
By definition, return on capital
RTW.
is dependent on how much capital you're putting in. So we're putting in a lot more capital. What worries me most, honestly, about the last couple of weeks is that we got capital X raises across the board, and the semis.
Yeah, I'd reassess Rivian next week maybe, because I've been stuck in this one before. It's breaking a downtrend. Rivian. Daily. It's at the 50-day. This could easily drop back below the 50-day. RSI is rising. Let's take a look at Rivian numbers. RIVN. At least they produce vehicles. They produce. Okay, so yeah, the numbers aren't the best. Let's see what they had. They reported consensus estimate was a loss of 83 cents. They lost 66 cents, so an improvement in their loss.
We don't expect this overhang is going to dissipate quickly. Anytime somebody mentions a large number, the market's going to have to come to grips with it, and to this point, it hasn't done that well. It just hasn't.
Let me frame my response to this by noting that we entered 2026 quite worried, many people, about the valuation of mega cap tech. Well, we're not so worried about that anymore. Now these valuations have come down, Microsoft, Apple, Amazon, to the low 20s as we're talking about. Frankly, I think that is cheap enough to buy. If you're wondering why I'm not buying them today, is because they continually go down, as we're all talking about on the show right now. But that will change, and I think you just have to be patient here and wait for these stocks to bottom out. But Amazon, as an example of what we're talking about, is likely to be a buy pretty soon. Steve, I don't take issue with what you said. I think it's very wise that you don't like to buy stocks when they're heavy in the CapEx. I get that. But there is a point in time where you have to say, do you believe that CapEx will be monetizable, that there will be a return on investment? I am thinking about that Jensen Huang interview and the Brad Gerstner interview.
Okay, so we got rejected again. Okay, get rejected again. Can we get a higher low out of this? Can we get a higher low? All right, MACD's turned down, so you don't want to think about longs just yet. Okay, Bitcoin. I'm trying to hold the highs. Bitcoin. BITX. Bitcoin. BTC USD. Bitcoin. All right, so if we can break above these levels on the daily, Bitcoin might have something. Might have something next week. Maybe it moves high. I would think that it's going to move higher over the weekend. S&P, they keep trying to shake people out. It looks like they keep trying to shake the tree here. S&P. Okay, we definitely have supply and resistance at this zone. That shows up on the hedge flows. Okay, we want to see hedge flows make a new another high. It shows up on Gamma. Sorry, not the hedge flow. Gamma. It shows resistance above 68.70 all the way up through 68.90. Gets above 68.90, gets a little easier towards 6,900, and then you have this big one up here at 69.45. Maybe there's a short covering rally into day. Here we goes the S&P. S&P is on the move here. Nice little spike. They keep shaking the tree. Tree shake.
Utilities have done well. Industrials have done quite well. You bought more Leidos, Mr. Weiss.
Yeah, so the SAIC reported, and they always have sort of mixed quarters, one quarter's up, one quarter's down. On that quarter, and because of the nervousness in the market, you saw the stock trade down from about 190 to roughly 170, 172. On a percentage basis,
got to break above 68.80 here. We could get a short covering rally if that happens.
And we were both careful because they're in the quiet period. So I don't want to know anything about that.
All right, it'd be really nice to see Bitcoin rip. What's junk bonds doing? Junk, JNK. Let's see, junk.
Excellent. The new management's been there for about 2
Okay, looking a lot better. Okay, so we're into the noon session. So if this can maintain a bid, man, if we got above Tuesday's high, that would be awesome. I don't think it's going to happen, but at least we're holding the 50-day. So this sets up for maybe a rise on Tuesday. Okay, so this is looking a lot better. Let's see what breath looks like. Breath. Okay, better on the S&P. They're buying the S&P. They're buying the mid caps. They're buying the small caps. They're buying the NASDAQ. Okay, so that looks a lot better. They're buying. Okay, buying. For now, they're buying. Advanced decline percent. A lot of mental capital being used here. Not doing a whole lot of trading.
Expectations are lower. We just think that's a much easier place to be. We've talked about banks, Japanese banks.
Come on, let's push this. Push. All right, I'm going to take a 2-minute break. I'll be right back.
I was looking at a Goldman report from July of last year, and they had a price starting at $435. And I look at the stock today. This is Capital. So this isn't OpenAI. Now, part of it is that they are part of the tool belt for AI, and that's great. But I feel uncomfortable with the valuation here. And I felt uncomfortable with it at 680, maybe like 3 weeks ago. Right?
We just trimmed ABB, we just trimmed Santa. A lot of these names have moved very fast. You have to manage your position size always.
I think it's quite possible that the earnings beat expectations to a degree that the valuations we're worried about cure themselves. And I feel it too, okay? Like I'm looking at Westinghouse Air Brake, Wabco. It's been on a tear. And I look at the multiple and I think, really, a railroad equipment manufacturer in the low 20s? I have a feeling their earnings are going to really wildly beat expectations. And we may be looking at something that right now is in the high teens.
Right.
But
With cyclicals, you tend to buy when they're more expensive, just in the earnings
exactly.
and grow into the earnings.
Yeah, my issue is that I think they'll beat earnings, but I still don't think whatever number they price support of the valuation, it's going to be supportive of the momentum of the stock, right? So if they miss earnings, the stock could be down 20%, before you have a chance to hit a button.
All right, so we'll squeeze in a break. Stocks green across the board in terms of the major averages. All but one of the S&P sectors are green. So we've got a nice little turn here, and we do have more moves to get to, which we will do in the commodity space. Jim has another one to tell you about as well. That's all when we come back.
About 280 on the upside that you can potentially be profitable on this trade. So while you're shooting for 270, you've got a nice wide range on this one. Positive time decay. So as we get closer to expiration over the next week, the option that you're short will decay in value faster than your long option. And then you'll have that ability or potential to roll that short option to another week, collecting credits that increases potential profitability. But exposure to the upside in Apple back near the 270 level for a low cost entry point here with just under $200 in risk per spread on this bullish call calendar 2 weeks wide. I looked at something a little bit different, but a little bit more passive also, where I don't need the stock to move in my direction, in a specific direction. I just don't want it to explode to the upside on this neutral to bearish short call vertical that I looked at. Going back to that March 6th weekly option, so 3 weeks to expiration. Sell the out of the money 265.
Kimberly Clark looks good. Constellation Energy.
By the 275 strike call, you're going to collect roughly about a 290 credit. That's where it's trading right now. Make on this trade $290 per spread with $710 in risk on it, but it takes your break even all the way up to 267.90 to the
IOMX.
upside.
Okay, Robinhood. Let's take a look at Robinhood.
It's a little bit more aggressive, but at the same time, you're collecting a little bit
Okay,
more.
looking a lot better at Robinhood.
Yeah, this one really is a little bit more aggressive, Tom. The expected move up to March 6th is about $14.70, and you're $5 above the market. So, but that's an opinion. That's an opinion, right? There's trade-offs all over these, and when you sell something closer to at the money, the probability of out of the money just is
SNXX.
around 60.
Dividend paying ETFs, SPHD.
News is that gives you more premium.
That's rising, trending above the 921. It would have to stop. Would have to lose the 9 EMA at this point to get stopped out. SCHD, DIV. These are all rising, looking good. TRBCX, T Rowe Price Blue Chip, still below the 10 EMA. Okay. So this is clearly telling you that the tech stocks are the ones that are dragging because this is heavy on tech. TRBCX, T Rowe Price Blue Chip Growth. Excuse me. SPY, 10 EMA weekly, just sitting up here for the past, 8 weeks? Testing the lows, pushing back up. Feels like distribution. That's my one concern, that this feels like distribution up here. You get phase 2, which is the run up. Phase 3 is the distribution. Phase 4 is when we drop below. This is what's starting to show up. This is starting phase 4. Distribution was up here where it didn't make any new highs. Drops below the 10 EMA. 10 EMA rolls over. This is clear distribution. Now we're in the markdown phase in TRBCX and the New York FANG components. Okay, so you can clearly see what's going on here. Just like the start of 25 into the April 7th, April 10th reversal. Okay, this is clearly in a phase 4 now. Okay, phase 1 is the accumulation, the pivot, the turn back up is phase 2. Phase 3 is the distribution. We drop below the 10 EMA weekly, start to turn down. That starts phase 4. We're currently in phase 4. What follows is phase 1. We have to wait for the base. You don't see the base yet. Let's look at Microsoft. Microsoft, same thing. It's in phase 4. Need to see at least the base. Phase 1 is the base. Phase 2 is the move higher. Distribution doesn't make new highs, rolls over, drops below the 10 EMA weekly, starts phase 4. Currently in phase 4. NVIDIA, still distribution phase. I guess we're waiting for earnings. Apple, that one's kind of hard to read. This could go either way. Amazon, clearly in phase 4. Broadcom, ABGO, Broadcom, gradually grinding lower. Snowflake, pointed that one out this morning. Snowflake trying to bounce, still in phase 4. IWM, clearly IWM is showing most strength. It's above its rising. It's above its rising 10 EMA weekly. Small caps look good. Small caps look good. Okay, just look at the 10 EMA weekly. Look at the 10 EMA weekly on these stocks or these ETFs. Small cap consumer staples, bullish. Small cap consumer discretionary, above the 10 EMA, still bullish. Small cap energy, small cap financials, inside day, inside week. So this is three of 9. Healthcare is below. Industrial, small cap industrials is okay. Small cap materials, small cap information technology, and small cap utilities. So we got 4 of 9 sectors that are bullish, that are bearish, sorry, or neutral. 5 are looking pretty good. 5 are looking okay. So small caps look better. Small caps look better. New York Stock Exchange. New York Stock Exchange on the weekly is still at highs. Got a warning signal yesterday, but could easily be rectified depending on how we close today. Number of stocks moving higher. Number of stocks moving higher today on the S&P 500. 420 stocks are advancing. The Qs, 85 are advancing. IWM, 1,000 are advancing. Majority are rising.
When we look at Netflix, our data shows a little bit of a declining growth rate, and the stock is showing that same level of weakness. We think the stock is priced about right, and Netflix, you have to give the benefit of the doubt too from a long-term perspective. Short-term, we think that there's probably more pain and more, just kind of grinding lower in the near term, but long term, you have to give them the benefit of the doubt because they have shown the ability to execute.
We're talking some very, very big numbers at the rim when we come back.
All right, so the New York Stock Exchange and IWM are at highs. Okay. On the weekly, IWM, Qs below the 10 MA, and SPY below, just barely, sitting on top of it. The bulls still have an opportunity to push this back up. But the problem is we've been like 8 weeks in distribution up here. I got a feeling we're going to see some weakness. I would be figuring on it. I wouldn't be too cavalier, thinking that the markets are just going to keep moving higher.
On this deal, and there's some negative sentiment going on around this. Do you think that's a short-term issue? And is there a relief rally in its future? Or, like we learned in Disney, like we learned in a lot of other these streamers, this is just a bad business. Which one do you think it is? Can any of these companies really be winners? Or are they all just chopping each other up, racing to the bottom?
Yeah, it does feel like that a lot of times. Like I said, there's only so much we can watch. I mean, I think that we've gotten to the point where, everybody's pretty saturated with entertainment options.
You may resume in less than a minute.
So there's only so much demand growth that can happen there, but the supply growth continues to, be unbelievable. Like it's one of those situations where if you, think back to 20 years ago, or longer, I'm dating myself, 30 years ago, you're waiting. Seinfeld and Friends is going to be on Thursday night. I can't wait.
S&P.
4 days away. Now it's like
Got to get above this level. We're starting to push through. This could giddy up pretty quick here.
It's a embarrassment of riches at this point for the entertainment consumer, and I think that speaks directly to your point. Is that there's an enormous amount of supply chasing demand levels that are already very high and going to have trouble growing. So how do you continue to
Boeing turning back up. Come on, S&P, let's go. LETSGO. LETSGO.
So what Netflix has to do is they have to redefine how they monetize those users through their app platform.
Tick cumulative has just turned back up green on the 60-minute. That's telling you that more stocks are being bought.
Could allow them to raise those prices significantly. So I think they're on the right track. They have the right strategy. It's just, like you said, an extremely tough business.
Andy, I too love the way you characterize this at the top where you say we only have 2 eyeballs and at most 2 screens. And like, for instance, I think of my son and it drives me nuts when he's like watching 2 screens and I'm like, just pick one. A game on one or watching a game on one, playing a game on another device, or for instance, watching Netflix and then doing something else. But so the point where you mentioned about,
Oh,
Sounds like underestimating Netflix wouldn't be the best
SNXX.
view long term, but that we should expect more turbulence
come on.
in the near term.
They got to push it through this area if we're going to get any kind of short cover rally up here. There's stops overhead. Tick cumulative is still rising.
Do you think that that just will contribute to continued churn in the near term, but longer term, this will all work itself out?
Yeah, I think so. I think that what, as capitalists, as investors, we have to default to the market will eventually figure this out. Things can be mispriced and resources can be misallocated in the near term, but long term, the winners are going to win. And so that's why I said, when I look at Netflix, I see a team proven.
Still having difficulty pushing through this high.
Basically invented the space.
Still having some difficulty right here. Resistance.
To overcome, really significant challenges over and over again. And they have the distribution, the name, etc.
They're going to do it. They need to do it soon.
Any storm. So kind of them and Google's YouTube at this point, I think, are the two that you could say, if this stays turbulent, who's most likely to come out looking really good on the other side? You could throw Disney, of course, into there as well. But those three names, you kind of have to just lean on the giants that have proven themselves in the past. And Netflix certainly belongs in that conversation, despite what's going on now. And a lot of times, if I think back, as an investor, as an entrepreneur, someone who's just very interested in business, a lot of times these, turbulent times, we saw it with Amazon, we saw it with Google, we saw it definitely with Tesla. A lot of times, for the truly great companies, this type of process can make them even stronger and come out with an even more of a moat behind them that they can add profits to on the other side. So near-term pain could actually turn into long-term gain, and I think Netflix is in a position to at least make that argument. And especially with the stock down at these levels, I think that long-term investors can start making that argument.
Andy, really quickly, if you were to score this one now, what score would you give Netflix? Are you guys, I'm assuming you're not bullish on this, but you tell me.
Yeah, no, we're
more like the Alphabet story, which merged Waymo
MARA.
and YouTube, which were
Watching for a pop here.
SNXX.
So when we had the private
RGTX.
story that came out,
SNTK.
private company
QPT.
XAI merging with SpaceX, that was huge.
POAS may resume in less than a minute.
What happens next, I think, is the big question. Because if you look at all these other properties that Elon has launched, all of which are making revenue in and of themselves,
EIU may resume in less
that's
than a
one
minute.
thing. But his ambitions are huge. They're capital intensive.
Watch Bitcoin. If Bitcoin goes here, that would help.
And commercializing that, we're talking about even bigger money that's required, which is why going to the capital markets makes sense at this time and rewarding all of the success that SpaceX has had up until this point.
Can I ask you, as an investor, how would you go about thinking how to value SpaceX, especially at this merger with XAI? Like, what is
POAS may rise in 10 seconds.
Is there a comp? Is it tech? Is it aerospace?
Futures are trying to push up against the highs. The shorts must be getting a little nervous up here.
I think it's adding, one
SNXX may rise in 10 seconds.
5, in this case, but can the market achieve a valuation that's acceptable if they combine forces? Because they're all valuable in and of themselves, and if you think about the value
MARA.
in the trillions, and of course factoring in the future plans, that's a big question. So is there a comp? No, I don't think there is one. This is really a story of our lifetime, right?
Okay, we're pushing higher here. S&P higher. Okay, we're breaking higher.
And of course the physical and digital story of what they can accomplish.
As an investor in SpaceX, I'm curious, when you saw, okay, they're merging with XAI.
S&P new highs. We're looking for a high tick alert.
That makes sense. That makes sense financially. That makes sense strategically. It creates a stronger story overall.
SNTK.
Or did you think it complicates the narrative? Walk me through it.
No, I think XAI and their
SNXX.
plan, which is the digital side of connectivity for a whole universe that they're trying to build for us. When Elon talked about it in his all hands, he said he wanted people to live their life on the app, XAI, and they just introduced the money side of this. It all flows together, and it did make sense to me.
XNTK.
But now, what does it mean for an IPO and the value and timing? Not sure, because the original thought was middle of the summer, I think.
Let me ask you, I want to get your take on these headlines we saw this week. Reports of departures of XAI, co-founders, that's coming after, it looks like several other.
All right, so not surprising, taking out a little stops here to see if we can follow through now.
It wasn't to me because I am a founder and I've never seen
What it does appear to be is, here's the 60-minute. 60-minute looks pretty bullish. 60-minute looks bullish. Okay, S&P 60-minute. We keep trying to get through this area and get rejected.
I'm curious, the SpaceX investor, and you outlined all these grand opportunities and ambitions, and that's why you saddle up with Elon Musk, because he swings for the fences, right? I'm curious, though, before you put money to work, what were some of the risks you brought out of SpaceX? Was it, I don't know, was it national security concerns? Was it regulatory issues, competition? How did you frame it?
Well, I would say that the government was one of the biggest challenges for SpaceX because they were going to provide a service, but they had to prove they could do it. They had to prove they could do it at a lower cost and then reliably. So they've done that with cargo and then crew missions. And now
This is Lisa Rich from Explore. I don't know that they're a public company. She's talking about XAI and Tesla and Musk.
Getting mass into orbit is so phenomenal. Can they do that for the moon? And that helps us actually have a reliable launch cadence that lowers the price. That helps us have a real commercialization story. So there is a commercialization story that's happened with launch today because he's been able to get so many companies to launch. And then as you're thinking about orbital data centers in the future, which is huge mass that has to go to launch, that's huge cost. And we need Starship going and regularly. So that's kind of the next phase. So he's proven what he's done. He's faced, lawsuits and whatever. He's had all the challenges with constraints with government side of things and proven himself. So what if he could prove this again and really enable Artemis and the work that they need to do on the moon and get it to be that commercial story that we've all been hoping for?
Lisa, coming to us from a Tesla via Starlink, what better way to talk about all things Musk. Thank you, Lisa, as always.
You're welcome. Thank you, Josh.
You may rest in 10 seconds.
Did you know you can get money back when you shop online with Top Cash Back?
As I just said, this is a long-term play here. This isn't about whether Vegas is having a good quarter or not, or Macau. This is about the United Arab Emirates. They are the first company to open a resort there. Disney's going to follow them. But this is a wide open, unplowed territory, unplowed field for them. And they have the first mover advantage. I think the street's paying attention. So I don't like, if I ask a follow-up question. If you've got such a long-term view, and I know that's what you do, why would you take any opportunity of weakness in the stock? Because it's only momentary, according to you. Rather than buying it on a plus tick, you have the opportunity to buy it on a down tick. I love your question.
Let me also, before you answer it, suggest that, Goldman Sachs reiterates the stock as a buy today. And they say the pullback creates a compelling risk reward. So,
And the pullback that I think they are referring
Sure,
to.
the one we've already
answering
had.
your question. Yeah. Right, exactly. Remember I cut this in half a few months ago at 126?
Okay, KMB, Kimberly Clark, KMB. All right, following through. That looks good. Constellation Energy. Constellation Energy. Okay, Constellation Energy with a big move today. I have the 320, 330 call for June. That's up quite a bit today. Looks good. Rig, I have the 4 call for September. Rig. Rig also looking well. Rig is on the move. They're attempting to acquire Valaris. Valaris offshore drilling. That would make Rig the largest offshore drilling contractor. So that's really good. Rig is moving higher on that this week. Rig looking good at the highs of the day.
RCLT.
Okay, Rig looks good. Let's look at the 60-minute. As you know, whenever I'm above the 20 EMA on the 60-minute, I'm always looking for dips to get bought. You can see each one of these dips. Once it dips below, you probably get stopped out on a previous trade. But the return trip, that gives you another long opportunity. Put a stop underneath the 20 EMA. Look for this to continue to move higher. As long as you don't stop below, as long as you don't close below the 20 EMA. This is very bullish. 20 EMA is bullish up and to the right for Rig. Acquiring Valaris. Trying to acquire Valaris.
RCLT.
Okay, looks good.
BURU may resume in less than a minute. QAS may resume in less than a minute.
In the short term, and also put the spotlight on financial planning in the long run as people plan on their retirement. The risk of inflation can be a killer, and it can silently drain your assets.
RCLT.
Avoid this problem. Your health founder and CEO of Nine Capital Group.
All right, this looks really good. Rig continuation. Lots of volume that shows the institutions are interested.
I think everybody, you go to the grocery store and things are more expensive than they used to be, but the calculation changes when you're in retirement, when you're on a fixed income and drawing from your investment. So how do people have to account for this?
You're absolutely right. Thank you guys for having me. So,
QRU may less than 10 seconds. RCLT may less than 10 seconds.
senior markets commentator, overtime co-anchor Mike Santoli joins us with his midday word. I had your early word right next to you this morning in the 9 o'clock hour. We've made a nice move since.
Yeah, we have market trying to kind of get back in gear, and it's just definitely still having to absorb some weakness among the big guys. We've had 3 notable pullbacks this year so far, Scott. The S&P 500. Every one of them stopped at the same place, which is just under 6,800. Every one of them basically stopped before it got to a 3% pullback. So I guess right now that's the rule. At least you make an attempt to buy a 3% pullback. It's the 100-day average. So that's one kind of trading mechanics part of this. And then I guess coming into the week, there was a chance that the jobs number, the CPI, could go the wrong direction and start to kind of paint a stagflationary picture. Both of them probably upside surprises or pleasant surprises in the sense of not being as bad as feared and holding together along that Goldilocks line. So all that, put together, I think helps. We'll see. It's still got plenty to prove here. I still think it's market's been kind of lucky to avert more danger, but so far it's doing so.
So we've gotten through the meat of the economic
Semiconductors looking good. Thank you, dollar.
right? The jobs report delayed, and now we have CPI, and we've gotten through the heart of earnings. The most important companies, by and large, have reported, except for one.
S&P backing off again.
Me too, waiting for Nvidia as the next big catalyst for what has been a tricky trade in AI.
It'll definitely be the focal point. You go back a few quarters, it hasn't necessarily been a market-wide inflection point, but it's at an interesting spot. I mean, NVIDIA is exactly where it traded 6 months ago right now. Somehow the rest of semis have managed to keep things moving forward. It's obviously seen as, shifting fortunes within that. So that's part of it. And obviously memory is taking up the mantle. What I'm also watching, though, is the stuff that was first hit on some of these AI fears and in the pullback in January and February, if they will continue to respond to these oversold conditions and rally beyond today, beyond just a little bit of a reflex short covering down.
Yeah, well, we've had buyers of several of the names in those baskets, so we shall see, at least certainly on our show. Michael, see you later. Thank you. Mike Santoli, finals are next.
Absolutely explode for people later in retirement, especially.
Let's see, Valaris, V-A-L-A-R-I-S. Valaris.
And especially with the enhanced deduction that we currently have with the O3BA.
V-A-L.
I mean, you can do very good Roth conversions using the enhanced deduction to offset some of that cost. I think that's something that's often overlooked.
I like that O3B or OB3 for the one.
Yeah, I'm called O3B.
I like that. I like that nickname for it. I don't know that I've heard that as of yet. So as people come to you and they're trying to plan for those retirement years, what's the biggest question that you get?
Valaris taking off to the upside.
That's something that you really have to educate them on.
The most important thing I educate people on, like I just had this recent conversation, is that what happens when you're no longer there? Those marginal tax rates and the compressed tax rates and then the ARMA taxes that people are going to feel, they don't necessarily see that. So that's the education piece. And on top of that, the most important thing is taxation inside of retirement. We start with the tax plan. So taxation inside of retirement.
S&P pulling back now from that resistance level. So that's confirmed resistance at this point.
POAS may resume in less than a minute.
Moving forward from a tax perspective, especially when we're talking about Roth conversions, how much money you should distribute from the account, and basically just maximizing those.
Okay, rig. Let's see what Tesla's doing. Tesla off the highs. Hit the 200-day moving average on the daily right there. That's the hourly chart. Sorry, that's the hourly. Daily. The daily chart. Okay, we're not quite there yet. We're above the 200-day, below the 50-day. That's the 21-day overhead.
PRU may res in 10 seconds. POAS may res in 10 seconds.
For investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market.
Nice little bounce.
Get more. With Schwab Bank,
Keep testing this level overhead. We've got resistance overhead on Tesla as well. S&P 500 rejected. Kimberly Clark at the highs. Kimberly Clark, Keurig, Dr. Pepper. A lot of these consumer staple stocks doing well. Keurig, Dr. Pepper, Walmart. Walmart at the highs. I have 180, 135, 140s now. Had 130, 135 earlier. Yesterday, took some of that off into strength because I was right at the 135 strike, just below it. Maximum profit. So sell into strength.
You're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize
HSAI Robotics, looking for that to continue higher. HSAI, Chinese company. Robotics.
really been there to answer any questions I ever have. Makes a huge difference when you have someone that
Like to see that much higher. Netflix on the move. Microsoft's just off the highs. Microsoft needs to get above that 60-minute. Microsoft needs to get above the 60-minute. Okay, it's starting to look more and more like a higher low or a double bottom. If we can manage to get above 410, 420 potentially, and then 427.
Everything investors need, all in place. Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management.
Still 410 stocks advancing on the S&P 500. 85 stocks on the Q. NASDAQ 100, 85 stocks advancing. More than 1,000 stocks on the IWM. IWM catching a lot of the bid today. Back above the 20 EMA. Tesla trying really hard to get above this level. Microsoft needs to get turned. Microsoft. Dexcom taking over the number one spot. Dexcom. Looks like that's going to keep going. Dexcom. Let's see what that looks like. Dexcom earnings. Reported in line. 51% earnings growth, 13% revenue growth. Estimate was for 65 cents. They beat by 3 cents. Let's see what if they guide here. 516 to 525 billion.
Welcome to Next Gen Investing. I'm Jenny Horn, and of course, happy Friday. Let's check in on markets to kick off the next hour as we are seeing now some firming up of the overall indices. We are higher by about 0.5% in the S&Ps, Nasdaq 0.4% higher, the Nasdaq up 0.75%, and the Russell 2000 up about 1.75%. So attempting to at least end on a more bright spot after a week of pretty substantial losses, actually very reminiscent of what
$2 billion in cash. Okay, looks good. Dexcom looks pretty good, actually. I wouldn't buy it right now, but maybe next week. Dexcom. Bullish engulfing candle was briefly below the 50-day this week and then turned back up thanks to earnings. Applied Materials, MSTR, trying to come off the low, MSTR, BITX. Bitcoin 2 times, strategy ETF. All right, we're starting to taper off at the high of the day, BITX.
Prices coming off. So it does look like very favorable as far as some of the pricing in now of maybe some more Fed rate cuts, or at least confirming that the Fed can stay on hold for now and obviously go. I think a lot of the story with that sort of mid-morning comeback that we saw for stocks had a lot to do with what we're seeing in the yields today. I mean, coming off about 4 basis points or so on the 2-year and the 10-year as well. I mean, we're at the 406 or something on the 10-year and the 2-year at 340, 341 as well. So
Tesla, looking for more upside, Tesla.
we started off the day with, as you mentioned, the AI disruption fears, this phantom trade as they've been calling it, which has sort of rippled through a number of sectors this week, everything from softwares where it really started and then through real estate, wealth managers, financial.
Okay, fade in the S&P. S&P 500 fade. If you were thinking about a hedge, the place to do a hedge is up at the high of the day. I currently have the 650, 640 put spread for December, end of the year. 650, 640 on the SPY. In case we do have the 20% pullback that everybody's looking for.
CrowdStrike as well. Look, not too much to say about the Max 7, although we had looked across the entire space red this morning. We have got names like Amazon picking up off the back of, I believe it's been about 8 days of decline today. Tesla is up as well. Microsoft is also picking up as well. There had been some concerns around some of those looking like they were in correction. We've seen a bit of a pickup across the memory space as well. Look, interest rate sensitive parts of the market. Look at the Russell 2000, the small cap trade up 1.7%. That's very much an outperformer there. You look across REITs, they've been having a good day as well. As I said, on the Fed cutting expectations, certainly around the middle of the year, we're looking very much at summer, but you know, pricing in 2, perhaps even 3 now. And just looking across the sectors, I mean, we have looked pretty earlier in the day, we had seen some of that drag, certainly coming from areas like technology, but I mean, technology sector is on the line just to the upside right now, but you've still got those defensive trades like
CPI better than expected this morning.
Utilities absolutely flying today, up 2.6%. Materials also higher as well. So it does look like that trade remains very much.
This is what I was concerned about as well. It's a textbook sign of distribution, big players selling into strength. Okay. There's an air pocket below 6,800. These are the things you have to be aware of.
Very, very early innings in this year, so a lot could change as we do know all too well. But our first name today to focus on here is Roku, which is a clear winner here on the back of, I mean, some encouraging results, ad strength, platform expansion. This then supporting their profit outlook, and I've seen really strong analyst commentary following this report. So up 7.4%. Finally, we get some green to discuss today, Sam. So I mean, walk us through your thoughts on this report.
Yeah, I mean, look, expectations were actually low going into this, and so it's a nice pop today of around 7.5% currently. obviously. It's a good story, you could say, Jenny, within the streaming space right now. The street likes it, analysts like it. It handily beat expectations here. It was a beat and a raise. So by the numbers, we got 53 cents on EPS versus just the 27 cents that had been estimated here, and the revenue up $1.395 billion compared to the estimates of $1.354 billion. So as I said, it was a double beat there. The platform raked in 18% as far as that revenue is concerned. Devices, 171 million there, up 3% as well. So overall, as I mentioned, 16% increase in revenue there. In actual fact, record subscription signups during the holiday quarter. So that was very encouraging. Strong demand for premium streaming bundles as well. They reported a strong outlook for Q1 with 21% growth as well. So how they see things in the future is very positive. The CEO has been talking about the growth coming from the investments that they've made over the last few years, very much in their core business and the growing ads business. So that strategy seems to be working for them. The subs are really important for them, obviously, and they say those investments are very much paying off while maintaining, they say, disciplined OPEX. So as we know, it's a good story in what has otherwise been, a tough time in the streaming spaces. We have seen that consolidation and also a lot of the disruption, but this was a good quarter in the face of all of that. So you could say that's a big win. Let's talk about what the sell-side analysts are saying here, because you had JP Morgan reiterating Roku as the top pick now, overweight rating with $125 price target. They think the platform revenue growth of 20% in 2026 is still very much on the table here. MoffettNathanson looking at raising the price target now from 90 to 100. They've still kept on the sidelines here with a neutral rating, but they say that this model is relatively safe near term as far as the market fretting about the future disruption that AI will wreak in this landscape. They do say that this remains relatively safe. So Piper Sandler has raised the price target to 140 from 135. They're overweight on the shares. They have seen that this is really consistent messaging around growth in the ads.
All right, so Prepare still looks like distribution, selling into strength.
And plus mid-teens increase in streaming hours is beginning to strike a chord as well. So they're quite encouraged. And then you had the Rosenblatt folks also to buy from neutral with a price target of 118. So it does look like the sell-side analyst community commentary is pretty favorable here.
And absolutely, and I've seen the same thing. I mean, nothing but only supporting a really strong earnings report from Roku, which I have to say, I'll channel Alex Coffey, who has always been a bit of a skeptic on the growth of this business model. And frankly, I was in that same camp, but they've proven time and time again that they have a resiliency. And I mean, more and more you see ads on your Roku, like the startup page, and now I'm just kind of accustomed to it. And I think it's brilliant because it's such an easy way to target so many people at a relatively low cost. So suddenly I'm a Roku supporter, I guess. But our next name here is really our standout leader of the day, and that is Rivian, which is up 26%. And we know 2025, especially in the latter part of the year, was not a very easy or very market-friendly environment for these EVs, especially with those incentives rolling back. But amazingly so, they were able to frame, I mean, not only just their last quarter, but everything that they're expecting now for 2026 in such a positive light. When we've talked about, I mean, like the write-downs from EV tax credits, like Ford, GM have all been facing, and then you have Tesla, which has also had some pressure with its growth story. Rivian, though, coming out of the gate today with, again, a huge move to the upside, Sam.
Yeah, this is just such a fascinating and such a positive story in a world where there's a lot of analysts out there who are wondering how these pure play EV makers are actually going to survive in an environment, as you point out, which is looking more favorable to sort of the gas guzzling vehicles now away from the EV makers. So interesting report here. Obviously, we're seeing shares on an absolute tear up double digits at 26% here. Let me run you through the numbers. Revenue of 1.29 billion versus 126 billion.
All right, we're moving back up now.
EPS of down 54 cents. Basically, we've seen them reporting an adjusted loss, but it was less than the market had been anticipating. So that's the good news here. It's not just about what they did in the quarter, but it's what they're saying about the future moving forward here that I think is very encouraging. Look, they do project 2026 as a pivotal year, they say. They've talked a lot about the R2. This was, obviously a big focal point going into the report as well. They're looking to wrap this up in Q2, thinking that this could be the majority of volume in 2027. In total, they're expecting to hand over 62,000 to 67,000 vehicles this year. That's a
laid the foundations for a lot of this to scale the business. So they're expecting the gross profit to increase year over year. And also, they've talked about the complexity of the new vehicle launch to negatively impact their gross profit in the second and third quarters before becoming a benefit to their overall operations. Now, as far as what they're seeing here with respect to the
S&P. All right, I'm not doing anything. I'm just waiting for a clear signal. We're just we're bouncing again. Bouncing again.
16 here, they see early signs of the company's prospects are inflecting. So back to that inflection point that they noted. They say that 2026 looks to de-risk as volumes expectations are reasonable and the vehicle costs continue to improve here. They say that the R2 launch is on track for Q2 at a time when competitors are slow walking, they say, their electric vehicle transition. So Deutsche Bank likes it. Over at Piper Sandler, they've actually lowered the firm's price target to 18 from 20. They've kept a neutral rating on the shares. So a little bit more of a cautious note from this one. Sitting on the sidelines here, they call it respectable Q4 results. But I would say that, as I mentioned, going into this, I've spoken to analysts, and they have been a little bit concerned about the pure EV makers because of the slower pace and the shifting dynamics that we've seen here. They do have, of course, the R2, that EV on deck, the lowest price vehicle yet, but not convinced, as far as some of the analysts that I've spoken to, that that's going to turn things around for them, just because they feel like, this is what one analyst told me, that the market is still going to be relatively limited. So I think we'll just have to wait and see on this one. But so far, it's a good report, and it's being rewarded today.
Okay, so then on really the flip side here is everything that we're seeing out of Pinterest. So Pinterest down 18.6%, adding to the fact that we are now down almost.
Okay, New York Fangs are looking a little better. Man, they really need to get going. In order for the S&P to hold on to this level, hold on to this bounce, we really need to see the New York Fang participate. Still don't have that participation. Nothing more than a bounce right now. We had a bounce last week and it failed. Into Monday, the bounce had failed. Okay, MACD, stochastics, everything's reset. So there is a possibility we catch a bid here. Boy, that would be something.
Really around the monetization right now. And so as far as the reaction, it is not getting rewarded. It's getting punished today, down 18%. I mean, that chart we just had up looks a bit painful. It's got downgrades for JP Morgan, Loop, and BFA as well. So just by the numbers here, I mean, we had adjusted EPS of 67 cents versus 69. So a miss, revenue of 1.31 billion versus 1.32 billion. So a miss there. Revenue guidance undershot expectations as well. So let me run you through what some of the analysts have been saying, because actually there is a long list of analyst calls on this one following this, particularly around the downgrade. So BFA has gone to neutral from buy, price target of 19 from 39. So it's quite a step down here. Basically, they pointed to the competition, the folks over at BFA. They expect AI-driven competitors like Google and soon OpenAI to be increasingly competitive, they say. They talk about the margin expansion cycle appearing to have reached an end, impacting that EBITDA growth. So those were the folks over at BFA. Citi's also gone to neutral from buy, price target now of 19. So a similar move and leg lower as the folks over at BFA. Then you've got Evercore ISI, which has gone to in line from outperform, price target of $25. So not as low as the others from 40. They've cited the Q miss for the downgrade. They say the fundamentals are clearly deteriorating here. They're also increasingly concerned here about the company's competitive intensity rising from the Google competitors and possibly Reddit and other platforms there. Now, JP Morgan's also gone to neutral from overweight. They've got a price target of $20 from 36. They're looking for Pinterest monetization initiatives, as I mentioned. So that has obviously been a big focal point. They need this to drive improved financial performance before again recommending the shares here. So diversifying the company's advertiser base and restructuring the sales team, they say, will take some time. Then you've got the folks over at Loop downgrading Pinterest from to hold from buy, $18 now, disappointing miss and lower report, they say. They say it's the enthusiasm for Pinterest's unique use case, commercial relevance, and strong user growth story that has been overshadowed by the struggles to monetize here.
exposure to unusual macro conditions they've cited, also noting the company is increasing its spending outlook and thinks this will take several quarters at least to restore investor confidence. So you can start to see a little bit of a trend here as to what the sell-side analysts are getting at here with the competition, the monetization efforts here, and just taking several quarters now to really prove themselves. You've also got Piper Sandler has lowered the price target now to 21 from 33, also keeping a neutral rating here. So a few downgrades, obviously not a great report. It's being reflected in the stock today. Disappointing to my own user experiences. I am at least contributing to some of the activity on Pinterest myself. But our last name today, Expedia. Now, Expedia is lower also by about 6.7%. So, I mean, overall falling after earnings did actually beat, but signaling some strong actually guidance as there's still some enthusiasm tied to all of the various events coming, like the World Cup, for example. So that was clearly not enough to offset, I mean, some of the difficulties. I have read varying opinions about how it could be a year of...
All right, right back up to resistance.
And so I think this gives a great read on broader travel, but also, is this all an AI disruption story? Because I do know that some of these OTAs are going to be challenged by the fact you can do a lot of this now yourself. And you actually mentioned the World Cup, because anecdotally, I've been hearing about people trying to actually book trips and hotels over the summer domestically, and things are looking pretty expensive, and they're putting it down to that. So really interesting.
Okay, it is 1:20. I'm going to take a quick walk around the block. It's about 20 minutes, about 10 minutes. So bear with me. I'll be back. The markets are just grinding back up towards the highs, looking for a break above that resistance zone. Otherwise, it's kind of a boring day.
SNDK, FLQS.
Optimization, they call it. So basically, they've had a few things that they've ironed out. Obviously, we are aware of some of the job cuts as well. So that's what the company has to say. As far as the reaction today, as you say, is down in single digits, so about 6.5% right now. But the analysts have come out and actually lowered the firm's price targets here. So Piper Sandler has gone to 225 from 250 here. They've kept a neutral rating, so they remain on the sidelines. And that is because I believe that they're offering a more conservative full year 2026 guidance that implies a slowdown in the second half of the year growth and margin improvements as they lack that optimization benefit from 2025. So they just need to wait and see on that front. Wells Fargo has also lowered the firm's price target here. 315 now from 329. They've kept an equal rating here on the shares as well. They do acknowledge that there was another solid quarter of execution from the management team with this clean beat and raise, but somehow capping the positive reaction has been the fears persisting on the changes to AI travel planning, which is super interesting. So I think, maybe more to show on
VURU may res in 10 seconds.
with these price targets that have been lowered. I mean, certainly the folks over at Wells Fargo still looking at 315. I mean, it still does imply some upside here, but it just looks like there are a few challenges that remain to be seen with this name, and just basically the whole travel space, particularly with artificial intelligence, and just seeing how things go, particularly with some of the macro and consumer trends and challenges we've been talking about.
No, absolutely. And I think that is going to be something that's felt. I mean, we've seen it from a logistics perspective, an ad perspective, a tourism perspective. And I think that finally starting to talk about the real effects of, sure, the technology is a boom for, any tech name, but that's not necessarily going to be as evenly felt by some of these other major sectors of the economy. So I think great place to leave it. So appreciate it for all the commentary all week long. Sam Bottoms, of course, joining me to kick off our show today and every day this week. Now, coming up next, we'll stick there with that broader travel conversation as we'll be diving into the charts as well as the example trade
ORCX. SNXX. ORCX. SNDK. ALAB. LABX.
Stay connected to what moves
SNXX.
markets. Download the
BOIL.
Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place.
EOAS.
Like Schwab. Everything investors need, all in one place. So again,
SNDK.
at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York
RIG.
Stock Exchange, only on Schwab
EOAS.
Network. Welcome back to Next Gen Investing. It's now time to look at the charts of two of our major cruise operators. Joining us for that is Rick Ducat, our chart master today. And so, Rick, we will start off here with Norwegian Cruise Lines with some continual shakeup, honestly, from a leadership perspective. And this name has pared back some of its session losses. We're still down 5.5%. But unfortunately, for the case of Norwegian, it's also underperformed Carnival and Royal Caribbean for the last 52 weeks or so. So walk us through the technicals that we should be keeping on our radar.
Yeah, that news seems to have thrown things for a bit of a loop here. Now we can see as we look at our chart, we have a triangular type shape here where our two boundary lines are converging toward
EOAS.
each other, more or less a symmetrical triangle type shape. There's not really a particular directional bias in this case. So what this suggests to us is that prices are compressing in an increasingly narrowing range without really having a strong directional bias in this case. So we do have earnings coming up here. We are kind of drawing close to some form of conclusion to this pattern one way or the other. And really, it doesn't have to mean a big breakout. It could just keep going sideways beyond the pattern. It's just these are the kind of the breakout points that you might be on the lookout for if you are this type of a pattern trader here. So what we see here now is our horizontal lines. 22 roughly, our red line there, that's about where we are right now. That would be a notable area to break below because that's our trend line here to the downside. So now we can also see if we were to move below that, our supported areas in question would be 21, 20, 30, and 1950 are the ones that are closest that we could see a potential test of if we were to break lower. The closest being our 2030 level representing our relative lows after we
PURD may
had
rise in 10 seconds.
down about a month ago or so. To the upside, though, if we do start moving upward again, we would fill that gap near 2265, and then the level there from there that we would see next would be 24, and then ultimately those highs near 27. So when we look at our next chart, we can see that our moving averages, as I was saying in our first chart here, they're all converging toward each other. They're consolidating. They're moving sideways. They're all between roughly 21 to 23 or so, 22 to 23 almost. So that suggests that there is consolidation of price activity. There's no strong momentum or direction one way or the other. RSI also illustrates this. Our momentum indicator that we follow shows a very similar triangular shape here. We're very close to the 50 midline, just a hair below it here. So a bit more of a bearish bias in this game at this time. But if we start making a big close below some of these notable levels, that could really change in a hurry. Volume profile finally shows that we do have a lot of notable volume activity here. The downside, though, 20, 50 to 21, that's kind of that last little pocket pocket we have of support before the heavy trading area down near
Oh,
19
yes.
is our volume profile point of control. Meanwhile, to the upside, 23 to 24 really is a heavy pocket, and then above 25, things really start to thin out, Jenny.
Okay, so as we think through now trading this name here, and again, given the weakness, given the underperformance, frankly, over the last 52 weeks, as we're down about 17%, how do you think through trading this name for example purposes?
Well, so if we look at our chart here to kind of assess where we are in terms of the extremeness of the move, price is very close to the linear regression line.
yes.
So kind of the idea of fair value, it's not really a significant departure from where one might expect it to be based on that indicator. We are a bit below it, though. The news is not exactly good. We're getting downgrades today. So perhaps more of a bearish type of trade might make more sense for an example to look at. So March 20th, our yellow box there, 35 days out, plus or minus 17.3% roughly is our expected move. So in this case, we might look at a bearish example trade here. Plus one,
yes.
March 20th, 23.18 strike put vertical and a 225 debit here. So a bearish outlook, as I said, max loss would be the debit paid 180, max profit would be 320. So not quite 1 to 2, closer to that ratio there. The break even 2120, about 3.6%, 3.5% to the downside. Our expected move, as I said, 17.3 would well encompass that. So the reason we chose that 18 strike for our short strike as well, that lines up with the edge of the expected move range. So if you're looking to defray the cost of the spread, you can include that short strike to pay less up front, or you could leave it off and just have the higher profit potential at the expense of paying more upfront. So really, it's you can kind of customize things depending to your risk tolerance here. If you're going to choose an edge for your vertical strike, though, the edge of the expected move range, that would be one place a lot of traders would start thinking about it.
Okay, so now as we look at Carnival, which has also been, a fairly strong performer, this year is still about 4.5% and up another 7% so far this month. We are lower by about 1% today. We also have pared back substantial losses seen earlier this morning. And so walk us through this name from a technical perspective.
A quite different chart here in this case. What we have now, a rising wedge type shape where we have our two trend lines both pointing upward, converging toward each other. I shouldn't call it a trend line going across the top, a boundary line, let's call it. Just trying to illustrate, we have gradually increasing highs and our lows are increasing much more sharply, suggesting anxious buying activity and perhaps more consistent sellers. This is usually a bit more of a bearish type of setup is how people might look at it. As I said, though, it can go either way. These things are not set in stone. It's not a crystal ball that tells you exactly which way the price activity is going to go. In this case, we have some horizontal lines we should be considering first anyway because they're closer to our current activity. So our red line, 3250, is a bit above us right now. Our second red line near those highs, 34, that would be the ultimate boundary. Many of the bulls would be looking to break above here. We had a pretty consistent ceiling, 3250 to 33. We tested above it. Now we have pulled back to our prior lows, 3150, our first green line there. You can see that we are, for now, holding on at that level. If we do break lower, the next notable area is 28.
You may rest in 10 seconds.
There, many times during the past 9 months or so. Now, when we look at our moving averages in this case, we are starting to moderate and trend a little bit lower here. Our fast 5-day weekly EMA in dark blue is starting to trend downward here. Prices closed below it. So a bit of a sign of potential trend shift here. Our low for today is coming at our teal monthly 21-day EMA near about 3150. RSI showing a little bit of bearish divergence here as well. Not exactly what you'd want to see if you're bullish, encountering a bit of a stall at these highs here. So what I mean by that is price made higher closes, RSI did not. It was trending lower. So that's a bit of a mismatch. But you can also see we're still making higher lows on the RSI as well, and we're still above the 50 bid line. So look for further breakdown in price and look for the RSI to match up with it. Finally, volume profile, our study that helps helps us see where the heavy trading activities come in. 31 to 32, there's a smaller area, but really 28 to 30 stands out quite a bit more from the heavy trading activity perspective. Our point of control is just below 29 there, Jenny.
Okay, and so now as we think through Trading Carnival here, again, a stronger performer of 24% over the last 52 weeks. Walk us through your thinking here for example purposes.
Right. So if we were to start, looking for a trade example here, sometimes when you have a stock that's repeatedly tested resistance and is starting to break out, you might just want to be very aggressive. This would be a more aggressive type of example trade here, just buying a call. So +1 March 20th, 32 strike call at a 215 debit here. So just looking for an upside breakout here. This would be in the hope that when you do get these breakout moves, you start to see runaway gains and you could see significant profits. If you were looking for a short strike, you could choose the edge of that expected move boundary for March 20th, which would be right around 36.50 or so. Max loss 215, max profit unlimited potentially here. Break even 34.15, 6.7% to the upside versus expected move a little over 13%.
Okay, yeah, and today still down about 1%, but still at least again easing off those session lows. But appreciate it, Rick Ducat, for breaking down the charts into example trades for us today. Now coming up next, it's time for FOMO. We'll discuss the nice move we're seeing today in Applied Materials, ending the week on a bright spot of 8%, adding to its near 10.5% gain on a week-to-date basis.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Live from Chicago, this is Trading
REAL.
360. I'm Marley Caden. We track macro forces, market trends, and
EINS.
company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
POAS may resume in less than a minute.
Welcome back to Next Gen Investing. It's now time for FOMO. Today we are talking Applied Materials with a solid move to the upside, up 8.4%. Joining us is Marley Caden in studio, of course, host for the Schwab Network. And so, Marley, I think that this is a great example that not all of AI is this fear-driven trade. I mean, we're still seeing pockets of strength. I mean, heavily tied to even their exposure to memory, but walk us through what really went well from the report.
Yeah, and unusually a strong reaction to earnings for Applied Materials. They hit a new record high today. In fact, as you said, they're up about 8.5%, but touching new records, the semiconductor equipment maker jumped off the back of these earnings. As far as their earnings themselves, $238 on revenue of $7.01 billion. Analysts were looking for $2.20
POAS may rise
per
in 10
share
seconds.
on revenue of 6.87. So they came in far better than expected. Revenue was actually down 2.1% year over year, but again, far better than what the street was looking for. So a blowout quarter there. Their semiconductor systems revenue was $5.14 billion. Global services revenue was $1.56 billion, and other revenue $312 million. As far as that breakdown. Now, looking ahead to their fiscal second quarter, they expect revenue between 7.15 and 8.15 billion. That was well above the expectation for about 7 billion. The whole range itself higher than the expectation. Adjusted earnings per share forecast to be between $2.44 and $2.84. The street was looking for $2.28. So again, the range well above what the street was looking for.
SLC
Investors
halted.
really cheering that guidance today. I think that's a lot of the move that we're seeing to the upside, at least in reading the analyst notes. It reflects how the company, like you said, is benefiting from these AI tailwinds. Not everything is an AI here.
ORCX.
They are a beneficiary.
POAS.
The company also adding it expects more than 20% growth in its semiconductor equipment business just this calendar year. The CEO citing this momentum in leading edge logic chips, high bandwidth memory products, and advanced packaging as being some of the key drivers for that, Jenny. And he said, quote, these are areas where Applied has strong leadership positions as well as an innovative pipeline of solutions to enable next-gen technologies. He said markets.
EU.
The company now thinks that the revenues for the global chip industry could hit $1 trillion this year in 2020.
All right, we keep trying to get through this area. It's pretty obvious. They want to keep it below 68.80.
So the CEO, Gary Dickerson, coming out and saying, I think it's this year. So I think that is interesting because they do say over
Maybe we can get futures to pop.
Bitcoin, which then has driven this unprecedented demand. And I think this clearly showing that right now it's
Tick cumulative is green.
where your dollars are actually going and how you're seeing that being paid off right now than these longer term projections. But
Bitcoin's trying to make new highs of the day.
position at a point where these CapEx dollars are already going to they're not like a wait and see story, which I did think was pretty positive. Yeah, absolutely. I mean, and I think you're also seeing that reflected in some of the price action that we're seeing. You mentioned this move to the upside. It's now almost 9% as I look at.
Technology basically allows every industry to optimize its own data in a way that's just never been.
Okay, watching MACD.
So when people say we're in a bubble, I like you. I think we're at the very early innings of this game. Yeah, and if I can say something about that too, is it's hard to be in a bubble when every single part of the supply chain is constrained. Right. So even just getting beyond everything I just talked about, all the demand for compute to build these applications, you also are at a point like where we don't have enough wafers. So in the fabrication of semiconductors, we don't have enough. We don't have enough memory. Heard about this coming out? I think Micron just announced $100 billion in New York that it's going to invest to build more because we don't have enough. We don't have enough turbines. Right. We don't have enough. They're already behind the eight.
ORCU.
So now you're talking about demand going up. So every bit of what we can build is sold. So maybe the concern, if you want to nitpick it, is we can't expand the capacity fast enough.
Slow grind kind of day. It feels like distribution. That's what many are anticipating, that this is distribution up here at the highs. Could be it for now.
What we have to fix is it takes too long to put the shovel into the ground. Doesn't matter if it's to build a fab.
Okay, Tesla breaking out here. Tesla breaking out. Tesla, watch MACD. Tesla breaking higher.
NVIDIA Lilly, right? Because they made $1 billion investment, I believe, over 5 years that they're going to help to use pharmaceuticals, Eli Lilly, to use AI to even speed up and better kind of the healthcare space. So talk about that. Well, like super what we know about. Yeah, like
Tesla pushing higher. That's looking good. Tesla moving back into yesterday's price action.
Or you can learn more about
Tesla again trying to stay above the 60-minute 20 MA.
You can basically grow the business more quickly. You can, speed up physics, you can speed up chemistry, you can speed up biology, all the things that need to be enabled for business to grow. And really, AI right now has kind of peripherally done this for us.
SOLC may res in 10 seconds.
Manufacturing, you can use this for automotive. You already seen how we're simulating automotive. So the cars, you can't drive enough miles to be autonomous, but you can do that for vehicles. In financial services, you can do it to take out fraud. You can do it to optimize services.
RIG.
All the things that AI can enable. Like I said, sometimes people think about it too, like it's got to be
POAS may res in 10 seconds.
disruptive. But sometimes it can just be iterative. In your field, like in a pharmaceutical, 1.1x. What does that mean when every drug can get to market 1.1 times faster? How much more growth, how much more TAM, how much more margin? And by the way, when you can do it with more computing, less humans, shorter trials, all the things that you do in safety, you go, oh my gosh, the industry has the opportunity to grow significantly, be more profitable, deliver great
Tesla.
and continue to be disrupted, and AI is the ultimate enabler. All right, hold that thought 1 minute.
RRG.
Frank can come right back. Oh, now this guy's going that way. Now I'm getting the lay of the land.
LA's can be a big test for a young homeowner turning into their parents.
There's no.
Yeah, Kelly, we've talked about Alphabet in the past over the past year or so, and I think that the company earnings growth is incredibly strong. The balance sheet is very, very clean, but you have incredibly diversified sources of revenue with the cloud computing business that's growing. I would say one of the best, if not the best AI platform in the business. And on top of that, you have exposure to Waymo and all of these other pieces that, can hit a lot of different parts of the overall economy. So I think their business is levered to both AI and the real economy. So it combines that secular cyclical growth. But then on the other side of the equation is you go down market cap. Take a name like Sterling Infrastructure, for example. They're a company that does early site development for a number of data center projects. It can also help build out some of the new semiconductor infrastructure that's being moved over to the US. So they are a direct beneficiary of the $600+ billion of capital expenditures that are going to come to this country. And on top of that, they sit further down market cap where there's more dollars finally starting to flow. So I think they're at an intersection of two good longer-term tailwinds that I think really are powerful for this market right now.
All right, so if you want small, if you want big, we've heard some of those picks. Matt, thanks very much for your time today.
Thanks.
Matt Orden with Raymond James. Coming up, OpenAI is taking a page from Google, which shows NVIDIA's moat may be at risk of shrinking, similar to what we just heard from Christina Partsinevelos. We'll talk more about that next. And as we head to break, take a look at shares of Bitcoin, which are up nicely today, almost 6%.
Tesla still pushing. Sometimes it runs on Fridays. All right, Tesla looking good. S&P, another little dip there. Coinbase still looking pretty good off the low. Coinbase. Bitcoin trying to push a bit higher. Bitcoin. Coinbase. Coin looks good. Let's see what the 60-minute looks like. 60 minutes got a work to do, but it is back above the 20 MA. 60-minute, 20 MA. Coinbase. Yeah, it looks like Bitcoin wants to go. I agree with that. Agree, Mondo. Trying. Bitcoin trying to break out. Oh, this is like her third or fourth time I've heard this.
OpenAI is unveiling its first model to run entirely on chips
MSTU.
from the startup Cerebras. It's a sign of companies diversifying beyond NVIDIA's GPUs. Deirdre Bosa has more in today's Tech Check. Very important story here, Deirdre. Yeah, so Kelly, this is not OpenAI's flagship model. This is GPT 5.3 Codex Spark. It's a stripped down coding model built for speed, but in AI speed and cost, that can beat raw power. And if the high volume everyday workloads, if they're moving off of NVIDIA hardware, that is important. It changes the investment thesis. Now for OpenAI, this is an inference play. Training is the one-time build. Inference is the meter that runs every time a user hits enter. As these products scale to hundreds of millions of people, that may be where the real spend is. Now, this is also part of a larger trend. Google's serving Gemini on its own custom AI chips, TPUs. Microsoft just launched its own, and Meta is rolling out custom chips across its data centers. And then Chinese labs, they're also increasingly...
Bitcoin, BITX 2 times Bitcoin.
OpenAI was still careful to not upset NVIDIA, like all the builders who are expanding their ecosystems, in a statement saying they call
Bitcoin 2 times. All right, looking for that to follow through. Bitcoin, BITX.
Every major lab still wants Blackwell allocation. It is still, without a doubt, the gold standard. But behind closed doors, nobody wants to be this dependent on a single supplier. So they're smiling at NVIDIA with one hand, and they're signing deals with Cerebras and Broadcom and AMD with the other. I understand that Cerebras kind of does everything on a big chip, so they don't network together quite as much as the GPUs. And that might help with the latency issue, like you were saying. For developer or for language models, so I mean, any company that's been using NVIDIA, does this go back to CUDA to some extent, to their programming platform, if that's what we call it? Because if you build something using that language, can you switch over to other chips? Yes, that is such a good point. Part of its strength has been this ecosystem. CUDA software, it all works together super, super well. But even over the last few years, the more dependent that the whole industry becomes on NVIDIA, others are trying to find solutions. So we talked about Google TPUs, for example. It started as a Google-only solution, but increasingly, Google is trying to figure out how to come up with the software like a CUDA, which goes several layers down, I believe. But it's software to let it work more easily or let it be inserted into other workflows. So complicated way of saying, like, yes, the whole ecosystem is changing. NVIDIA has had it. It's had sort of this near monopoly, also thanks to CUDA software, but that is quickly changing. And I mean, is there any bigger indication than a model being served on another chip, right? That's key, even if it's just inference. Right. In a weird way, sometimes you think NVIDIA goes, okay, it's probably not the worst thing, because it'll probably keep companies signing up with them and going, all right, well, we have other, you know what I mean? Instead of trying too hard to fragment. NVIDIA's not going anywhere. Yeah, and people think when I say those things, I'm being like an NVIDIA bear or something. That's not it. NVIDIA is always going to be really important, always going to have the most, well, maybe not always, but we'll have the most advanced chips for a very long time. But the key is that moat and losing that near monopoly. I mean, that changes the investment. Yeah, and the shares are down today. And as we've mentioned, it's been a kind of sideways move for months now. Deirdre, thanks very much. Deirdre Bosa. Coming up, stocks are selling off pretty indiscriminately on AI fears this week. But there are a few names our next guest says are insulated somewhat from the threat. This is one of them. Our mystery chart she calls a port in the storm with Catalyst on the horizon. It's up nearly 8% this week.
Bitcoin at the high of the day, just kind of sitting there. This is a 2-time Bitcoin ETF.
They're up just a third of a point today, and this is significant. If they fall, that would make it a 9-day losing streak. It's worst since 2006 and just one shy of its record 10-day skid in 1997. The shares are down 17% over this period of time. Again, if they're closing the green, forget all of this, but it's been a rough go regardless. We're back right after this.
Well, yeah, we certainly do know that, Oliver. In addition to Marco Rubio, is there anyone else we should be watching who will be participating in panels, giving speeches that you yourself will be talking to?
Yeah, so we've been hearing from a number of sort of Democratic lawmakers, as we spoke to Alyssa Slotkin a little earlier on the show, and actually Gavin Newsom just walked by a couple of minutes ago, who's been sort of doing the rounds, because obviously we've been talking about this. America First has been the foreign policy that's sort of been dominating the arena here for Europeans for the last year, but there's another America, and that's sort of represented by these emissaries trying to reassure European allies that actually that America is still there. It may not be in power, Chinese foreign minister, obviously that will be closely watched. There's a question of how much overlap there is between American policy and European policy, potentially being able to have a sort of collective front on the question of
POAS may
China.
resume in less than a minute.
This is something that has been a very active discussion between the administrations. Of course, we have a number of ministers visiting DC over the last couple of days, trying to get forward on that American framework on raw materials.
All right, Bloomberg's Oliver Crook live at the Munich Security Conference. Thank you so much. We'll, of course, have more of the conversations taking place there on the late edition of Balance of Power at 5 p.m. You can hear our conversation with Senator Mark Kelly of Arizona in full. As we think about the geopolitics, though, we, of course, have to keep an eye on what's happening here in the United States.
Microsoft.
Data that we got today. Remember, we're all jumbled up this week. We had a jobs Wednesday and a CPI Friday, and the CPI for today came in a bit tamer than expected, which seems to be giving some fuel to some equity markets that have been pretty battered by some AI tech fears. So let's get the latest on what's happening with the Friday market action.
POAS may rise in 10 seconds.
Up in New York. So Nora, is the better tape we're seeing today due to CPI, or is it that everybody kind of took a breather after the AI terror, if you will, of the last few days? Well, a little bit of both, but I do believe that proceeding that we were seeing in terms of the sell-off that we saw in a lot of AI-related companies is really boosting sentiment or really changing sentiment here. But you called out that CPI report that we're keeping an eye on. We did see that inflation was cooler than expected.
MSTU.
This is actually, we did see a rise of 0.17%. Estimate of a rise of 0.
Trade, quantum is sometimes a better solver for these problems than traditional.
MARA.
Having said that, though, most of the quantum machines they don't have enough qubits yet. They're not big enough to handle it, so the simulation using quantum on a traditional compute is still better. But over the next 3 to 5 years, maybe sooner in some cases, we will see
Tesla still moving higher. Tesla.
Welcome back to the exchange. As we've been discussing, if there's one narrative to tie the week together, it's AI industry disruption.
All right, we're coming up to 20 EMA on the daily.
And then seeing if that was
Tesla.
later. But there are areas of the markets or some individual stocks that could be spared all of this displacement, or so our next guest says. Let's bring in Victoria Green, G Squared Private Wealth CIO. Victoria, it's great to see you. And I chuckle a little bit. I mean, when our mystery chart is a name that is a senior living REIT. Our audience is probably well familiar. Ron Camden has come on this program and talked about Welltower for years, but it's been a little while since we've heard about it. Talk about this one, which is up 40% over the past year. You're sure this cannot be disrupted by AI?
Well, no, I mean, AI and robotics, who knows what that brings the next 20 years. I feel like this is like a top tier if they disrupt Welltower. That's the end all be all. Everything's been disrupted, right? So Welltower, I mean, senior living's where it's at. We have a silver tsunami going on right now with the baby boomers. They're expected to go to 22% of the population by 2040. Massive portfolio of senior living. They're going to be 85% in the senior living. They've been divesting some stuff in the outpatient medical. They're going to grow net operating income 15 to 20%. Funds from operations, I think they're going to easily be at least 6.25 this year. Just a well-run company. They did $11 billion in net acquisitions in 25. Set up with a $12 billion war chest and pipeline to keep adding. Plus, they've added to occupancy,
Tesla.
raising rents. All of these things say absolutely.
Tesla a little bit off the high now.
Another 20% here at about the 6-7 year age.
I challenge the public. Find a way to disrupt. No, only if it. Yeah, anyway, we're actually going to talk to Ron Camden next hour, so we'll pick up this thread. Okay, let's move on to TJX. Why do you think this stock can remain immune from any kind of AI pressures or fears or disruption or whatever? I mean, it's outperformed Apple and Microsoft over the past 12 months now.
Absolutely. First off, who doesn't love shopping at TJ Maxx? But secondly, they're picking up market share. Everything that Target is losing, TJ Maxx is hitting. They literally have a strategy they call treasure hunting because they have this off-price model. They're buying name brands. They keep their inventory fresh. It's TJ Maxx. It's Home Goods, which has been the major driver of their top line growth. They're growing at like a 9% clip. And then they've got Marshalls. They're still their customers so well. The value-seeking customer, we've seen time and time again, the customer that wants value is willing to still pay and go. And it's experience. Go get your Starbucks. Go shop at TJ Maxx. Right. Pick up something funny. So I nicknamed this stock the funny cute stock, right? It's
Constellation Energy. Constellation Energy. All right, that's turned the corner now. CEG.
It's an experiential, really.
may resume in less than a minute.
Did you saw them right with the Elon Musk face? Do you remember that video? You don't think I do? Wave of the future. Yeah. No, and Tamagotchis didn't make it. Elon Musk isn't even. Victoria, thank you very much. Have a great weekend. Great long weekend, Victoria Green. And that's it for the exchange. I will join Brian Sullivan for Power Lunch. Jam-packed one right after this break.
All right. looking good. Constellation Energy looking good. 20 EMA looks good. Constellation Energy. Just keep your stops going. This is a swing time frame. Constellation. This was from the 11th. Constellation. Swing from the 11th. 20 EMA. Your trailing stop. Constellation. Whoopsie. Okay. All right. Tony mentioned that one. On the 11th. Constellation Energy looks good. The daily looks good. All right, daily looks good. Constellation. Let's see. MACD, stochastics turning up too. CEG. Bum, bum, bum.
JDCG.
Hope everyone's having a good day. If you're just joining us, I'm your host, Cousin Vinny, coming to you from aclosingprint.com. It is Friday the 13th. We're off on Monday, so much needed day off. Been a kind of stressful couple of days here. Not myself, but for other people that have been DM me about conditions, positions, and thoughts. Anxiety, emotion gets the best of people. Let's see.
Yes, and like Brian said, real estate getting crushed, sending some of these names down 20% or more this week. Morgan Stanley's head of commercial real estate is here with the names he says you could and should be buying right now. And the queen of content. She decides what the world watches, from global hits to billion-dollar bets. Netflix's chief content officer, Bella Bajaria, is shaping the future of entertainment. And today she's speaking
Really?
exclusively here on CNBC.
Really?
And it's a lot more than just a Squid Game. Let's start with the markets and your money. The average is higher today, but unless we see an even bigger turn, and we could, it's likely a slightly losing week for most of the big indexes. AI disruption fears running through different groups of stocks all week long. First, remember, it was software. Then it was wealth management, trucking, real estate, and more. In fact, if you missed it earlier this week, shares of brokers like Raymond James, Schwab, LPL, down big on concern that some new AI programs will crush the need for tax planning. Real estate services also hit stocks like CBRE, Cushman & Wakefield, Jones Lang LaSalle, all hammered again on worry that AI will hit demand for their services and thus the money they bring in. Well, your first guest today calls this shift an AI minefield because instead of looking for winners, some investors, maybe you, are now just selling first and asking questions later. But a wise man did once say there's always a bull market somewhere. So let's talk about that. Joining us now to discuss, Steve Sosnick, he is Chief Strategist at Interactive
broker. Steve, thank you. It was a weird week because I felt like every day Kelly and I were here or wherever we were and saying, well, this sector's getting crushed and that sector's getting crushed because somebody wrote a new program in 7 minutes on AI. Overreactions?
Yes, because you should, because if you don't really know what the ramification is going to be, it's a little weird to say, okay, I'm going to knock a fifth of the value off this company off of something random because a company that made karaoke machines last week that's a penny stock now claims they've got an algorithm that can do logistics better than established manufacturers. But we'll just take 20% off of some of these stocks. That's crazy. But by the way, that if people don't know, that actually occurred. Yes.
The company that makes karaoke machines claimed they wrote a software program that basically did freight forwarding. Who knows? But that's where we are now. That kind of stuff could happen and wipe out billions in market cap because somebody on the internet's like, I quoted a new thing.
It's like
that's my internet voice.
But it's like in the internet bubble days when you put .com after your name and it was good for about 74% or something like that. But what you have here is people are very quick on the trigger in both directions. So for example, you had the real estate brokers that went down, they got clobbered. On the other hand, you have Equinix, which is a REIT, which is not all that exciting, up 10% yesterday. For the flip side, it's up 5% this year. Wow. And think about the stocks that are up today, double digits. You've talked about many of them on your show already, so I'm not going to rehash them. But so this is just everybody running from one side of the trade to the other. FOMO is huge and fear is huge, and FOMO is a part. First letter in FOMO is fear, and so this is what's driving people. It's very turbulent under the surface of a relatively placid market, actually.
Let me ask you something, Steve. Your firm, your daily experience, how much has it changed?
Day to day, not that much. I personally get a lot more calls when it's a down day than when it's an up day. When markets go up, they're supposed to.
I mean, how much has AI changed it? How much has it changed your day-to-day life, your workflow?
My day-to-day, because most of my day is
Okay, so this is looking good.
it hasn't changed that much.
All right. Not everything is working. S&P is not giving us much. Still feels like distribution up here, so got to be careful. The risk you have carrying into next week. Hopefully, maybe you're reducing your exposure. Just an idea.
I just did this code. The AI basically wrote 80% of it. It didn't write it 100% correctly. I had to correct I had to pull out the bugs and fix them, but it worked pretty well. Now that's a good productivity enhancer, and maybe going forward, companies that do some coding don't need as many coders. But I think in a lot of knowledge jobs, you still need the guy who knows how to debug the program.
Right.
Even if
I think he's going to have an army of coders. I think it could be one guy now has a fleet of agents working.
A wedge, a pod, a murder, or a murder of coders. When you see stocks fall 10%, 15%, you guys do a lot of options. Interactive brokers, right? Gotta imagine there's kind of maybe a feeding frenzy in some ways among your clients, because if everything gets sold off, not every firm is going to be wiped out or hurt because of AI. That in these drops, there is opportunity. Or am I just trying to be all happy on Friday the 13th?
No, I think it's fair. I mean, this is what happens when it becomes sort of sell everything now indiscriminately. That there are opportunities. Just as if everybody's buying everything indiscriminately, they get overdone, and there's probably shorting opportunities. And so you can see from the list. I see you have our list up. And for example, Microsoft has slipped to number 5.
Constellation Energy at the highs at the moment, looking good. Anticipating we might see a retest of the 200-day. Decent amount of volume today. MACD stochastic RSI rising. 60-minute is bullish, so the trailing stop on Constellation is the 20 MA. Okay, that's $12 lower, so you may want to put a stop maybe at 290 at this point. 291, 292. See if we can follow through.
But everything that you're describing is still very 2025. Did you see anyone saying, C.H. Robinson, I got to get on that? Or, legal
was it whatever the names were this week in various different industries? Did you see people jumping into those names, or were they instead just stepping back?
The problem is I don't have full clarity into where I can really only
Micron. Micron gap down, did bounce. Robinhood giving you a good day today. Robinhood.
this was such a popular name as it was going up.
Yeah, absolutely. And now, of course, it's been going the other way lately. Steve, as always, thanks so much. Really appreciate it.
Chevron breaking out to the upside. Chevron starting to go. Chevron. Chevron breaking higher.
I just got an email from Ihor Duzanuski over at S3. Some investors I've been talking to did suspect a short squeeze. S3 focuses on this. I just want to read this to you guys to sort of clarify here. He says Coinbase is most certainly not being squeezed. He says it's actually the opposite on the short side. Said it's been a successful short. The mark-to-market profits up 43% year to date. He says the shorts are not being squeezed out of their positions. They are actually increasing short exposure into a very profitable trade. So I just wanted to bring you guys that. It just came in my inbox. And so a little bit of clarity to what's going on with the stock. Also some talk about opportunistic buying and views that Coinbase has actually bottomed after what's been a really tough year for the stock. In the quarter, I mentioned that Coinbase saw crypto trading volume really tumble. Earnings swung into a loss, which was also a surprise. Street was expecting 60 cents on the profit side. It does appear to be due to this unrealized loss from crypto prices that it was holding on its balance sheet and also a strategic investment in Circle. Revenue for the quarter down 22%, missing consensus. Transaction revenue dropping 45%. CEO Brian Armstrong on the analyst call did make the case that Coinbase is not going to be a pure play crypto exchange.
Okay, Tesla. What are we doing, Tesla? Tesla, what are you doing? Looking good. All right, so we're trying to stay above the 20 MA. This would be a good feat if we can manage to get above the 20 MA on the daily as well. Today would be great. Chevron starting to turn back up. Chevron, 20 MA. Once again, back above the 20 MA. Chevron. Chevron above the 20 EMA 60 minute. Okay, what are hedge flows doing at the moment? Hedge flows. Okay, so you can see, although it's not, hit the high, come back down, hit the high, come back down, we do have a sideways back and forth. You can see the sine wave. It's a little bit erratic, but you can see it. Peak to trough to lower trough. Maybe it gets back to a peak again. You got plenty of time. It's only 2:11 on the East Coast. Okay, maybe we'll get something going. Got an hour and 48 minutes to go. Hour and 48. So if you were to just tune in right now and you look at the S&P 500, you would see what I'm looking at, which is not much of an advantage. I wouldn't want to short it with the hedge flows turning up, but I'm not anticipating a big move either. We got resistance overhead, as we noted, 68.75 has been holding very strongly, so there's no follow through there. On the S&P, Tesla trying to push, Chevron taking off to the upside. There goes Chevron. Tell me I didn't sell it. I hope I didn't sell this. I don't think I did. Chevron. No, I didn't. Good. It was below the 60-minute 20 MA Chevron, so I was considering it if it couldn't manage to get back above it. Chevron, 20 EMA. This has been holding price. Every time it dips, it gets bought. This time it's spent a few more hours down below, making me a little bit nervous. I have the 185, 190 now. I had 180, 185 before. Okay, we started off this trade back when the Maduro capture took place on the weekend. We opened up that Monday, gapped up. I took a small position. It dipped over the next couple of days. Once it turned back up, I added to my position. I liked the thesis, the idea that Chevron might get some more leases. Since then, it's done something in Libya. I forget what it is, but some onshore drilling licenses or whatever, agreements, if you will. Those are always interesting, agreements. Okay, you drill, you give us money, you make money type of thing. So that's recent. That's this week. What's up, bro? What you looking for?
Just checking it out. Seeing the cat.
You looking for sweets? All right, got a visit from the number one son. Love that kid. Love that kid. Gotta stop telling him. He knows he can get away with murder with me. Not with his mom, though. Anyway, New York Fangs are mixed, but I gotta say they look a lot better than they did starting out the day. Apple still looks like crap. Nvidia is not doing much better. Snowflake is back above the 20 EMA on the 60-minute. Snowflake, I mentioned that this morning. So that's in the beginning of doing something, perhaps. Tesla's showing some potential. I just get a feeling that there's not a lot going on here. Okay, volume is lower than some of these peaks on the selling. I don't know. It just doesn't feel like it has much energy. Chevron's holding up very well. The thesis here still working. I know if I take it off, some of this position off, I'm going to be disappointed. Walmart also making new highs. It's up above the 20 EMA 60-minute. Walmart.
Schumer then tells the AI what he wants built. So he's explaining to everybody what he's experiencing kind of in his workflow. He walks away from his computer for 4 hours. He comes back to complete his work.
Oh, who cares? You're still going to need people, senior programmers. You're going to still need those. You might not need interns as much unless they know how they're really good with AI. I was talking to Grover about this. Programmers, they're not going to go away. I mean, how many times have you done something with ChatGPT or Grok or Gemini and it wasn't completely correct? This morning I had to ask Grok or rather, please update. Okay, so I asked it to please update this. Okay, so this looks a lot different. Not a lot different, but there is some differences here. And double checking yourself on what these AI assistants spit back at you. You got to take it with a grain of salt, and you also got to do a little bit of. It gives you points to reference, so it's a lot easier. It's a lot easier to double check yourself. The inflation trap, the whole idea of better than expected. We know that was the case. All right, but the markets do. If they do remain below 6,900, despite the good news, this is a textbook sign of distribution. Now, all of this I'm in agreement with. So I'm not looking for something to agree with. I'm looking for it to back up or to have me pique my curiosity in certain things, like this pocket below 6,800. Okay, I've been looking at 6,500 as a potential target, so I bought the 650, 640 put vertical on the spiders for December. Now, I didn't need to go out that far. The only reason I did it is because the midterm elections are in November. Before you know it, it'll be the end. I can't believe how quickly how the days go by. I mean, it's already Friday, Anyway, so the probabilities, failed breakdown scenario. Okay, a probability of 7,000 plus 15%. I don't see that happening. There's just too much gamma overhead. All right, there's just too much up here to slow things down. Purple is resistance. Red, higher volatility. Purple is positive gamma. Red is negative gamma. And right now we keep banging up against the 68.75 and can't get through it. So I don't see that changing. See that? We just hit it again. Hit it again. What, 45 minutes ago or so? So maybe we get a late day rally. If we get a late day rally, my suggestion, well, I'm going to tell you what I'm going to do. If we get a late day rally, I'll be taking more things off into strength. I'll be looking for Bitcoin to follow through next week because we finally got a bottom.
RIME. NETG.
RIME.
RIME.
200-day on the S&P. So I would get myself some protection. Okay, if you got all longs and you're doing nothing. We already had the VIX spike past 20 this morning. I have the March 20 calls. You know that. We've already gotten rejected. I did take some of those off. I didn't mention it, but what are you doing? You scratching my paper? Kitty cat? You scratching my paper? Yeah, so this is pulled back now. So this is another, if this gets back down to say 17, it'd be a good time to maybe buy some March 20s or even April 20s at this point. The 20 strike, April call, okay? I also have some 2030s left. I have some 20s. I bought the 20s, sold the 30 for March. I haven't done anything with those, but these are hedges. All right, these are hedges. So we popped up, we pulled back, markets rallied. Still left to be seen what we're going to do. The markets, there's a lot of stocks up today. This is really, I don't want to say puzzling. It's just I'm anticipating that there's a lot of selling into strength going on here. IBIT's at the high of the day, IBIT. Okay, the number of stocks trading, we got 403 stocks. So we had 410 before. Now we have 403 stocks advancing on the S&P 500. So basically 400 out of 500 stocks, 400 are advancing out of 500. We got 83 stocks on the Qs, 83 out of 100. The Qs are the NASDAQ 100. Top 10 on the NASDAQ 100, MicroStrategy. I still call it MicroStrategy. Applied Materials, Dexcom, Vertex Pharma, Airbnb, Constellation Energy, as you know, CrowdStrike, Old Dominion Freight, and Zscaler. Lulu pulling up at number 10. AppLovin, Autodesk, Cadence Design, Synopsys, XCL Energy, Gilead, PayPal, ARM Holdings, LRCX, GEHC, that's GE Healthcare, and American Electric Power. That rounds out the top 20 or so. I'm sure there's a couple more in there. But yeah, there's a lot of stocks here. Cisco, Regeneron, following through, Qualcomm, Kraft Heinz, Costco, Fastenal, Orly Automotive, PACCAR, T-Mobile, On Semiconductor, Intuit, Global Foundries, Intel climbing the list, kind of slipping a little bit. Texas Instruments, Mondelez, Netflix, Workday, ADP, Verisk, Take-Two, Roper Industries, Ross Stores, Clack, KLAC, Diamondback Energy, Tesla. All of these are up. AMD is up. All of these are up on the day. Okay. Bitcoin is trying to continue. Consider BITX if you want to follow Bitcoin price. You got 2 times Bitcoin and BITX. SPHD is at the highs. Okay, so some of these some of these ETFs that I like to trade or I'm invested in. 2014 is when I started trading SPHD. 2014. Okay, this pays a dividend once a month at the end of the month, last week of the month. This continues. This is up. This broke above 48 in December, or rather January 8th. This broke higher right there, that candle. We're trading up near 53 now. Okay, it might not seem like a lot, but this is an ETF. Okay, and it pays dividends. So up 1% today. That's good. Got 1,000 shares of that, or 10,000 shares, whatever your position is. This is a pretty decent one. You get dividends. I have the dividends rolled into more shares. What I essentially did was I had shares that I had acquired from dividends. I really haven't added to this one in a while. I had shares that were added from dividends. So I took the profits. I took about 15% off of SPHD and I put it into SCHD. Okay, so if you look at these critically, I mean, they're not that different. Okay, here's SPHD. SPHD. You can see what's in SPHD. A lot of high dividend paying stocks. I mean, Coca-Cola, for example. Coca-Cola has been paying dividends for over 115 years, something like that. So these stocks are very reputable for consistent dividends. All right, so that's SPHD. Now, I took some of this on January 8th. I rolled it into SCHD. There are some similarities, okay? But Lockheed Martin, CVX, Bristol Myers, ConocoPhillips, and Merck, that's like the top 5. Actually, Texas Instruments is number 2. Lockheed Martin's number 1. ConocoPhillips, Chevron, these look good. Home Depot, let's see what some of these look like, actually. Home Depot, let's see what Home Depot looks like. Home Depot. Okay, Home Depot's grinding higher. All right, so that's good. What else? Mo, Altria, Philip Morris, Mo. Okay, breaking higher. So you wouldn't be surprised to see SPHD or SCHD moving higher because all these stocks in the portfolio are moving higher. Here's Lockheed Martin. Here's Texas Instruments, ConocoPhillips, Chevron, HD we just talked about. What else is in here? Let's see. We have EOG, Schlumberger. All right, so Schlumberger, SLB. Okay, EOG, Resources, breaking out. So you shouldn't be surprised to see SCHD breaking higher with the components of this ETF continuing to pump up the volume, basically. Robinhood's at the high of the day. Robinhood looking good. Okay, what else? Let's see. Bitcoin, if Bitcoin keeps going, that'd be nice. Tesla's still pushing. Tesla pushing a little bit. It dipped a little bit. From the high of the day. Tesla. Maybe we'll get one more shot to the highs. I'd love to see it close near 425 for Tesla. I don't want you to lose sight of the fact that this is a very important area to watch the markets, okay? Don't get so distracted that you forget that you need to take a little bit of profits off the table, reassess the markets, because this does look like distribution to me. And that's what my requests from ChatGPT and Grok and Gemini are all saying the same thing, right? They're all saying the same thing, okay? The biggest risk to the portfolio thesis, 6,500, is NVIDIA Wednesday earnings on the 25th. Okay, if that beats, forget about it. We're probably gonna push higher. We'll probably get a lot of stocks, create a historic save needed. That's needed to reclaim 6,900 at this point. You know what? Speaking of 6,900, I keep forgetting to check this. Okay. I keep forgetting to check. Where is the call wall? That's very interesting. The call wall is actually at 7,100. Now, I thought this was going to be lower. Tops in the past have come with the call wall shifting lower. Currently at 7,100. It was previously at 7,000. Okay, so this is significant. Does that mean I can disregard this? No, it just means that I have so many different postulations, so many different indicators, so many different signals that it pays to de-risk. Like I said, I take 15% off 15% off of SPHT. I put that into SCHD, TRBCX. I took 25% off of this now at the highs, TRBCX, because it did lose the 10 EMA weekly. All right, so TRBCX is one of my favorite long funds in my portfolio. Okay, so this is clearly in phase 4. Phase 4 is the markdown. Okay, we won't know when phase 1 starts, the accumulation phase, until it starts the base. My guess is going to be at 186. We're going to pull back to this breakout zone, somewhere in here between 185 and 190. So I don't want to lose another 10 points. Got out of this 3 weeks ago when it lost the 10 EMA. It bounced back to the 10 EMA and then closed the week below the 10 EMA. So I took it off. I took 25% off. So the important thing to note is that TRBCX is no slouch. Okay, so since the 2022 bear market, we gained over 176%. Okay, up to that high, we got in over here at the end of 2022 bear market. We've been long ever since. Occasionally, we take some off and put some back on. The April 7th pullback wasn't until like the second week we dropped below that I actually took some of this off. You can see that rectangle. I was looking for a base there. Didn't happen. It kept going. So reducing my risk there made sense. The April 7th low, Trump comes in and said, good time to buy. Put more back on. That starts the accumulation phase. And then once it breaks above the 10 EMA, you can say that that's the phase 2, the markup phase. Markup phase leads to the distribution phase, where price action doesn't move any higher. We get no new highs. We stall. And eventually we drop below the 10 EMA. Now that we're below the 10 EMA, this is phase 4. Phase 3 is up here. You can see phase 2 markup. I said right there. Phase 4 is where we are right now. And we're more than 9% down from the all-time high. So 176% up, 10% down. It's not that big a deal. If we go 20%, that would hurt. That would smart a bit more if you don't take some of these profits off. Okay. So remember a 10% pullback at this point. 10% pullback. Okay, so a 10% pullback at this point would require on this index, if I pull back 10%, I need to make 11% on the upswing to erase that loss, all right? So that's why I like to keep my stops around 5 to 10% because it's fairly easy to get back to even. If you go 50%, you need 100% gain to get back to even. So you don't ever want to do that, right? So anyway, we're almost 10% off the high, 10% off the high. All I need is about 11% to get back to even. But if I let this slide anymore and it turns out to be 20%, I'd need to make 25% on the way up. That's a little bit more difficult, especially where we are right now. So this is a good area. I've already taken some off. I'll add some back on at some point once we start to see a base. We got to see accumulation phase 1. Okay, I realize I just talked that to death, but the bottom line is you should be taking some risk off. I'm talking to myself as well as anyone who's willing to listen. Okay, money flow, very obvious at times. Some people don't see it. Some people don't see the money flow the same way I look at it. Okay, I'm just looking for where's the money flowing and is this a potential drop coming in? I would say yes. So I have the 650, 640 put spread for December. Probably won't need all that time, but I bought it just because it wasn't that bad of an idea. We have the midterm elections. You know what happens to midterm elections. If you didn't see this already, I'll show you again. I know some people are probably rolling their eyes right now, but you know, some people need to be refreshed, their memory. Okay, here is, that's not it. Is this it? Nope, nope. Let's see, 2018. There it is right there. Okay, midterm elections 2018. Same scenario that we're coming into right now. The Democrats want to retake the House. Okay, if it looks like that's going to be the case, I mean, you could see a very similar thing happen. Now, that's out in October. Okay, so a month before the election, we saw a 10% drawdown. We bounced into the election. Then we reversed. We took out the low and added another 10%. This was a total of 20% drawdown right there. So that's why I'm saying we need to pay attention to what's going on in the market right now. Okay. Lose the 10 EMA. Okay, 10% down already. Feels like distribution. All right, that feels like distribution. Now, we need to get back in the green zone at a minimum. Get back above 6,900. Things change. Have to reassess the markets. That would mean we'd be back above the 50-day. But for the past, 8 weeks or so, we haven't done anything. Now let's look at the equal weight. Equal weight inside day, only a little bit below yesterday's high. Okay, we're currently trading 203.40. Yesterday's high was 205.24. So this is a stick save right here. I would hate to see this be a red day on Tuesday. Pull back. We're off on Monday. If you're just tuning in. All right, so that's the equal weight. You can also look at the other one that I use, which is S&P equal weight. Literally SPXEW. I hate using that term literally, but look at the equal weight. Look at number of stocks above the 20-day. That's turned up. We want to see these V-shaped pivots. Whenever we get these V-shaped pivots, that's generally when we see the markets rip back to the upside. What would really be amazing is to see a move back up to 7,000. Amazing in the sense that I know a lot of bears are going to be disgruntled. I think the likelihood, though, is that we're going to be disappointed. We're going to get a pullback. I think that's going to be the issue. I think we're looking at 6,500. Okay. Okay, so it jumped from a probability of 10% outlier to 50% statistical favorite at this point. Yeah, the bears have the ball. So if you're in a little pain right now with your bearish trade, you're probably going to be fine. I got a hedge. I have a hedge 650, 640 SPY puts for December. Netflix climbing again. Netflix. Let's see what Netflix wants to do here. Okay, S&P, no follow through. Netflix. I know that Skydance, Paramount Skydance, they sweetened their deal. I wish this would get over with already. We need to get back above the 90s. Got to get back to 100 on Netflix. Daily looks pretty terrible here. Still in a downtrend. This will help a great deal. portfolios. I got a loser there. Oracle also, or so I have two. These two are my worst positions, Oracle and Netflix. It's in a long-term portfolio. I do not see Netflix or Oracle going out of business anytime in the next 10 years. I don't foresee it. So, yeah, I could sell it, put the money to work somewhere else, but I have small positions, so it's not a big deal. Oracle and Netflix, I would definitely like to see these two make some inroads. Third is Oklo. Third. So I do have some positions that aren't doing that great. These are all shares in OKLL, okay, OKLL, which is trading in the $12, $13 range. Not a big position. Won't be a big position unless this starts to move higher. Then I'll start to add to it. Microsoft, another one. Still basing. Microsoft's got work to do. Okay, I made the reference to Microsoft and Snowflake this morning on what I want to see Microsoft do. Okay, Microsoft. This is a day for planning. It's not a day for taking big trades. Microsoft needs to get above that 20 EMA. That 20 EMA needs to turn up, and it needs to look like Snowflake. Snowflake. Okay, you see how Snowflake dipped and then moved back above the 20 EMA? It made a higher low. Higher low. I'm looking for that. Okay, so we've got a higher low. Now we need to get that 20 EMA to turn up and price to get above. Tesla doing the same thing. Okay, all of these are prospective follow-through candidates. Okay, what I usually do is I'll scale in. If I want 1,000 shares, I buy 100 or 200 shares. If Tesla gets above the 20 EMA on the daily and we start to break above these pivots right here, 436, I'll double up my position. I only have TSLL right now and some options that expire probably out in June or something like that. Let's see. Let me just check what's working here. I want to make sure I don't have any surprises like last Friday. I wasn't paying attention and IWM closed at 265.02 last Friday. So count back five days. 1, 2, 3, 4, 5. That's right there. So we closed at 265.02, and I got assigned 500 shares. Not a big deal for my portfolio size, but it's a pain in the butt, because I get distracted. I'm talking. I like to hear myself talk too much, and I didn't take off IWM. It wound up being basically a scratch trade, but I made money on the options because I got, they went up. I got assigned. I think it was like $200 per contract, basically. Rig is looking pretty good. Okay, Rig, you know what the story is with Rig. They're looking to acquire Valaris. Valaris breaking out to the upside. Rig is looking to acquire them. Got to go through the judicial process. If Rig can manage to do that, they would be then the largest offshore drilling contractor, bar none. Okay, according to sources, if they manage to buy. So, Rig, I have the 4 for September. Somebody bought a bunch of 4 September. Remember I talked about that. It's probably in the trading room. If you search up in the top of the trading room, if you click the search bar and type in Rig, you'll see where I commented about it. More than likely. Let's see, Rig, RIG. Okay, I'll do that right now. Rig. Thoughts on the Valaris X? Okay, so here we go. Copy link. All right, so I did that on February 9th, okay? Okay, I had the September 4 call in the money. This is doing really well. Okay, so the reason why I chose in the money is I didn't want to put 1,000 shares on this. I was willing to maybe buy 1,000 shares. So what I did was bought 10 calls. All right, and I bought them in the money so it would act pretty much the same as price action without the risk. So it was a defined risk trade. I wanted to see price action continue to higher. Now there was I don't know if I captured it, but there was a lot of calls being bought on the September's a while back. Let me go see if they're still there. I don't think they've already sold them. Let's go rig. Let's go to September. RIG. 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 Here it is. Okay. Let's see what the fours have. The four, no, they you know what they did? I think what they did was they took profits and they rolled some up because the main, actually, you know what it was? They had the fours and the sevens. I took the fours. They also had sevens. The sevens have the most open interest at 4,784 contracts. That's September of this year. The seven strike for rig has 4,784 contracts of open interest. So those people are swinging this. They're looking for at least 7. That's going for $1 offer, 94-cent bid. Okay, my calls are offered at 280. I have straight calls. So I'm up quite a bit. I'm up $1.40, $140 per contract. So $1,400 basically. $1,400. Okay, so that's good. I'm very happy with that. What else? We talked about consumer staples, KMB. Okay, these are just grinding. These are consumer staples. They're not going to be tech growth stocks types of moves, though. Kinder Morgan looking pretty good here. Another one, energy-wise, Constellation Energy that Tony brought to our attention. That's having a good day. We bought this on the 11th. Chevron, we've been in this since January. Chevron continues to look good. Chevron's at the highs. I might actually reduce my exposure here. Feels like it's starting to base. Let me look at the 60-minute because we just jumped back above the 20 MA. But you see this? People are starting to get nervous about this high. Should I take it off? I'm up a little bit. Let me see if I can get out at a little bit higher price. Create a closing order. It's offered at 210. Let me see if I can get out at 225 limit. And the funny thing, it'll probably be higher next week. That's okay. I can always get back in. 225 limit. All right, so I'll see if I can get out Chevron. Looks like it wants to go up again. I'm second guessing myself. Should I just leave this alone? Probably looking at this too closely. This won't be the first time it's moved above the 20 MA, and you saw a little bit of a hesitation candle. These are all pretty straightforward. See these hesitation candles? We push higher, we try to turn higher. Buyers, sellers at the high of the day. Sellers right there at 174.92. Okay, 182. That one resulted in a pullback to the 20 MA, but then promptly resumed. 3 days later, it was back above this level. 186, a little hesitation there, pulls back. I don't know, maybe I should just leave this alone. I have June. I have the June 320, 330. No, that's not it. That's Constellation. Dummy. I have the 185, 190. 185, 190. Constellation's looking really good. Constellation, hopefully this one continues to maintain this bid. The volume yesterday and today looks good. Let me look at the daily again. Daily volume. Okay, it's starting to overtake more green bars than red bars over the last 6 trading days. 4 of these were bullish days, 2 were bearish. Price action following through. Take out the 21-day. RSI showing strength of trend. That's the other thing I want to look at. Let me see Chevron. RSI's muscle. Okay, so that's getting a little bit. Yeah, you know what? I'm going to go ahead and take this off. I'll leave it at 225. 225. Probably I'll get filled 225 if we get any kind of push towards the end of the day. Rig looks good. Keurig Dr. Pepper we talked about. SPHD we talked about. Walmart we talked about. Walmart. These are swings into next week. Walmart. Okay. Silver short. ZSL. No follow through. I'll leave this alone. This is not a big position. Silver SLV. Below the 50-day. SLV. Trying to get back above the 50-day. I'm currently up on this silver short, so I'll just leave this alone. HSAI. HSAI trying to turn back up. Okay, I've got a bounce. This is one from earlier in the week, Monday or Tuesday. I think Mr. Turchini mentioned this one. It's a Chinese stock looking for this to get back above 28, maybe next week. So I have options on that. Boeing put credit. Valero. What's Valero doing? Valero. VLO. Valero. Okay, Valero trying to. Okay, we broke out. Okay, so with Valero, obviously what we have. Valero, we had a breakout this week. Last week, sorry. And we followed through this week. So I'm looking for this to break above this level next week. RSI needs to turn up. MACD still bullish. Stochastics embedded. Stochastics is embedded here, okay? So this could go sideways. Volume needs to be a little better. Valero looks okay. I have, what do I have, Valero? Valero, I have March 220, 225. I don't know. If we get a pullback next week, that's going to mess me up. No, that's Boeing. All right, Boeing. Valero. I have June. Okay, 220. And energy's fine. 220, 230. 220, 230. It's a little bit out of the money. RSI is rising, though. Okay, so I'll leave that alone. Okay, GE, General of Electric. Okay, the General of Electric. Aerospace. GE. Let's see what that looks like. GE. Okay, I got a pop this morning. Pull back in, so it's still consolidating below highs. GE. Have June calls. Okay. 330, 340. BITX, Bitcoin, still at the high. SPY, I told you about the 650, 640 puts. Okay. What else? Kimberly Clark, KMB. More of these consumer staple stocks doing well. Kimberly Clark. Okay, Campbell's Soup, another one. These are all from the watch list. Campbell's Soup grinding higher. What's ONDS doing? ONDS. Okay, looking for a bounce. The critical metal stocks, those took a back seat. They haven't been doing much of anything. Okay. Yeah, so S&P, looks like S&P drifted off there. Okay, Microsoft pulling back, S&P. Okay, so the way this is closing, not at the highs. I don't know. All I can say is that what I'm doing is reducing my risk. But it would have been lovely to see a close near the 50-day. I guess that would have been a little bit ambiguous. Either we could have been, we're right in the middle of price action. So right now we don't know what's going to happen. But All the research I'm doing suggests that we could lose this level since we're below 6,900 now. We're off on Monday. Much needed rest. I put in a lot of work to bring you ideas that can make you money and also protect you when I see things starting to look a little iffy. We start to reduce our risk. Okay, here's the industrials. Okay, industrials, a spinning top. Would have rathered seeing a hammer or a hanging man and this push back up into this price action a little more. So the industrials, not that convincing. Junk bonds. Okay, so this is what I was concerned about this morning. Junk bonds look really good. Now they don't. Okay, so they took profits. They took profits, and the traders that would normally stay in this if they thought the markets had more upside, this would be a bullish candle. And in fact, my thesis is if they were really bullish, we'd be above 97.68. That's not the case. Another reason to be cautious. Let's look at XII. This is what institutions usually have in their core portfolio. We got 2 red sticks. Warning, Will Robinson. Warning. Okay. Yeah, you got to have some puts. You know what I wanted to do? I was hoping for a bounce so I could do like a put fly. All right, that's okay. I got puts. I just want to take some more things off. You know what? I should take a few more things off, right? Constellation is fine. My concern is that a lot of stocks are going to pull back with the market. And yet I want to swing some of these. The problem is I have a lot of options. Even the ones that expire out in June, April, May, June, those could be affected if we get if we lose the low this week. I know if I don't take profits, I'm going to wind up. I'm going to go ahead and do that. I'm going to take some Constellation off here. I'm going to just reduce my size. Constellation. It's up a lot. See if I can get a fill. Chevron. Okay, so I have some sells there. Chevron. So all I'm going to do is reduce my risk. Instead of having 10 calls, I'm going to get down to 5. Constellation is probably going to be just fine. Tony asked me to let him know if this dips at all next week. If the markets pull back, it's very possible this pulls back in too. But I certainly want to keep this. I certainly want to keep this for some of this for more follow through. RSI is still rising. Okay.
DOAS.
Chevron. June. I just have a feeling we're gonna pull back on Tuesday. So if we do move higher, I'll just do it on smaller positions. Still make a profit, but reduce exposure just in case this continues. SPY, beat that to death. SPY. 650, 640. put spreads. That's all I have for now. Okay, so we're definitely below the 10 EMA. It's possible for us to sell more into the close or into the last hour of the trading day. I mean, we could bounce too, but this is an early signal. We've spent the last 8 weeks. Looks very much like distribution. We're above the 10 EMA, and then we start to go sideways. What comes next? Well, either we get back above the 10 EMA or we drop a bit more, similar to what we saw at TRBCX. So I know you're getting bored with me talking about these things, but these are all saying the same thing. RGAFX. Okay, VGT. Okay. SMH. SMH is hanging in there. Software, IGV. Software, Doji. Needs the base down here near this low. This low back here last year in 2025. IWM, doing well. IWM, though it is fading a bit. Qs, starting phase 4, markdown. New York FANG. Yep. This does not look good. NVIDIA. NVIDIA is going to be the big one. We got a couple of weeks, right? NVIDIA earnings. Yeah. NVIDIA for the AI trade. A lot of people are assuming that the AI trade is slowing. We're seeing a lot of signs of that, so they're reducing their exposure. Three o'clock. Okay. 3 bells, all is well. What was that? Canceled orders. Okay.
LUMN.
Okay, S&P. Right back down to 68.40. All right, a little bounce now. Watch your MACD. Okay. I've done pretty much all I can do at this point. What I wanted to do anyway. All right, let me look at Tesla one more time. Tesla. Maybe I'll trim Tesla. TSLA, Tesla. Tesla, 60-minute. Having a tough time. No follow through, Tesla.
ANPA may res in 10 seconds. UMN. IRON may res in 10 seconds.
All right, so I just reduced my size on Tesla. Everything else looks okay, right? Yeah, everything else is fine. Walmart. All right, I'm going to take a 2-minute break. I'll be right back. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday the 13th. We'll be off on Monday for Washington's birthday, so be aware of it. Sunday video will be out on Monday. As usual, I'll take a day off. I won't do anything. I won't look at my computers. I won't look at my phone, social media, anything. I'm just going to chill on Saturday. All right, so let me take a 2-minute break. I'll be right back.
Ask later activity in the market, we might literally be sitting here having a discussion about Goldilocks.
Right.
Jobs report comes in better than expected.
Yeah.
Economic growth is going to be probably higher than people originally thought it would be, and then you get a cooler than expected inflation
Right.
read today. That's why people have been all bulled up. I mean,
Right.
all of those things, and then you pile on earnings, which have been better than expectations. That's why they think the environment looks good.
Right.
It's just the turbulence and the violent nature of some of these sell-offs in all of those sectors that we ticked off on the wall have made people nervous.
That's right. It made people nervous under the surface, but if you actually look at the benchmark itself, whether it's the S&P, whether it's the NASDAQ, maybe it's stalled out or maybe it's up ever so slightly. I do agree, Scott. I think I'd call this the year of the U.S. consumer. Now, the labor market, as we talked about, I think last time, does appear to be picking up. And then inflation, I do think, is easing. You saw energy prices decline quite a bit. You did see services inflation is at the lowest level since May of 2021. But I actually would add AI back into this equation because the Goldilocks of AI for a lot of companies is companies who are adopting AI are seeing a meaningful uptick in sales per employee. So, for example, for the S&P 500 companies, sales per employee is up 50% since 2021. And some of it has to do with a rebound in the economy, but I think some of it increasingly has to do with the fact that companies can do more with less, or at least the same headcount. So that too, Scott, goes to your point of solid earnings. And that's why not only is this a solid earnings season, but the margins of companies continue to expand. So yes, there's some disruption, a lot of potential disruptions, but there's a lot of positives from the productivity of AI.
I feel those are great points, but I feel like we're having a hard time discerning between the two. The adopted versus the disrupted. The companies that are going to benefit, which we thought this was now going to be the next leg of that trade, where all of a sudden we've switched to the disrupted really quickly.
Yeah. Look, at Partners Group, we thought about it in 3 different ways. There's 3 categories of disruption of artificial intelligence. The first one, if you are incumbent with no moat or limited moat, meaning you don't have any proprietary data, you don't have any sort of specific domain expertise, you are likely to be disrupted by agentic AI. You know, the second category are companies that maybe are still in the software, horizontal software category. Maybe they are starting infuse agentic AI. If you're in that category, that's probably a buying opportunity. And the third one, you know, there are a lot of AI native, AI powered companies that came up in the last 5 or 10 years, along with OpenAI. So those are your true winners. The other way I would segment this, application versus, you know, enterprise software or infrastructure software. So I agree, Scott, that right now everything is being painted with the same brush, but I wouldn't just step in and buy IGV, for example. I would be much more selective
We
than that.
just showed some of the names on the screen that are getting a bump, as I said in the open today. We talked to several investors on halftime today as part of the committee who are buying all of these areas that are being down. Stay with me for a minute. One big question today clearly is whether today's CPI print frees up the Fed to cut more than the market had been pricing in. Steve Leisman joins us more on that. I think that's kind of the way you framed it as I heard you talk about it, as the data came in and you had a chance to look at it and assess what it all meant. And I think you said it frees up the Fed, if I remember correctly.
I think that's the way to think about it, Scott. The market is definitely thinking these tame inflation numbers will allow the Fed to cut earlier and maybe more often, but economists, they caution not ringing the all clear bell yet on the tariff and price hikes. The June cut, you can see there, is priced in for a while, so don't worry about that. That's the first one that's been there. It's the September one. The probability is growing there for a second cut in September. That was in December, and now we got 50-50, Scott, on December, so that's possibly 3 cuts there. We'll call it 2.5 priced in, getting the funds rate down to the 3.25 range. The trouble for the Fed is that it follows the PCE inflation measure. You got to be careful here because today's inflation number has some forecasters actually increasing their estimate for that number. That would keep the core metric over 3% year over year. That could stay the Fed's hand. Tariffs also continue to enter the debate. Take a look. Core goods were a big goose egg, and that's a big number. That's great, but that was dragged down by that used car number. Things like appliances and tools subject to tariff, they were up, and that's a sign. Perhaps these were 1 year. Core goods says, Goldman says, core goods excluding used car increases by the fastest sequential pace since early 23, possibly reflecting start of the year price increase and upward pressure from tariffs. So if January sees those price increases and that's it, that would clear the way for further cuts this year, especially, Scott, if that housing data continues to improve as it did in January. It doesn't matter to the Fed how we get 2% as long as it gets there.
Kind of wish we didn't hear from Beth Hammack already this week before we got the data, as she was like, we're going to be on hold for a while. I think we're at neutral. To which I asked Rich Clarida, who was with me the other day, Steve, and he said, we can go to 3%. I still think we're 75 basis points above neutral. It just shows you the tremendous disagreement that still exists among either those in the room with a vote and those who'd been there before and are watching it from the periphery.
I think that's right, but I also think the conversation you were just having with Anastasia there about the impact of AI is going to be extremely consequential. And one way I think about this is everything about AI happens faster than you think it's going to happen or than you thought it was going to happen. And it may be that the employment effect of AI is going to be more consequential more quickly than we thought. That is another thing that could give the Fed reason to crank things up. But Scott, if I could just push back a little bit, the parameters of the debate are not that extreme in the sense that Hammack is saying let's hang out at 362. Clarida is saying we can go to 3%. 60 basis points on the Fed, it would be helpful, but I don't think it's consequential to the outcome with all of the other things that you're looking at out there, like earnings and strong GDP growth.
No, that's fair. It just is, if nothing else, it's maybe even more than a nod. It's a step forward to showing that you're not blind to what's happening and risk getting behind the curve too much either. So we'll watch it all play out. Right. Steve, thanks. Have a good weekend.
Yeah, you too.
Steve Leisman. Anastasia, real quick. I mean, when I ticked down the Goldilocks environment and I mentioned earnings, economy, and this, that, and the other, I didn't even mention rate cuts probabilities because I wanted to wait till we got to this segment, heard from Steve, and then bring it back to you. I mean, that's on the table also now.
Right. It is, and it would be helpful to the markets, especially the private markets, for example, especially pockets of public markets that are interest rate sensitive. Look, I want to agree with Steve that I think the adoption and the changes of AI are impacting the labor market potentially faster than we currently estimate. Look, the adoption rate today is about 55%. If you compare that to where we were, let's say 3 years in with personal computer and the internet, we were at 20%. So this is moving faster. And I will tell you, Scott, if I look at the category of employment, a quarter of U.S. employment is in a job that has a 90% automation potential. And if you look at the employment in 100% automation potential category, it has declined. In that 90% plus, it is flatlined. So we have the new incoming Fed Chair, Kevin Warsh, that actually does talk about the productivity gains of AI may be deflationary. So I do think rate cuts are on the table to hopefully cushion this transition and in the process support the markets.
All right, we'll see you soon. Good weekend to you as well. It's Anastasia Moroso joining us back here post 9. Now let's get more on what is the obvious biggest story in the market, the AI upset, whether all these fears are overblown or not. Deirdre Bosa following that course and joins us now. AD.
Hey, Scott, so whether it's justified really depends on where you sit and who you're talking to. Here in the Bay Area, Claude Code was like this game-changing experience for developers and beyond. Even I've been caught up in it and myself. AI is just simply doing things that I never thought possible. So out here, the reaction is, this is incredible, this changes everything. However, on Wall Street, feels more defensive. The pushback is, these are systems of record, enterprise software is deeply embedded. That's true, but many in AI would counter, and this does track with what I'm seeing, we're only at the beginning of this shift. You're not ripping out Salesforce or Workday overnight, but you can now at least see a future where that is plausible. These tools are only getting better, and now everyone here, they were talking about Claude Code. That's still the case. You're also hearing a lot more about Codex, which is OpenAI's coding tool. Now, the best way that I've heard this put was from Ali Ghodsi, the CEO of Databricks, who is seeing this happen in real time. He told me that the era of lazy software investing is over. Moats are shrinking, and the market is telling you that it's not going to pay a premium for companies that can prove they're more than just a UI on top of the data.
All right.
Good stuff, D. Thanks so much. Deirdre Bosa, our next guest, says this selling has in fact gotten way overdone. Dan Ives is head of tech research for Wedbush with me here once again on set. It's nice to see you. How do you know that?
Because all we're doing during the week, on the weekends, is talking to buyers of the software, private companies, understanding what's happening within these sales cycles. Because that's why, like, when I'm talking about software being disintegrated, it's the most disconnected trade that I've ever seen in my career on Wall Street. It's because when I'm talking to the actual buyers of the software, they're saying, there's no way it would take
S&P pulling back a bit.
for any of these tools to actually come in just on a bake-off.
Yeah, so there's no bid in the market at the moment. We're at a doji on the daily. In the middle of price action, VWAP is just overhead. No saving this one. The market's right. Looks like Bitcoin's starting to taper. We didn't get any follow through there.
To have a dramatic impact on a number of sectors. Microsoft can't get out of its own way. That stock's in a bear market. There's no threat to Office, for example. We don't have to wait years for that. These tools are already being disruptive.
But you know, part of it is like if I think about what's happening within enterprises, they are so entrenched within Microsoft, within Oracle, within Salesforce.com, hundreds of thousands of customers. The data that's actually you can't just
S&P transitioning lower. Nvidia's lower. Microsoft dipping off the high. All right, so it looks like people taking profits into the long weekend. We could very well stay here. We could stay above this line, 6,800. Okay, well, I lost the 6,800. Could get ugly. So if you think that's possible, I wouldn't. If I'm going to buy puts at this point, they're pretty expensive. VIX pulled back though. VIX pulled back. So bounced. VIX is bouncing. Okay, you could also trade if you want. You could also trade SPXS. Okay, that's only $35. SPXS. The only issue with these types of ETFs is that they only last, the rallies only last like a week or two at the most. Very often they last for 3 or 4 days before retracing. This is a wasting asset. Same thing with SQQQ. You can see that the last time back in November, this rallied for what, 3 weeks and then retraced. A week, retraced, a couple of days, retraced, gapped up 1 day, retraced, up 3 days, retraced. Buying it right here doesn't make any sense, really. So SPY put flies, maybe? Yeah, SPY put flies, like, let's say you buy the 650 SPY. You sell 2 of the 625s, and you buy a 600. That creates a butterfly. You're long on both sides, and you have 2 short in the middle. With the idea, if we start heading towards 650, that would be a cheaper way to play. What do those go for anyway? 650. Let me see what that looks like. 650. These butterflies haven't worked that well lately. I don't know if you guys noticed or not. Let me just look at what this. Let's see. Monitor, trade, SPY.
We'll see. Dan, thanks. Appreciate it.
SPY for
With us now, let's bring in 314's Warren Pies for his reaction.
SPY for what? Russell usually takes what, 6 weeks out, something like that. 6 weeks. April 17th. That'd be. At 650 is $9.59. 650. So for $1,000, there's a lot of open interest there at 650. Money Magic, did you say 650 or 600 had a lot? I see a lot of open interest at 600 as well. I think you said 650, right? Did you say 650? If you're listening. Oh yeah, no doubt. Yeah, no doubt.
It just felt like we were in such a good place. I mean, how could it not be a good market environment if the equal weight S&P has been hitting record highs often, and the Dow is above 50K, and people are all excited.
Yeah, like XLP.
Before we got all excited
Since January.
One sector day by day of disruption.
Yeah, I mean, I think so. The problem with this
XLU this week. Yeah, Rob. The idea that you could rotate intersector. Yes, that too, right? XLP has been on its high horse. XLU just started this week. XLU gets started this week. So utilities are starting to catch a bid. All right, those broke higher this week. Okay, thank you, Money. Oh, you were looking at 600 for today? Was it? What's it for today? Money? Oh, yeah, okay. 600 for the Qs. That's right. Okay, thank you. That's what I thought. Qs. You were looking at the Qs because that was seeing the most destruction. Yeah. Thanks, Money. Appreciate it.
When you know who, NVIDIA reports, and maybe that saves the day in some respects for the mega caps. Warren, we'll see you soon. I got to run. Thanks. Good weekend to you. We're just getting started. Still ahead. Cryptos.
Okay, so XLP, XLU, less so with XLV, but that's starting to bounce now. XLV is another healthcare is another defensive sector. Okay, XLV. All right, so all defensive. Yeah, utilities really made a move today, or this week, I should say. Wednesday, Thursday, Friday, XLU, utilities, and real estate, XLRE. That made a nice move, XLRE. XLB continues to be bid. That's trending. Okay, consumer staples, obviously. Healthcare. XLE Energy still holding a bid. XLI did pull back a little bit yesterday, but bounced XLI. So that's Caterpillar and us and such. So yeah, there's still a lot of money out there in certain sectors. S&P pulling back. S&P pulling back. Okay. Robinhood. Okay, we continue lower. Okay, hedge flows into the close. All right, so dropped off.
All right, we're back. What a wild week it's been for stocks with a few major swings, a whole lot of volatility. So what does that mean for the markets?
Haven't done much today except reduce risk. I'm looking to do something more with Bitcoin, IBIT. Excuse me, BITX, 2 times Bitcoin. I'm looking to do something more with that.
We're barely down more than 1% on the S&P. It feels like we've just been through it.
Well, there are some winners this week and definitely some losers. And you've been talking about it for the entire show in terms of technology really being very volatile. But then as we've gone
we continue to drift lower. So if people aren't paying attention, the markets are drifting lower. So it's going to look a lot uglier on the daily over here on the right. Still a doji. Still a doji S&P.
Why we have seen software really underperform. I can find a few opportunities. You know, I was buying Synopsys. On the flip side, the banks, they're not in trouble from AI. They're embracing AI. Do you know that the big 6 banks are going to spend $41 billion this year on technology alone? Of course they are involved in terms of AI and how it's going to change the overall business. And
what does PNC look like? That was at the highs. That pulled back from the highs. PNC Bank, Bank of America, Citigroup, Morgan Stanley. All of these pulled back this week. Wells Fargo, Goldman Sachs, holding up the best.
I mean, the trucking stocks were upset not on worries about, not having enough freight to carry around. It was
Goldman Sachs holding up the best for now. Yeah, MSTR. Wish this thing would get going. MSTR. Strategy. Okay, here's Goldman Sachs. It's just below the 50-day. MicroStrategy. That's looking pretty good. This looks like it wants to go. MSTX. I would, if this starts moving next week, MSTX, I'll probably add a couple of thousand shares here. MSTX. Okay, if I take, let's see. Yeah.
That's the reality of your question. Here's a stock that's down $150, but we look at that as a buying opportunity. I think you hit the nail on the head with Dan a second ago.
Yeah, Paolo.
There are definitely going to be haves and have-nots in software. This is the first time we're really seeing the AI tested at all. But I believe Microsoft, IBM, the 2 of the names.
MSTR gets moving.
into a long-term position, not looking at it as a short-term trade.
Steph, I mean, as I said, you sold it at 511. The stock is obviously, that was a good time, clearly. But what about this buy now from Kev? How would you assess that?
I understand exactly what Kevin is doing. I just am not comfortable with the valuation of this company. And at the same time, free cash flow is stalling out. So the free cash flow is going to go from 71 billion last year to 68 billion this year. That's not a big deal.
Apple dropping off here. Ooh, Apple looks totally ugly. Oh man, Apple. Yikes.
In fact, the last 10 years, we've seen free cash flow go up meaningfully at this company. And I think that's the big problem with the big technology companies. It's all about, yeah, you're raising CapEx to fuel growth in the long term, but in the meantime, many companies are sacrificing free cash flow. Some are going to be negative, like Amazon, for example. So I totally know why that stock has gone down, and it deserves to be, because you're paying for these free cash flows in the future, and that's on the uncertainty. So to me,
S&P looks like it wants to accelerate down here.
low teens growth, just not that exciting. I'd much rather own, like I mentioned earlier, Synopsys, Palo Alto, Snowflake. Those are the three I own.
So that's a great point, Kev, that Steph makes. She didn't like the valuation at 511. She doesn't like it at 400. And at 23 times, who's to say, and this is the great debate about software, who's to say that 23 doesn't need to re-rate even further from here?
Yeah, I mean, it certainly could. What we saw out of Anthropic with co-work, especially with that law app, it's a game changer. There's going to be plenty of software companies that won't be in business. And the idea that Copilot is something that we're charging against a monthly subscription for OpenAI, against a monthly subscription for Anthropic, the consumer only has so much to spread around. They're not all going to survive. So you have to think and imagine that the Copilot idea of this being the monetization of AI may not work out that way, but they do control the ecosystem. I'm not leaving my Outlook or my Exchange. I may be a consumer that's getting Copilot for free and we're paying for it and it's embedded somewhere else. But I'm thinking that still, my long-term thesis is I want to be in some of these tech names. Microsoft is a name we want to own. Stephanie mentioned some good ones. We also own IBM. I think we both do. I have Apple and Meta. So we've got a small allocation to tech.
All right, guys, I got to run. Thank you. Have a good weekend. All right, still ahead. CNBC unveiling its highly anticipated NBA valuations list. We'll tell you about it after the break.
$6,900 lost. What's next? Duh. $68.99. Doc, you're funny as hell. Oh man, Apple, you're just done. Toast. Man, I am so glad I got out of those AAPU shares. To have it do this the next day is just crazy. Got out on Wednesday? Damn. All right, I believe, right? I better make sure I'm not missing something here. Yeah, I'm out of Apple. Okay, good. Good. Rig, Constellation, Kimberly Clark, Keurig Dr. Pepper, SPHD, Walmart. All these defensive stocks are doing well.
JBLU.
RIME.
RIM.
Boeing. Okay, what's Boeing doing? Boeing. Okay, Robinhood. Very nice bounce today. If you want to get out of that that put credit. 55.50. Bitcoin holding well with 26 minutes, 40 seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is late Friday the 13th. Looking forward to Monday off. This Sunday video will be out on Monday. I'll take Saturday off and just do nothing. Stash my phone. Stay off of social media. No computers. Man, you need that every once in a while. Yeah, so if you're looking at anything as far as protection, you don't have to buy puts, by the way. You can just keep buying XLP, consumer staple stocks, like Kinder Morgan, KMB. Okay, this just keeps going. Probably will keep going. Campbell's Soup, CPB, Campbell's Soup. What's Tyson Foods doing? Did that come back? Yeah, that pulled back a little bit, Tyson. What is Pilgrim's Pride? Was it PDD? No. Pilgrim's Pride. PPC. All right, bounce. What about Kroger? Kroger with the new CEO turning the corner. ConAgra turning the corner. A couple of weeks ago, following through. Caterpillar selling tons of gas-generated, liquid natural gas-generated generators to these data centers. One in Utah, they sold 700 of those things. They're like the size of a bus. So while I like Caterpillar up here, I'm not going to chase it. Same thing that happened with Walmart. I couldn't chase Walmart. Wound up giving us a little base so we could get back into it. That's looking good. Okay, we're almost up there again. Walmart. Let's see. Walmart. Okay. Got 135, 140. I had 130, 135. I rolled these to 135, 140 for April. I'll hold those to next week. One thing very interesting. I'm not saying this is going to happen, but a very interesting note on Walmart. Okay. For those of you who've been around a while, you know the story here. Okay, let's go to retail. Retail. Okay. Retail. Walmart. WMT. Okay, so during the great financial crisis, the markets peaked in October 9th, 2007. Everything pretty much went with it. Now, I'm not saying this is going to happen right now. So Walmart was trading right around $10 at the time. It dipped a whole dollar down to $9. But what happened thereafter was a 52% gain during the 2008 markdown. The markets pulled back, what was it, 50%, 60%, something like that. And Walmart increased in value. Okay, let's see the same period. Let's see a few other names, same period. Let's see, was Costco was in business then, right? Costco, TJ Maxx. I know the dollar stores, right? They did well, right? Dollar stores also pulled back. Dollar Tree moved from 11 down to 7, but then it ran up to 14. That's why you always have to wait for it to turn back up above the moving averages. That's when you get long. You don't get long when they're still below. Dollar Tree, Dollar General. What? Dollar General. Did something happen to Dollar General? DG? Why did it? Oh, it didn't have data back then? Dollar General's breaking out. Dollar General coming out of a squeeze.
Welcome back, CNBC out today with our 2026 official NBA valuations, and the league's financial rise continues. The average NBA franchise now valued at $5.52 billion. That's up 18% year over year. And for the very first time, three franchises, the Golden State Warriors, New York Knicks, and Los Angeles Lakers, are in the $10 billion club. Rounding out the top five, the LA Clippers and Chicago Bulls. Let's get straight to
Dollar General. Let's see, TJ Maxx. No, TJ Maxx, not TJ. TJ Maxx.
Great to see you. I do expect these numbers to keep climbing. I'm not sure if 18% every year, but
Costco.
double-digit growth in the years to come.
Costco breaking out.
I'm shocked when teams like the Lakers, the Celtics go for record sale prices.
Walmart.
What's really interesting is
Walmart.
I think some of these mid-sized to small market teams are really great. The Cleveland Cavaliers have been doing fantastic. You know, they've been bringing tech into their operations, flexible ticket prices, really doing well. The reigning champs, the Thunder, you know, they're going ahead. They're going to have a new arena in a couple of years. That's going to continue to boost their valuation. The Celtics are doing well.
20 minutes to go. A little bit more than 20 minutes to go.
And you're going to see the 76ers get a new arena in a couple of years. And they're going to follow on the footsteps of the Clippers, who moved into a new building last season. That's going to boost their value. So revenue growth, I expect to continue in the NBA, as I expect valuations will also continue to climb.
I'm looking at a couple things that I want to ask you about. I'm wondering how much on-court performance matters.
S&P.
I bring that up because the Brooklyn Nets have been going through a rough patch. They're 10th on the list, and their valuation change is only up 7% relative to mid to very high double-digit increases for many of the other clubs that are ahead of them. Is that because of revenues or ticket sales are down or anything like that? What would that be defined to?
Scott, they're definitely underperforming. This is a team that doesn't sell out to capacity night after night like some of these other teams do. Therefore, their revenue is lower than it could be. You know, they're sort of an afterthought, if you will, in the NBA right now. There's no reason why the Brooklyn Nets shouldn't be worth several $100 million more than they are. They're a diamond in the rough. They're just not being run very well right now.
Oh, boy. All right. Well, Joe Tsai, it's Mike Ozanian. Expect an email. Mike, we'll talk to you soon.
Thanks
so much. All right. Be well. For the full list, by the way, go to cnbc.com/sport. Now let's bring in venture capitalist and sports investor Rashawn Williams. He's Harbinger Sports Partners founder. It's good to see you again. Welcome back.
Hey, man, it's good to see you. I love Mike. He just goes right for it, man.
That's why he is who he is. He is the guru. 18% increase in valuations. Holy cow.
AFPA may resume in less than a
Yeah,
minute.
that's half the story. A lot of people get focused on valuation, but it's really about revenue growth. You literally see this media deal.
All right.
2.7 times, just like Mike has published and been talking about for a while.
Okay. We just continue to move lower here. S&P. Constellation Energy. Off the high. Chevron. ConocoPhillips. ExxonMobil. Phillips 66. Valero. Valaris. Rig. Okay. Rig looking really good here. Rig. Robinhood. Nice reversal on Robinhood today. Robinhood on the daily on the right. Robinhood. What's Apache doing? Apache. All right. Retracing back up to the highs. EOG Resources. Okay. All of these are working. Devon Energy. Devon. Duke Energy. Woo! Look at Duke. Duke is going here. Duke Energy. Constellation Energy we already talked about. Nice reversal. I'll keep that one until Friday. Until next week, Tuesday. American Electric Power also. Big move.
Bill Simmons of The Ringer, well-known pundit personality in the sports landscape, says you could invest in this, or you could set a pile of cash on fire. It's a tough call. Which just begs me to ask you, these so-called lesser leagues.
Constellation, American Electric Power, big pop today on the daily. Constellation Energy, by comparison, is like down here near under the 50-day. To see this rip to the upside in the next few weeks, that would be nice. S&P is still drifting lower. Nice trade, Mondo.
Or you can go and bet on the big horses in the race, NBA, NFL, MLB, and they are the Anthropics and the OpenAIs of sports. So it's just a risk-adjusted return you have to look at, and every industry and every stage has its own risk associated with the returns. So usually there's some validity there, but if you do make it, you get 100x on the upside.
Yeah, no doubt. We usually talk to you about venture capital and technology and the investments that you have. I can tell by the way you answered the many questions I asked you, you think this pullback in software is justified? It sounds like you might.
Yeah, I've been investing in technology companies for a long time, and in my last portfolio, I'm still a holder of Anthropic, and I still own SpaceX. And I've just been watching this movie over and over and over, right? And you can literally do with these AI companies what you had to pay software subscriptions and a whole team of people for decades. And you can do it now for $100 a month. So I would be very worried, and I've been watching you guys every day talking about the software sell-off. This actually bodes really well for sports because it's that alternative, kind of hedge against software companies. But I would be really worried about public SaaS companies that have been reliant on being that third party that corporations have needed to integrate and continue to grow their operations because AI is just eating their lunch right now.
I appreciate your thoughts on everything we talked about. We'll see you soon. Rashawn, thanks. All right, Rashawn Williams. All right, next, we track the biggest movers into the close. Christina joins us now with that. Hi there.
Hi, Scott. Well, an electric vehicle maker surging after projecting a jump in deliveries this year.
At some point, we'll probably reverse back up.
Guidance and a biotech firm bouncing back after just a rough week. Those movers
We continue to fade lower. Check the defensive names. We've mentioned several today. All of the defensive names and the materials, XLB, some of the XLRE, the retail sector, our real estate sector, energy sector, industrials, consumer staples, healthcare even, and utilities, especially this week, all showing signs of buying. So getting all bared up, defensive. Those sectors continue to show strength. So if you have a few names in those groups, you should be fine. SPHD also, a lot of defensive names in SPHD. That's doing well. SPHD. Okay, at the highs. SPHD, SCHD has a few more. SPHD, SCHD, and that's flagging. Okay, so I'm expecting a base up here somewhere in the short term, weekly time frame. These defensive stocks just took off to the races. Money eventually rolls somewhere else. Okay, so we'll be looking for it. Let's see what TLT looks like. TLT. All right, TLT gapping up. TLT. 20-year. Gappy week. The the 10-year yield. Let's see where we are in the 10-year yield. TNX. Okay, TNX.
They have a regulated environment. They're not trying to raise rates on people, but as demand happens and the rate is asked to do more, like you said, that investment has to come somewhere. And I think utilities are
Good for IWM. Okay, so with the 10-year moving lower, you would expect IWM to perform. It's been at highs. It did take a break this week. We hit new highs on Tuesday, Wednesday. Reversed yesterday. A little bounce today. Net. Most of the consumer staple stocks have helped remediate some of these painful tech stocks that still won't get a move on. 5 months later, I'm still waiting for Oracle to reverse, showing signs, but these defensive stocks are helping out. So balanced approach. You know, you have some tech. We saw the defensives rotate in. So we got exposure there. We didn't get caught flat-footed. And that's a good thing. That's always a good thing. Let's see. Let's see what the ratio looks like right now. Okay, S&P coming off the low. Okay, this is full on turned now. You should have hedges. I have SPY 650, 640 put verticals. I'll add to it next week when we get an update from Money Magic. Maybe move it up or down.
Executives blame the results on the impact of tariffs due to reduced advertising spend from larger retailers. Interesting downgrades also from several firms and having puts worse days.
Yeah, puts are tough, man. Puts are tough. All you need just a slight bounce, and those puts just evaporate.
After it did take a hit on Tuesday when the company said the FDA refused to review experimental flu shot. Shares up almost 6% right now, Scott.
All right. I'd say see you, but you're in the market zone again. Look at that.
I'm back.
AIM.
You
Can't
are.
say
I've seen a
bye.
little bit. Can't stay away. Christina Partsinevelos. Up next, a chips checkup. Who might be doing that one?
Yeah, you get puts to flinch. With the VIX up at the highs, Mondo, it's tough. It's tough, I was tempted to join you. I was tempted, but yeah, exactly. All right, let's take a look at IREN, IREN. I want to double up on this one at some point. IRE. Okay. Bitcoin, also BITX, coin, MSTR, and IBIT. Yeah, IREN looks good. Coming off the low. Yeah, it's unfortunately we got to be patient this time of year, or in this zone, I should say, because the markets are, we've got so many mixed signals. Most of them are telling us to be cautious, to take risk off, and to assume downside. I mean, we've been in distribution mode for several months now on some of these indexes, and New York Fang looks absolutely terrible. But the funny thing is, New York Fang looks terrible now, but it could very well turn in the short term. Nvidia could be the catalyst. I'm not putting too much hope into it, but I mean that could happen. So, but the overall trend is just not looking so good. Not looking good at all. This is exactly what I'm thinking. Okay. Textbook sign of distribution. Gamma flip to negative. The tick guy usually tells us what it is. Market on close. I don't find it very helpful. Market on close numbers. Let's see what he's got to say here. Market on close numbers. Here we go.
EPOW. MLEC.
Let's see. CG. Yeah. It's hard to read that stuff. Hard to read.
Standing by with a check on the chips. He tried to say. Mike Santoli, you first.
Yeah, the day's finished. Day's finished at this point. Doesn't really tell you a whole lot.
Majority of stocks are still up again. A lot of the bulls will take heart in the fact that we still have this kind of broadening support for the market, but pretty tough for the index to get out of the way of the decline in some of the big names. You did see some bounces in the most beaten up areas of the market. Obviously, software is trying to hold those lows. Bitcoin has a little bit of a lift today. You're starting to see like the real estate brokers and the truckers get back some of those crazy manic sell-offs we got this week. But in general, I still think it's wait and see to find out if in fact we've had a proper reset in this market. Yields really compressed right now. That's helping rate sensitive stuff, but not necessarily.
I can't see how NVIDIA would save the day. I just don't see it. I mean, in the past, a year ago, 18 months ago, when NVIDIA was kicking ass and taking names, what was it, like 600% earnings growth? Yeah. Good to know. Money, always good to know. Have a great weekend, folks. You too, Paolo. Take care. Okay, got a nice little bounce there. Not much going on. S&P. Okay, so they're going to keep us. They're going to keep us at bay. They'll keep us at bay into next week. Supply resistance. We stayed above 6,800 and below 6,900. So there you go.
All right, Kay Rooney, thank you very much for that. All right, Christina, tell us more about these chips.
Well, I have three chip stocks really moving in opposite directions today. We got to start with Applied Materials, big winner, up roughly 8% after guiding well above expectations. The company is calling for more than 20% growth in its chip equipment business just this year, powered, of course, by the AI build-out, specifically high bandwidth memory, advanced packaging, and leading-edge foundry chips. Meanwhile, let's pivot to NVIDIA. NVIDIA shares are slightly lower, down 2%, and AMD, you can see, higher, up but barely. Both moving on comments.
Okay, what do we got going here? What do we got? What do we got here? We've got 2 minutes. 2 minutes. 2 minutes, 40 seconds. 2 minutes, 40 seconds to go.
Check out CNBC.com. We just wrote a story about it, but the shift may be more about Arista than NVIDIA, as NVIDIA increasingly relies on its own networking technology. It simply may not need Arista.
All right, Christina, thank you. We'll see you next week. Christina Partsinevelos. All right, Megan, what's your big takeaway from this week?
Risk off, Christina.
I think the takeaway is that we are in a period of market churn, if you will. I don't think that what we're seeing in the market is overly concerning. The market's only about 2% off the highs, but obviously a significant rotation is at play. I find it a little bit surprising, if you will, that the market has swung very dramatically from
Boeing grinding higher. It does trade on the floor in the New York Stock Exchange, so don't be surprised to see some volatility there, like we did on Wednesday. Actually, Thursday was pretty volatile too on Boeing. Let's see. I have some credit spreads on Boeing. Okay, Robinhood and Boeing. These are the only two right now. Initiated in February, Boeing and Robinhood. Okay, those two.
I think so, and I think it's a real opportunity for active management. For years, we've been bemoaning the underperformance of active managers because the biggest stocks have just taken away the market. And what we're seeing now is an opportunity to roll up your sleeves and see which
Okay, 1 minute to go. 1 minute.
are standing on the sidelines and will be disrupted. And for now, it's creating some really interesting valuation opportunities, especially in tech, especially in software.
Okay, you can see those hedge flows coming up as the dealers are closing positions now. Dealers closing these positions.
I think you have to have a long investment horizon. So I'm not expecting this to bounce back in the immediate.
I will say the S&P has been primed for selling premium above and below current price action. You know, we get to the highs, we start to reverse. You sell the calls. You get to the lows, we reverse. You sell the puts. 0 day. Can pick up some nice premium doing that too. Anyway, we're about to close. We got 10 seconds to go. 10 seconds. Have a great weekend, everyone. Monday off.
Even though the data this week was pretty good.
Yeah, I mean, people still think that growth is going to be good.
That's it. We're closed. All right, folks, listen. If you got beat up a little bit this week, chin up. Things will be fine. If you added some hedges, you reduced your exposure finally into today, you took some profits off, things will be fine. We'll be back on Tuesday. So just keep your chin up. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday the 13th, 4 p.m. straight up, the closing bell. Have a good one. We'll see you on Monday.